an earnings season dominated by headlines around heavy capex. Well, most Middle East markets closed higher on Tuesday, tracking gains across global markets. The Tariffs extending gains for a sixth straight session. Dubai's index was the only market that closed lower. It's currently down about 10% since the Iran war began. Let's get a regional equity pulse check with Marwan Haddad. He is Managing Director and Lead Portfolio Manager for MENA Equities at Azimuth Group. He joins me live from Dubai. Marwan, it's great to have you back on the program. Been a while. Good to see you. First and foremost, just on the conflict, we often use oil as a gauge, a sentiment barometer of sorts on the direction of travel and the path of escalation. What is the oil price currently telling you about how markets are pricing the direction of this conflict?
Well, good to be back, Dan. You're absolutely right. So oil should be, the main indicators we all follow to try to understand what the market is pricing. I think that's the main, I would say, benefit. So if you look at 85 or above 85, definitely they are pricing disruption, but not absolute disruption. And I would be very careful here, Dan, because we should probably take more insights from where prices actually are, where the market is versus what we hear on the news headline. I would say because we know that everyone at this point in time is trying to adapt, trying to find a way, is trying to find another way, and probably another way, trying to sort things out. So I would say oil's telling us that there should be probably a longer time horizon until things get resolved, but definitely it's not telling us that this will escalate massively. So we can take that signal for now, at least.
Okay, so taking that signal, and it's been a while since we last spoke, so my high priority question for you is, where are you putting money to work for the rest of 2026, and how are you taking advantage of this equity and yield environment right now?
Well, I have to say, investors are a bit nervous. So, like when you speak to many of the investors we were speaking to earlier, probably in Jan, Feb, they're taking more time to make a decision. Nonetheless, I would say markets will wait for no one. Ironically, if you look at Saudi today, and I would like to take more of the total return because, our markets are very heavy on distribution and dividend. So it's around 10%. It's been a remarkable run this month for Saudi. And that's compared probably to, S&P 500 to 12%. So markets, I would say, more or less has overcome that initial shock. And I would say rightfully so, because, in March, April, probably up to May, we had a lot of uncertainty. But since then, we had the initial strikes, then we had a ceasefire, then we had an MOU, then we had probably breaking the MOU. Now we're talking about resuming the MOU. So, then let's say uncertainty is different. I would say companies, governments are adapting, even in Iran. So all of this is being priced into the markets as we speak. And we started to feel more investors are inclined to re-engage at this point in time. For us, I would say, Dan, these are probably the time where we move more to quality because you get really good bargains, companies that, are really hard to get an entry point into, given their resilience and their life by most investors. So probably that's what we did during the past 2 to 3 months.
Okay, so and what specifically? I know you're favoring big plays like Emaar, ADNOC Gas, ADNOC Logistics here in the UAE. What else do you like?
These like Middle East for us today, man, probably we're looking at it from too many angles. But one of the main ones, this conflict will lead to, I would say, some significant important changes of how many businesses and governments things are supposed to be. It's still, I think, an era or a time where most of the lifting will be done by the fiscal policies or the governments of this region. They need to do the heavy lifting at this stage. And where we see the direction we try to be positioned there. Saying that, energy, I think it's back at the forefront. We've always been around that theme, but we believe it's much stronger today. I mean, with UE leaving OPEC, with the world needing to replenish their whatever they lost during this conflict, I think that will be a key theme that we're following very closely over the coming at least 12 months, or even up to 2 to 3 years, I would say. Another one is infrastructure, and these are sectors we like, Dan, not for anything. I mean, like in this region, there's a lot of AI, I would say, kind of adoption, but we're not at the forefront. Not like when you have in South Korea or you have in Taiwan, where AI is leading actually this year's trade. So where we really find a very unique positioning is within the infrastructure and energy sectors, and this is where we mostly are allocating at this time.
What do you make of this recent intervention in the bond market? Do you think the Treasury Secretary's getting it right? And how much of this is going to feature when we see Chair Walsh speaking at Jackson Hole towards the end of the week?
I mean, like, definitely the Treasury issue is affecting us in the region. But I mean, we're seeing so many debates. But I'm not gonna speak about my fixed income team. But I would say more or less the local view is this whole yield, direction is fueled by this massive AI spending that is taking place. So the debate is this yield, is it because of the demand, because all these companies are spending and borrowing across the globe, actually. I mean, we're seeing that trend. Or is it like because of some energy or inflationary shock? So I think my opinion is, to be honest with you, is we're more towards the AI spending boom, and probably, and this is where markets that we like is the markets that mostly actually have the AI element, like the US, where you're gonna see this spending kind of translated into growth at a certain point in time. But whether his intervention is correct or not, probably we have to wait and see. But it's never good. I mean, like, rule of thumb is never good to try to take a market into a certain direction. You can fight it for a while, but probably you'll never be able to hold it forever.
Marwan, appreciate your analysis. We'll leave it there. Thanks so much for joining me this morning. Always good to see you, sir. Marwan Haddad there from Azimut Group, live with us out of the UAE. And some breaking news this morning. Abu Dhabi's TAQA saying its board has just resolved to delist the company and all of its shares from the Abu Dhabi Securities Exchange. The company announcing this morning that Abu Dhabi Power Corporation, or ADPC, has squeezed out all other shareholders and is now the sole shareholder in the company. We'll see how shares react when markets open in about an hour's time. Well, up next on the program, we are checking in with Paul Griffiths, the Dubai Airport's CEO, about the most recent slump in their first half passenger traffic numbers, insights on the recovery story when we come back. Stay tuned for that First on CNBC interview.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand can really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline, streaming on CNBC+.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. CNBC Sports, afternoons on Saturday and Sunday only on CNBC.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of the quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giamatteo, only on CNBC.
Welcome back. Well, higher fuel costs and continued geopolitical uncertainty keeping most global airlines cautious. But one company is bucking that trend. Our travel and transport reporter Monica Petrelli has more on United Airlines' latest move. Mon, what can you tell us?
Yeah, good morning, Dan. So in what United is calling its largest international network expansion ever, the company is saying it will now fly to 10 new cities as of next year. And this is really a continuation of United's efforts to stay on top of traveler interest to go to new, sort of off the beaten path places with fewer crowds. So last year, United launched flights to Mongolia and Greenland. Next year, it will be Slovenia, Luxembourg, and Okinawa, plus some smaller but well-known spots in Europe, places like Sicily or Valencia. Now, some of these flights will be on Airbus A321XLRs, which United also debuted yesterday. Now, these are single-aisle jets, which are more fuel efficient and, in the way that United has configured them at least, have more premium seats on board. And that's as leisure travelers and business travelers continue to pay more for those premium seats, which is why these types of routes are lucrative for United. But this, of course, still, though, on back of rising airfare costs. And CNBC spoke with CEO Scott Kirby about when he thinks that oil prices could start to come back down. Here's what he said.
I thought really since mid-March that the situation in the Gulf was unlikely to get resolved and that fuel will be higher for longer. And that has, in fact, been the case. I've been pleasantly surprised at all the workarounds that more oil has gotten out of the Gulf and gotten to markets than I thought would have gotten to markets. So I think we're also in a gradual world where we're going to continue to get more oil from other sources and other ways out of the Gulf. And so who knows for sure, but my base case would be that oil sort of gradually declines. It stays higher than it was, but that oil kind of gradually declines into 2027.
Well, Kirby also said that while he expects oil prices to come down heading into 2027, that doesn't mean that jet fuel prices will come down to pre-war levels, because if they did, we'd be looking at around $85 a barrel here in Asia Pacific, not $157, which is the current price. Now, the good news, Kirby said, at least for United, is he said he expects his airline to be able to pass all of those costs on to passengers. U.S. carriers have been able to raise airfares without seeing significant demand destruction, which is not the case in every part of the world. It's back to you, Dan.
Mon, thanks for the update. Moving on now, in Dubai International Airport is reporting a steady recovery in passenger traffic after a first half disrupted by war, airspace restrictions, and a direct Iranian attack. DXB welcomed 31.5 million passengers during the first 6 months of the year. That is down from just over 31% from the same period in 2025. It's now no longer the world's busiest airport either, trailing behind South Korea's Incheon, Heathrow in London, and Changi in Singapore. But the monthly numbers show demand improving as airline capacity returns. Dubai Airport says load factors are approaching last year's levels, suggesting passenger demand is returning as soon as seats become available. The airport now expecting stronger momentum through the second half as global airlines return, travel advisories ease up, and Dubai's business and tourism calendar rolls out. Very pleased to say Paul Griffiths joins me live now. He is the CEO of Dubai Airports. He's live with us from the airport this morning in Dubai. Paul, welcome into the program. And as we unpack these numbers, look, let's just start with the scale of what you've seen. Traffic down around 31%. Take us back. Just how bad did it get at its worst point?
Well, we started the year, Dan, with a record year, 8.7 million people in January, which is our busiest month on record. And I'm very pleased to say that even during the peak of the disruption covering the 2nd of March to 30th of April, we still moved 6 million people through DXB. And it looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back, and next year we hope that we'll get very close to that magic 100 million. I think we're going to end the year as the world's #1 airport, and I'm pretty confident that the growth that we're seeing, particularly over the last couple of months, which has been very dramatic, will continue for the remainder of the year as more airlines come back. Our two main host airlines, Emirates and Fly Dubai here, are in the high 90s of network recovery, and load factors are extremely strong. So we do have the confidence to be pretty confident in our overall projection that this year we'll end up something in the 70 million passenger number mark, which will put us again in a very strong position for the future.
And Paul, you mentioned the resilience and recovery story here. Your own numbers show the recovery month by month, in fact. 3.5 million in April, 4.5 million in May, 5 million by June. What would you say turned this around? And going back to your own forecast now, how soon before DXB is fully restored and fully back to pre-war levels?
Well, I think the thing is the recovery was undoubtedly, because even in the dark days when we were under pressure from military action, we never really closed for any length of time at all. We put a lot of effort to making sure that the security, safety and the customer service delivery on the ground was as professional as it always is here at DXB. And I think that's reflected in the confidence our customers have shown in our numbers, and you can see the growth. And I think over the summer period, it's been as busy as it always is here at DXB. And the recovery of the network is continues apace. We've got 56 airlines flying to DXB today, to 236 different cities in 100 countries. And every single week we get another few dots back on the map. And I'm confident by the last quarter of the year, the lot of the airlines that are missing at DXB will be fully recovered and operating a full schedule back to DXB.
And Paul, expand on that for me, because of course there are still some airlines out there that are saying, hang on, no thanks, it's too soon to fly back to Dubai. How many carriers have yet to come back, and what are those airlines actually telling you that they need before they can restore full frequencies?
Most of the airlines affected are those that are travelling from Europe and the US. And of course, in the northern summer period, it's a very busy traffic period. So they redirected a lot of capacity for the summer season to other destinations. So once the winter season kicks in at the end of October, that's when they'll redeploy those aircraft here. And we're starting to see some of the European carriers, Air France, for example, have recently restarted flights. And I don't think it'll be very long before all of the major carriers that we're used to seeing every day here at DXB will return with very strong demand from their customers. Because, DXB retains a huge amount of attraction for both direct customers and for transfer traffic, and we're not seeing any diminution of that demand over the last few months, and I'm sure that we'll be back to normal levels by the time Q4 is upon us.
Are you speaking with these airline bosses? Do you have a message for them this morning, to those CEOs who say, hey, we still don't want to fly to Dubai right now?
I have a message, and that's come and see for yourselves how confident we are about the future, and come and see the city in completely normal circumstances. Business, tourism, it's all happening here at DXB just as the way it always did. So I think the issue's been mostly around liability and insurance, but I'm sure foreign governments are looking at the situation and seeing the normalisation of the commercial recovery of the city. And I'm confident, therefore, airline bosses will be seeing the same and won't want to miss out on that growth and good yielding traffic to and from our great city by the time Q4 is upon us.
And Paul, you mentioned that you expect stronger momentum in the second half. That's already being reflected in some of the numbers that you've shared with us this morning. The other thing we're seeing right now is that a lot of travel advisories are also easing up in some key markets as well. Just on those travel advisories, is there anything that's giving you pause for thought right now? Or as we see these advisories also easing up, is there one that really matters most to you at the moment, and traffic through the airport?
I think the travel advisories from Europe are the ones that we're looking forward to seeing relax completely, because obviously if you have a negative travel advisory, then insurance difficulties for both customers and airlines are going to be the biggest single problem. And if you look at our major markets, I mean, for example, India, that's pretty much fully recovered. The UK, we're still missing the capacity from the UK-based carriers. We're hoping that's going to come back very soon. Travel advisories are being relaxed, and there's no reason really to continue to advise that the UAE is not a great place to come to either visit, to do business, or to travel through. As we always have been, we're a massive connecting hub for the world, and our position is completely unchanged. So we're looking forward to a more positive Q3 and Q4.
And Paul, through the course of the last 6 months, we've seen the whole aviation system under stress and under strain. We were speaking before about the impact of higher jet fuel costs, for example, and how airlines have also had to build resilience into their own operating and business models as a result of what has unfolded here. What's the biggest risk that you're watching out for now, the biggest concern on your radar or on your desk? And is there anything that's keeping you up at night at the moment?
I don't think anything's keeping me up at night, because I think the long-term projections for air travel globally remain universally positive. And as I think you've heard, you know, United launching new routes across the Atlantic, particularly to new destinations, I think gives confidence that the changes in aircraft technology are really as a new dawn for aviation. Smaller aircraft flying longer destinations, opening up new markets is very much the flavour of the month at the moment. And we're seeing that in the numbers and the number of destinations. And, you know, the fact that we're directly connected to 100 countries is obviously a milestone, but that will continue to grow. And let's not forget, we're investing very, very heavily in our new 260 million passenger airport. We've already put 10 million work hours into that project. 17,000 piles are already in the ground, and 45 million cubic meters of earth have been moved. So if you want a sign of confidence from Dubai, that is absolutely it. We remain as confident as ever in the future of global aviation, and the epicenter of it will continue to be here in Dubai.
Paul, we'll leave it there. Really appreciate the conversation this morning. Thanks again for stopping by. That's Paul Griffiths there, live with us from Dubai Airport. And before we go this morning, as you've probably already heard, the country queen Dolly Parton has left the party aged 80. Parton built one of entertainment's most durable business empires, spanning music publishing, film licensing, and her Dollywood theme park business. Jolene and I Will Always Love You were just some of the hits at the core of her catalogue, which of course struck a chord across America and its entire political spectrum. Forbes has estimated her fortune at roughly $650 million.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long.
End users are using our AI even more frequently.
Are you heading into a record Q4?
We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
It's becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented.
This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
Never miss a moment.
Cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices.
Non-technical people can create a website, can write code. The same thing will happen in financial services.
If you're diagnosed with melanoma today, and I'm diagnosed by the same doc, you and I will get a different chemical. It's totally individualized because we know today cancer is a disease of DNA.
SWATbot, streaming on CNBC Plus.
When Amanda Lacaze took over Lynas Rare Earths, the company was on the brink of collapse.
I put my hand up because the people in the business deserved someone to give it their very best shot.
12 years later, she's leaving behind the world's largest rare earths producer outside China. Can one company really challenge China's dominance?
I'm confident. We've got good people in Australia, we've got good people in Malaysia. Not only can we compete with anyone, we can win.
Find out more on Managing Asia.
A market shaping industries. We are watching the six little dragons, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates.
A lot of strong numbers this morning.
Listen wherever in the world you are. Download the CNBC app now.
Welcome to Europe Early Edition with me, Ritika Gupta. Let's get into your headlines. The countdown is on to Nvidia earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking exec as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northernmost neighbor escalates. Good morning and welcome to the show. Let's get into our top story. Nvidia is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date, but questions remain whether the company can still impress investors. Options traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the ChatGPT maker. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Dresser. Arjun joins us now with more on both of those stories. Arj, thanks for joining us. First of all, when it comes to NVIDIA, what are you watching out for, and what are investors needing to hear to be confident that the best of AI has not been priced in yet?
The problem with NVIDIA is the expectations are so high, and there's a huge amount of, or there's a huge view that actually a lot of this action in NVIDIA has been priced in already. So for NVIDIA, there's going to have to be a very, 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 very strong earnings call where management talks about Vera Rubin, the next generation architecture, and how that's going to continue to support growth as well. There's nerves in the market right now around the level of investment and capex going into this, and concerns that any slowdown could impact NVIDIA as well. Just to sort of break down both sides, there's favorable tailwinds for NVIDIA right now. When you think about hyperscalers capex spending, I think it's going to top somewhere north of $700 billion this year, around 90% growth from last year as well. There's a backlog of demand we heard through the earnings season from the hyperscalers in terms of demand for their cloud services, i.e. some of those AI services as well. There's shortages across the ecosystem, all the way from production at TSMC through to memory at the memory chip makers like Samsung, SK Hynix and Micron as well, which gives NVIDIA to some extent a very strong pricing environment because of the shortages as well. And then there's the competitive strength. There's no doubt NVIDIA remains market leader for the GPU category here as well. And with Vera Rubin coming out, that is very supportive. But the risks are very much there. We've heard a lot over the last couple of years about growth of custom silicon from the hyperscalers, Google's TPUs, for example, Amazon's own custom chips as well, as they look to try to diversify their reliance on NVIDIA. Customer concentration is still a big issue. Hyperscalers still account for a bulk of NVIDIA's revenue right now. So management, again, are going to have to talk about how that customer base is diversifying. And finally, the financing and sustainability concerns, that massive $500 billion financing package that NVIDIA announced with some of these other financial institutions as well. Is NVIDIA becoming like a central bank for the AI industry here? And I think that is a big concern at this point in time as well for investors.
We'll be getting more on that with our next guest. But I also wanted to ask you about the other story that we mentioned in the intro here about OpenAI. We've seen these string of senior execs leaving lately. Now we had the latest one, Chris Maloney. So yet another senior exec departure. What is this down to? How significant is it? And especially the timing is quite notable here, right before the IPO.
Yeah, it's not significant because these are not just sort of lower level execs. These are very high level execs. You talked about Denise Dresser recently, Chief Revenue Officer, Brad Lightcap, the Chief Operating Officer. It's not a good look, right, for OpenAI ahead of an IPO. You sort of often find ahead of these sort of big listings, certainly so close to these big listings, that these senior executives stick around through the listing and forward to take the company through to the IPO, which is a big moment as well. So that's certainly concerning. It's unclear why these executives are leaving exactly. You know, some are going to start their own things, but the timing, I think, is what looks very concerning, so close to a potential IPO, when really you want your management team to be kind of set, so that it signals confidence to the market and it signals that your company's on the right direction of travel.
Yeah, not a great sign there with all these senior execs leaving. Thanks so much, Arj. He's sticking with us. Now, while Treasury Secretary Scott Bessent came under fire for his plan to double bond buybacks last week, for now it appears his intervention is helping settle markets. Since the move was announced, the spread on the 30-year Treasury and their related swaps have narrowed to the smallest since February, indicating that investors are now more willing to hold government debt than derivative contracts. Let's get a quick check of your market over here in Europe. We're seeing Stoxx 50 futures moving higher, just moderately up 0.1%. This is as we have seen Brent prices come down. Last time I checked, about 2.5% or so. Let's see how the Asian market is currently trading. You see green across your screen there. The Nikkei 225 index up some 0.7%. It's really the chip makers and that decline in oil prices helping Asian stocks out today. You see the Kospi there up some 1.6%. Again, this is down to Samsung and SK Hynix, the biggest contributors here. Again, as we see chip makers lead the way higher, taking their cues from Wall Street ahead of those all-important Nvidia earnings. So let's take a look at how Wall Street gets set to open. We're seeing futures now into the red. This follows, though, what was a positive session, again, with chip makers leading that rebound in the run-up to those earnings from Nvidia. So that's what investors are really going to be watching today, as well as the July PCE data on the docket. Now, for more on all the market action, I'm pleased to say Joachim Clement, the managing director at Panmure Liberum, joins us now. So, Joachim, thanks so much for joining us. First of all, just your I guess your overlook on markets right now, what we're seeing within the bond market, that's been rattling the markets to an extent. And also, of course, investors are going to keep their eyes out on those Nvidia earnings today.
Yeah, on the bond market side, it is going to be very interesting to see what Kevin Warsh does in Jackson Hole later this week, if he has any concerns about the bond market. Because let's face it, while Scott Bessent is trying to intervene in the bond market in order to keep long-term bond yields down, the real kind of tip on the scale could be the Fed if it decides to kind of either verbally or even monetarily intervene in the market in order to keep bond yields at a lower level and keep them from rising to dangerous levels.
So what are you going to be watching out for on Friday when it's Kevin Warsh's big test at Jackson Hole? Do you think that there's going to be do you think that's something investors are going to be watching out for, particularly when it comes to the bond market?
Yeah, probably not in his main speech, but the rumors on the side of the conference and any interviews that central bankers will give in order to understand whether they have any concerns about rising long-term bond yields and whether that endangers the stability of financial markets and equity markets in particular.
And at what point do you think the bond market, the yields in terms of rising, at what market is that going to hit the equity market? Because so far it's been resilient and yields have been rising. This year, this isn't a sudden move here. This has been ongoing.
And that, I think, is the key. As long as bond yields are moving in an orderly and slow fashion, equity markets can deal with it, the economy can deal with it. It's just that when the moves become irrational, panicky, and bond yields are moving very quickly, that central banks might be forced to intervene. And that's also then a sign when things get really, really worrisome in general for the economy.
And of course, investors, aside from looking at what's happening in the bond market, there's also the focus on AI and the big capex spending. We've got Nvidia results today. We're talking with Arjun about how a beat and raise quarter is perhaps no longer enough. What are you going to be watching out for in these earnings?
Yeah, beat and raise has become kind of expected for Nvidia, and I expect no less than that at their earnings now. However, I think the main thing is margin development. Operating margins have dipped below the 66% level in the last quarter. Consensus expects it to go back up again, but that is becoming increasingly difficult with all the competition to NVIDIA's GPUs. Clearly, this quarter we also will look at the Vera Rubin rollout and ramp up, which should give a bit of a short-term tailwind. But overall, I think NVIDIA is getting into heights where the air is becoming increasingly thin, particularly when we look into 2027 calendar year.
And of course, Nvidia being the biggest story of the day on the equity side, they've also made headlines with their data center financing in recent weeks. And you've actually just put out an article, Joachim, that's been quite bearish on the sector, warning hyperscalers could be wasting hundreds of billions of dollars. So I just wanted to get your thoughts on that story when it comes to those large language models and data centers.
So I've become very bearish on the AI capex boom over the last 9 months. because I have basically come to the conclusion that from a technology perspective, investors, in my view, are investing in the wrong future. At the moment, the entire AI boom is about large language models like ChatGPT, like Claude, running in massive data centers. But if you actually look at it, there was a Stanford University study that came out in late May of this year that showed that more than 80% of tasks that people want to do with AI or can do with AI can already be done to the same degree or better on small language models running on local high-end desktop PCs and Macs. So 80% of the task we can already move to cheaper models on local PCs. And it is actually quite interesting that over the last 2 months, we first had Jamie Dimon of JP Morgan say that they are experimenting with different AI models in order to save costs. 2 weeks ago, AT&T said that they are reducing costs by switching to cheaper local models. And just yesterday, the CTO of Thomson Reuters said that they are building a Qwen-based local model in order to save costs for the tasks that don't really need that last 10% of performance that the frontier models of Anthropic and OpenAI can give you.
So what does this all mean, Joachim, then for the infrastructure stack? So we're talking about NVIDIA here, which has been very key to the build-outs around the data centers, their chips in those data centers, then the hyperscaler capex, and then, of course, you've got your large language model and application layer companies as well. So where is that value going to accrue in your scenario?
Well, I think the best trade that I can think of is actually to invest in pure PC makers and desktop computer makers, Apple, for example, Dell, these guys, which are sometimes considered AI losers, but in my view are actually the AI winners. I think that the hyperscalers and the neoclouds are over-investing in the data center build-out. NVIDIA, I think, has already kind of smelled where the wind is coming from, which is why they launched DGX Sparks, their desktop AI solution. And it is going to be interesting within the NVIDIA numbers to look at the growth in the edge revenues of NVIDIA, which arguably are less than 10% of their total revenues, but it is kind of the fallback solution or if the data center boom slows down.
So in terms of, the semiconductor landscape, would this be beneficial to companies like ARM, like Qualcomm, who are very much playing on that edge space?
Absolutely, and I'm also less worried about the memory makers, because if you have you need the memory either way, whether it is in a desktop or in a massive data center. It's just that in a desktop you use the good old-fashioned DRAM rather than your high bandwidth memory.
There's an argument to be made as well, just on the flip side, that even when you look at the enterprise setting, they're still going to need at some points more advanced AI, which might need to be cloud-based, which might need to be run in the data center of a cloud. But also we are seeing, a growing, and we have seen since the explosion of cloud computing, enterprises happy to hand over workloads to the cloud, not wanting to run expensive infrastructure as well. How does that sort of fit in with what you're expecting from this sort of small language model boom and the more edge computing part of the equation?
Well, so personally, I have switched to Open Router, and that is my way of dealing with the problem, so that I have a service that I use in order to kind of route my AI requests to the best model possible. And I completely agree with you. We're not going to not use any data centers whatsoever, because cloud software is still going to run. But I think we're past that tipping point where we are starting to overbuild data centers. Plus, you have to be aware that running an AI model on a local computer is massively cheaper. If you compare the initial capex per gigabyte of RAM, which by now, unfortunately, is the cost factor, it is about 80% cheaper than running it in a data center. And in terms of electricity bill, even if you do retail electricity prices, it still is 70 to 80% cheaper to run it locally than in a massive data center.
Joachim, just to close out the conversation as well, just to bring some of our top stories together. I mean, if you did see this AI boom start to unwind more materially, what impact would that have on the bond market?
On the bond market, it is a major problem for investment-grade bonds because I am really worried about a lot of these which are investment-grade would downgrade to Oracle, which is probably the most levered already and has the least in terms of a cash cow to fall back on, is trading basically at BB ratings, even though it is technically still investment grade. I'm not worried about a Microsoft because they're basically swimming in so much cash that it's hard for them to turn into a fallen angel. But Meta is, for example, another company where I worry that if the debt goes sour and if the revenues don't come in as to the extent that markets expect, they might actually also follow suit in Oracle's footsteps.
All right, great stuff. Thank you so much, Joachim Clement, Managing Director of Panmure Liberum. Now, coming up on the show, Canada claps back, matching U.S. tariffs dollar for dollar as a trade spat between the two neighbors heats up. Stay with us.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline, streaming on CNBC+.
Hyrox is on track to deliver around $270 million in revenue in 2026, and the Middle East has quickly become one of its clearest expansion priorities.
Basically, our global expansion strategy always entitled having Hyrox events. Our dream was in the 150 urban metropolitan cities in the world. Abu Dhabi, Dubai, these were all cities that were part of the list. It was always clear that the Middle East are a very, very important part of our business.
But global demand creates a new problem. The race can be replicated city to city, but the experience cannot be overcrowded. The result is a business that benefits from both scarcity and repeatability.
The tickets are very hard to get. That's what keeps people coming back and keeps people looking into opportunities to maybe even fly to another city or travel to another city to participate in. This is highly relevant and important for us as well.
Welcome back, everyone. Now, the Canadian administration has unveiled dollar-for-dollar retaliation to new tariffs imposed by the U.S. on Saturday. The move doubles existing levies on steel and aluminium to 50% and introduces new 50% duties on dairy, furniture and clothing. The retaliation is set to affect $20 billion worth of annual U.S. exports to Canada. Megan Casella has the details.
Canada saying that its retaliation will match the United States tariffs dollar for dollar and rate for rate. So Canadian officials announced tariffs ranging from 15 to 50% on about 700 U.S. goods. Items include everything from seafood and dairy to textiles, wood and paper. Some of the most significant duties targeting American steel. Those tariffs will double to 50% to match the U.S.'s rate. All of it set to take effect 2 weeks from today. Now, a lot of strategy buried in this announcement. For one, the list of goods hit appears designed to bring the most economic impact to states with big midterm races. Tariffs on metals and motorcycles, for example, will hit Michigan and Ohio. The seafood tariffs are going to hit Maine and Alaska. And then secondly, Canada also announced today a $7.5 billion aid package to support Canadian businesses and workers that are hit by the U.S. tariffs. They're really suggesting with this move here that they're bearing down for what could be a drawn-out fight.
And President Trump has threatened to rename Lake Ontario to Lake America as tensions between the U.S. and Canada continue to escalate. The lake borders both the Canadian province of Ontario and the U.S. state of New York, and echoes a similar move last year to rename the Gulf of Mexico to the Gulf of America through an executive order. The UK Prime Minister Andy Burnham is set to have his first meeting with Donald Trump next month, according to reports. Burnham announced plans to attend the UN General Assembly in New York after chairing a meeting of the Coalition of the Willing in Kyiv this week. UK officials are reportedly seeking to set up a one-to-one between the Prime Minister and the President, while no plans have been confirmed. The Trump administration has paused the applications of immigrant visas from around the world as officers undertake further training to detect those that would likely need government assistance. It comes after a federal judge struck down Trump's ban on visa applicants from 75 poorer nations last week, which the U.S. believed would need assistance if they moved to the country. Iran and Oman have held discussions around the establishment of a temporary joint shipping route through the Strait of Hormuz and a mine-clearing mission for the critical waterway. Dan Murphy joins us now for more on this. So, Dan, the Iranian Deputy Foreign Minister says the strait remains closed despite this temporary transit agreement with Oman. What more can you tell us about this?
Good morning. And then enter President Trump, who also posted on Truth Social overnight saying all mines have now been removed or detonated from international waters in the Strait of Hormuz. The president saying Iran has been notified that any vessel laying new mines will be, and I quote here, immediately and systematically destroyed. Axios also reports this morning that this demining could be quite a watershed moment, largely neutralizing one of Iran's main sources of leverage. Officials also telling Axios that it makes that draft Iran-Oman agreement that we've been talking about far less relevant now. Of course, Iran and Oman said on Tuesday that they had revived talks for a new temporary corridor through the strait. Oman's foreign minister saying future management of the strait and a more permanent solution will follow in due course. So the situation inside the Strait of Hormuz, once again, quite a puzzling picture here, with the US saying there's no mines and the blockade remains in effect, but oil is flowing, and Iran and Oman continuing to insist that they're negotiating their own next steps. Meanwhile, when it comes to the economic pivot, China, which buys up to 90% of Iran's oil, has signaled very little intention of cooperating. Beijing warning on Tuesday that it would retaliate if Chinese companies face those secondary sanctions that the Treasury Secretary Scott Bessent announced this week. The timing is really delicate as well. President Trump and President Xi are due to meet in Washington in around a month's time. So the question now is how much political capital both sides are willing to install here in order to assist the United States in bringing this war to a close. Also wanted to pivot and update you on some numbers fresh out of the UAE. Dubai International Airport reporting a steady recovery in passenger traffic after a first half that was, of course, disrupted by the war, as well as airspace restrictions and a direct Iranian attack on the airport as well. Dubai International announcing this morning that it welcomed 31.5 million passengers during the first 6 months of the year. That is down just over 31% from the same period in 2025. But it's interesting because the monthly numbers show that demand is improving now as airline capacity returns to the region. I spoke with the Dubai Airport CEO Paul Griffiths this morning. He says he now expects stronger momentum in the second half as airlines come back, as travel advisories ease up, and as Dubai's business and tourism calendar rolls out. Listen to this.
It looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back.
Paul Griffiths speaking to me there. Of course, this also means that Dubai International is no longer the world's busiest airport. It lost that crown to South Korea's Incheon earlier this year. And the big test for this airport now is just how quickly DXB can rebuild capacity, get some of those European airlines that have said, hey, wait, it's too soon to fly back to Dubai, and actually have them reinstate some frequencies into the region, and also ultimately build confidence as well around flying in and out of Dubai and the UAE and the region more broadly after what has certainly been one of the most challenging periods in the airport and that CEO's history. It's back over to you.
And Dan, of course, something that the CEO will be watching is the oil prices. I'm looking at Brent and WTI, both down about 2% today. This is as the US pivots to economic pressure on Iran. Explain what you're hearing from those discussions you've had about what we're seeing in the oil market reaction right now.
Well, in one of my conversations this morning, I was speaking to an analyst and asked exactly what are oil prices attempting to price right now. For a long time, we've used the price of oil as somewhat of a barometer of sentiment in the region here, and perhaps a leading indicator of the direction of travel, whether we were going to see escalation or de-escalation based on the headlines. We have seen quite a significant pullback in the price of crude through the course of this week. You'll recall we were looking at Brent at around 93 USD at the start of the week. We are now down quite significantly, down to 86 US dollars a barrel. It's probably based on a combination of factors. The first being that the United States has signaled that it doesn't need to resume kinetic strikes against Iran, and it is instead now pivoting to this economic strategy. But at the same time as well, perhaps also moving lower off the back of the president's tweet, the president's post on X, I should say, suggesting that mines had been removed from the Strait of Hormuz, which also reduces the risk of any near-term immediate disruption to energy supply in the, of course, absence of the Strait of Hormuz reopening fully. So oil prices still attempting to navigate the headlines here, but pulling lower quite significantly as we track into the European Open.
All right, appreciate the update to our Dan Murphy there. Thank you. Now, CIA Director John Ratcliffe reportedly made a surprise visit to Moscow on Tuesday as Washington's mediation efforts to end Russia's war with Ukraine stall. The visit would be his first publicly known trip to the Russian capital since becoming CIA chief. Ousted Ukrainian Defense Minister Mikhailo Fedorov has warned that Kyiv appears to be slowly losing the war with Russia, and the country only has a few months to make the necessary decisions to change course. Speaking to Reuters, Fedorov said his country doesn't have an overall vision for how to end the conflict, also criticizing corruption and a lack of political independence in government institutions. And coming up on the show, yen intervention risks see traders pivot their focus to another carry trade opportunity. We've got those details next. Stay with us.
You know, for me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report. Weekdays streaming on CNBC+.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of the quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giamatteo, only on CNBC.
You're watching Europe Early Edition. I'm Ritika Gupta. Let's get into your headlines. The countdown is on to Nvidia earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking exec as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation. And Canada retaliates, slapping tariffs on around $20 billion worth of American goods as a trade war between the U.S. and its northern neighbor escalates. Boston Fed president has warned that the Fed may need to hike rates, quote, should evidence of sustained inflation progress not materialize. Collins, who is not a voting member this year, called for policy to be nimble and added that she backed July's decision to hold. She went on to argue that without evidence that inflation is abating, it would be more difficult to rule out other inflationary forces being at play. Richmond Fed President Tom Barkin has warned of a future reckoning on America's debt pile. Responding to a question about U.S. public debt topping $40 trillion, Barkin said, quote, at some point, people stop buying your debt, and that's the risk out there, adding that it was impossible to know when a potential reckoning could come. The structure of the U.S. economy could be curving away from the so-called K-shape as lower-income households catch up, Treasury Secretary Scott Bessent told CNBC, but some economists still see divides. Sharon Epperson filed this report.
The K-shaped economy has become shorthand for an economy where higher-income Americans pulled further ahead in their wealth, spending, and financial security, while many lower-income households struggled to keep up. Treasury Secretary Bessent says the economy looks more like a C as this gap between income groups begins to close. Bank of America Institute data shows after-tax wage growth for lower-income households, the yellow line, accelerated in July, surpassing higher-income households, the orange line, for the first time since December 2024. Spending growth also converged last month as lower-income households' total and discretionary credit and debit card spending grew, while middle-income households slightly lagged. Some economists say that doesn't mean lower-income consumers are truly gaining ground. Many Americans at all income levels are still under pressure.
It's not just lower-income families. It's median-income families, higher and upper median-income families, but also people that have strong means that are dialing back some of their spending and being more cautious with how they spend, where they spend their money.
A new report from J.D. Power finds concerns about gas prices are easing, while worries over housing costs are close to becoming the second largest source of financial stress for consumers. Housing costs remain a particular pressure point for younger Gen Z consumers, and some economists say age and life stage, more than any letter of the alphabet, may be a more useful way to understand who is feeling the most economic pressure in the months ahead.
Let's get a check of your markets now. Over here in Europe, we're seeing Stocks 50 futures moving to the upside, just 0.1% there. This is as we see Brent prices fall down some 2%. Let's see how Asian markets are trading, also benefiting from that decline in oil prices, as well as chip makers helping Asian stocks out today. The Nikkei 225 index up 0.7%. The Kospi up some 1.3%. Again, Samsung and SK Hynix, those chip makers, the biggest contributors there, leading the way higher, taking their cues from Wall Street ahead of those Nvidia earnings. And speaking of, let's see how Wall Street gets set to open. We're seeing futures moving to the downside, actually, this morning. This follows what was a positive session where we saw the chip makers rebounding in the run-up to Nvidia earnings. That's what investors are going to be keeping their eyes peeled for today, as well as the July PCE data also out. Now, the ECB Executive Board member Isabel Schnabel says interest rates must rise further to offset the impact of the conflict in the Middle East, as well as strong recent economic data. Speaking to Bloomberg, Schnabel said inflation is unlikely to return to target in the medium term and further tightening could be necessary. The Bank of Japan is expected to accelerate its tightening campaign and hike its key rate to 1.25% in September. That's according to economists polled by Reuters. This amid pressure on Japan from inflation driven by the Middle East war and selling pressure on the yen. And the yen intervention risk has prompted the start of a rotation into the Swiss franc as a carry trade alternative, analysts say, with a weaker currency providing some relief for Switzerland. Let's get more on this with Stefan Gerlach, chief economist at EFG Bank. Stefan, great to have you with us on this story. I mean, the yen, we know, traditionally has been this dominant funding currency when it comes to carry trades. Has the intervention both by Japan and the US, is that fundamentally shift the risk-reward calculation for those borrowing the yen?
With interest rates going up in Japan, as you mentioned, and elsewhere across the world, of course, the focus has been increasingly shifted to Switzerland and the SNB, where interest rates are still around zero. So there's a big change here, I think, happening.
What makes the Swiss franc particularly attractive here as an alternative, currency trade right now? Is that just because of their interest rates being at zero, or is there more to this story?
I think there is more to this story. I think one issue is that the SNB would tend to offset if there was an increase in appreciation in the Swiss franc. The SNB would step in, and they wouldn't like that. So I think that's an important factor. Another important factor, of course, is that the Swiss franc exchange rate certainly vis-à-vis the euro has been very stable. There's very little volatility there, and also the exchange rate vis-à-vis the US dollar has also not been very volatile. So a lack of volatility and the sense among market participants that the SNB would try to resist an appreciation of the franc, I think, are big factors too.
Yes, so just dig into that a little bit more. If we do see the Swiss franc as more of the carry trade alternative, I mean, how much of a problem is this going to create for the SNB, particularly, I guess, if the franc does become excessively weak?
Well, plainly, the SNB has a long experience, well-earned experience dealing with exchange rate fluctuations and so on. So I think they feel quite comfortable with the current situation, and they feel, I think, quite able to control the exchange rate. So unless there is sort of some major shock in the system, I think they feel probably quite comfortable with the situation. Although for outsiders, it looks like the focus is now shifting increasingly to the Swiss franc.
So, but realistically, can the Swiss franc become, I guess, the dominant or the major new funding currency?
It could happen. It could happen, but I suspect that's a little unlikely. The Swiss franc is not a very major currency in the way the Japanese yen is, and so on. So I don't think that will necessarily happen. But plainly, the Swiss franc has become much more important as a funding currency for carry trade operations.
I guess the paradox of this, though, is that if the more of the franc comes as a carry trade, this alternate funding currency, there's also the greater risk of what could be more of a violent backlash or a violent reversal here. So how vulnerable is the market to that particular scenario?
I think that is a very good point. Carry trades, we know from history, they can be reversed abruptly. If something happens, investors may say, oh, let's close these positions. And in that situation, they would start buying Swiss franc. And that could yield or lead to a surge in the Swiss franc that the SNB may be unable to offset on a day-to-day basis, on a short-term basis. So I think that is the major concern. That's a concern we've always had with carry trades. If something happens, they could be undone very quickly. I mean, by contrast, players enter carry trades very gradually over time. Positions build up gradually, but they could be offset very abruptly, and that would be a problem.
So, President Trump, I mean, he's criticized the strength of the dollar relative to other currencies like the Swiss franc. Is there any sense in which you think Switzerland is gaining some kind of unfair competitive advantage?
I think President Trump's comments are not necessarily always founded in deep economics, and I think many of his comments are geared much more to a domestic U.S. audience than international exchange markets, if you like. So it's hard to make sense of what he says sometimes. But in terms of substance, I think we should not be too concerned about that.
What about the Swiss francs, its traditional kind of safe haven status with what we're seeing in the Middle East? I mean, how is it faring when it comes to that? And in terms of also determining what happens if these carry trades do unwind?
Well, that's exactly right. I mean, that is the one issue with the Swiss franc. It is a safe haven currency. So if something blows up somewhere in the world economy, in financial markets or international politics or so, you can have this wave of funds moving into the Swiss franc, forcing the franc to strengthen dramatically over a couple of days or a couple of weeks. And that is the main problem. I think that is the main concern also for the Swiss National Bank. And there's very little one can do about that. I mean, Switzerland has a long history of doing well in adverse economic circumstances. And people are well aware of that. And when things become a little bit rockety or bumpy in the global economy, the Swiss franc is more likely to appreciate, and of course, market participants are well aware of that, so they shift into the franc when the outlook looks a little bit worrisome. And it's just very hard to avoid. I mean, the good thing, or no, I wouldn't say the good thing, but we should keep in mind that this is something that has been going on for many, many years, and the S&B has plenty of experience of dealing with this situation. What we tend to see is the franc strengthens dramatically, and then it gradually falls back afterwards.
Looking ahead, where do you see then the Swiss franc trading vis-a-vis both the euro and the dollar?
I suspect the Swiss franc will probably not move very much from the current levels, but that's that's essentially a guess. If the ECB were to tighten monetary policy dramatically during the fall, as is a possibility, the Swiss franc could weaken. The Fed may also tighten monetary policy, potentially by 50 basis points or something like that during the fall. And the S&B is very unlikely to raise interest rates. So that would lead to an even greater interest rate differential, and that could weaken the Swiss franc. So I suspect that if things work out well, the franc will probably continue to stay at this level as it has over the last year or so. But if there is a tightening of monetary policy outside, then the Swiss franc weakness is a possibility.
All right, we'll have to leave it there. But thank you so much, Stefan Gerlach, Chief Economist at EFG Bank. Now, the country music legend Dolly Parton has died, aged 80. From her humble beginnings in Tennessee, her music career spanned over 6 decades and earned her 11 Grammy Awards. But the singer was also known for her philanthropy, where she provided thousands of children with free books and also donated $1 million to the Moderna COVID-19 vaccine. Parton passed away yesterday after a brief battle with cancer, her publicist said in a statement. CNBC's Tanya Breyer spoke to Dolly. This is back in 2016 and asked her about her early career. Take a listen.
They were good days for me because they were kind of more exciting than what we had. My Uncle Bill was my mother's younger brother, and he saw early on that I had something going. He also played, he used to play and sing, and he was a writer and a singer, and we used to write songs together, and we'd get enough money together in some old trapped car that we'd get, and we'd sleep in the car, and I'd put my makeup on, when I got to be a teenager, and we'd go back and forth to Nashville, and we would just go.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
Combat sports icon Ronda Rousey. She's conquered the UFC, dominated the WWE, and now she's sounding off on both.
It's extremely oversaturated right now. There's too many fights.
San Francisco 49ers owner Jed York. He sat down with us to explain how he turned the team around and the critical lesson he learned. Plus, influencer Jesse Rydell, also known as Jesser, explains his simple ingredient for online success. This is CNBC Sport on the Record.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
Crypto FC on The Score.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
Welcome back, everyone. On the latest episode of Managing Asia, Christine Tan spoke to Amanda Lacaze, the woman who transformed Lynas Rare Earths into a major global player, challenging China's dominance and breaking barriers in the mining industry. Take a listen.
Very, very confidently, we would say that maybe Northern Rare Earths in a couple of areas, which is the largest of the Chinese firms, is still just ahead of us, but we are a very fast number two. We would be confident there are some things that we have done in our flow sheet which would put us ahead.
What's the next big move that could really further challenge China's grip and dominance?
We think that the next thing to ensure that the industry grows is to have more outside China metal and magnet making. So we are partnering with metal and magnet makers, and so far this year we've announced a partnership with JS Link, which is a Korean company, and LS Cable, which is another Korean company. With LS Cable we're going to focus on metal making in the first instance. JS Link alongside Lynas is going to invest in developing a magnet plant here in Malaysia.
Not many women get to run a mining company that's caught right smack in the middle of global supply chain and at the center of geopolitics. How do you handle the volatility? How has it changed you as a leader?
I would start that question, Christine, with not many women get to run a company, right? And that is a problem. And people say to me, you know, mining male-dominated. You know what? I started my career in fast-moving consumer goods. Guess what? It was male-dominated. I worked in industrial chemicals. Guess what? It was male-dominated. I worked in agriculture. Guess what? It was male-dominated. I worked in telecommunications. Guess what? It was male-dominated.
Well, you've broken the glass ceiling.
And so why did I keep doing that? Because I wanted to prove there was a better way to run companies than traditionally there have been. I don't think it changed me as much as hopefully I changed it.
And you can catch the full episode of Managing Asia at these times on your screen or over at CNBC.com. Now, the price of liquefied natural gas in northwest Europe has hit its highest level in over 3 years as conflict in the Middle East continues to strain supply. The cost for 1 million British thermal units at the beginning of the week was more than double the price a year ago. British energy market regulator Ofgem is set to hike the energy price cap to tackle soaring bills and customer energy debt, with suppliers paying more for wholesale gas. Bills are expected to rise even further into the coming winter months. I'm pleased to say Ned Hammond, the Deputy Director of Policy at Energy UK, joins us now. Ned, welcome to the show. Thanks for joining us. First of all, start off with Ofgem, set to hike this energy price cap today. What is your immediate assessment of what that means for both household bills and how concerned should consumers be about this?
Yeah, this will be very concerning for consumers. So we're expecting the price cap to increase by about 4% for the October to December period. And that will mean that prices are about 16% higher than they were in April to June. And this is particularly concerning given that we're going into the winter months when customers typically consume more energy, and we're already seeing significant affordability challenges. And as you mentioned, debt is increasing significantly. It's now over £6 billion across the market. So this will be a very concerning time for both customers and the industry.
So the rise in energy bills, is that all down to the Iran war right now? I mean, how exposed actually is the UK to the conflict? Because we don't import large quantities of energy directly from Iran. So where does all of this vulnerability come from?
Yeah, absolutely. So there are two main things that have been driving energy prices higher over the last few years, and that's a combination of higher gas prices and also rising non-commodity costs, things like network costs and policy costs for government schemes that are charged through energy bills, particularly electricity. But at the moment, the thing that's really driving it is the higher gas prices that are being caused by the conflict in the Middle East. Now, as you say, we don't import directly from that region, but gas prices are set on international markets that are affected by global supply and demand. And so the shock to supply there affects prices right across the world. And that means that prices are higher in the UK. And we're particularly exposed because we still have a significant proportion of gas in our electricity generation. It sets the price about 85% of the time, but also households are generally relying on gas for their heating. So about 85% of households in the UK use gas for heating. And so that means a significant portion of our energy costs are directly reliant on gas. And so we're directly affected when global conflicts like this happen.
So how important is the Strait of Hormuz to the UK's energy security? I mean, we've seen governments around the world, they've been looking to strategic reserves and other measures to protect consumers. I mean, does the UK have enough protection if the global energy market does deteriorate further?
Yeah, so at the moment, this is more of an energy price shock rather than an energy security shock. So we were getting around less than 2% of our gas supply through liquefied natural gas from the Middle East. That supply is obviously being constrained, but we get the vast majority of our gas from other markets, so either domestic consumption or pipelines from Norway and other places in Europe, as well as LNG from the US. So for the time being, this is more affecting the prices rather than our gas security. We also have some gas storage as well. The longer this continues, the more potential there is for there to be challenges. But at the moment, this is more of a concern around energy prices rather than the absolute sort of security of supply.
You mentioned there it's more about the prices rather than the security of supply here. But you've got the Iran war, but you also have what's happening in Russia and Ukraine as well. And Europe has dramatically reduced its dependence on Russian pipeline gas, but has become more reliant on that global LNG. So I just wanted to get your thoughts on that. Have we really improved energy security significantly, or have we just sort of traded, I guess, the sources of vulnerability?
There's still a challenge, and it's still something that the government and industry are working on to improve security over the medium term. But the best thing to improve our energy security long term is to reduce our reliance on gas. So that is reducing the amount of time or the amount of our electricity supply that comes from gas. And that's continuing through expanding renewables generation, but also moving our consumption from gas for heating through to electricity for heating. So, significantly accelerating the adoption of clean heat, like heat pumps and heat networks, is absolutely critical for reducing our exposure to gas and improving our energy security.
And then I've got to get your thoughts on all this big debate with the North Sea and UK energy supply, because there's a lot of debate over oil and gas and the North Sea right now. I mean, how important is this production to the UK energy security picture, even as the country does move towards this net zero?
Yeah, so a significant proportion, around 40% of our gas, comes from domestic production. So it is meaningful. The potential new exploration and production could have a modest positive impact on our energy security, but it would have a negligible impact on the energy prices that customers see. So as I say, the best thing for our kind of like long-term energy security is just to be reducing our reliance on gas and fossil fuels in international markets, and to be focusing more on homegrown electricity generation and electrifying our energy consumption as much as possible.
All right, great to have you join. Thanks so much, Ned Hammond, Deputy Director of Policy at Energy UK. And before we go, a quick check Of your markets over here in Europe, Stocks 50 futures moving to the upside just 0.1% higher, even as oil prices do drop about 2% or so on Brent. If we take a look at Wall Street and how it gets set to open, though, we are seeing red across your screen there, though it follows what was a positive session yesterday. All eyes are going to be on those Nvidia earnings today, though. That's what investors have got their eyes on. So that is it for today's show. I'm Ritika Gupta, and Sport Fox Europe is up next.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report, weekdays streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection with Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
Fast Money is America's post-game show.
Near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations matter in a higher interest rate environment.
Fast Money, CNBC, streaming on CNBC Plus.
I built a legacy on the court, and now is the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos, and these are your headlines. The countdown is on to NVIDIA earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts are eyeing a near 100% surge in revenue on the quarter.
OpenAI loses yet another high-ranking executive as its chief of data centers parts way with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbor escalates.
NVIDIA is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed on their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date. The questions remain whether the company can still impress investors. Options traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. Let's get to Arjun for more. Arjun, we always talk about this as a macroeconomic event these days. What are we anticipating? Because it feels as though we could see a beat. Typically, the company does beat, but there is a lot of caution about the outlook.
It's a tough one because there's a feeling that what NVIDIA has done and the massive growth it's seen is priced in. And that is the problem here is NVIDIA needs to shift the narrative from, we're sort of steady as you go to we're continuing to grow very strongly. And that's going to be, I think, a lot of the messaging from the management. And there's going to be a lot of focus on Vera Rubin, which is the next generation platform. And you're going to hear that mentioned a lot in terms of how that's going to support future growth and the demand from that. One of the other issues is around customer concentration. It's been an issue for a long time where NVIDIA and a lot of their revenue is coming from the big hyperscalers that are spending this massive capex. And so you'll probably hear Jensen Huang and other management talk about the fact that actually this is broadening to other parts of the market as well. So there's all these little issues as well. Look, just to kind of look at both the tailwinds and the headwinds. The tailwinds are the fact that hyperscalers are continuing to up their capex spend. One projection put their capex spend this year north of $700 billion, about a 90% jump from last year. All of the hyperscalers through the earnings season have reported backlogs of demand for their cloud computing business, and there's a shortage across the stack from production capacity at TSMC to memory, which is giving NVIDIA, of course, that pricing power as well. And there is no doubt that it continues to have a very strong competitive position. The issues here is the continued narratives around chips from the hyperscalers themselves and those custom chips, the customer concentration, as I mentioned, and of course the financing portion here as well, and whether NVIDIA is becoming almost like a backstop to these AI trade.
The other big point to make here is that NVIDIA has also seemingly crossed over to become the banker. Yeah. It is not just the partner. We were talking about the thousands of partnerships inked globally. It is now a significant investor in companies in this circle.
And this is part of the narrative around broadening the customer base. So far, the hyperscalers are the ones with the money, right? They have the cash to spend on this massive capex. And so they have been natural customers of these very expensive NVIDIA systems. NVIDIA's argument here with this financing package with these financial institutions is, well, we could actually broaden access to these chips to customers who can't necessarily spend these large amounts of money. And so now here's a handy financing package that they could tap in to do that. Again, a lot of it is around narrative, because you mentioned there the sort of AI banker. That is a good way to put it. Is NVIDIA becoming a central bank of sorts to this AI ecosystem? And does it become a backstop? And if so, that's more of a bearish kind of outlook on the sector, rather than NVIDIA's point of view, which is actually this is going to increase demand. And I think that's kind of the narrative battle NVIDIA's caught in at this point, as the market still remains concerned about the elevated levels of capex and whether this capex is going to be justified in the end by the demand that we eventually see.
Arj, I don't know if we'll get any more detail on this aspect, but I suppose what investors will also be weighing up is this decision to put up the prices for some of the most powerful chips for some of NVIDIA's customers, and whether that might potentially hamper some of the anticipated growth and demand when those wanting to use their chips for operating cloud, storage, data centers and so on, whether they're willing to pay the extra for that.
Yeah, I think what we've seen from the rises in capex from the hyperscalers is while they've gone up, it doesn't necessarily mean they're buying more. I think that's a reflection of the fact that things are getting expensive. Memory prices continue to shoot through the roof because of the shortages. And of course, NVIDIA's chips, a large portion of that is on high bandwidth memory, which is incredibly expensive. And so I think it's natural for NVIDIA to put up their prices. I think the hyperscalers will continue to pay because NVIDIA's chips remain, the top end when it comes to the need to train these models. But there are lots of shifts happening in the market. I think NVIDIA realizes that there is going to be a shift towards a focus on inferencing, i.e. the running of these models. And that's why they did this sort of licensing acquisition of Grok, which is very specifically focused on that. I think there's going to be a lot of interesting talk, and you've seen that again with NVIDIA on so-called edge devices, on laptops, on robotics, on cars. That's another kind of future story they're likely going to talk about on the earnings call as well. But certainly I think the price rises, they will be absorbed by the hyperscalers.
And Jensen has spelled it out really, hasn't he? All the areas, physical AI that he sees as the future, quantum, he's been talking about all the sectors that have been interested. But it is interesting how they're positioned around all those different investments. And the latest one is whether Perplexity is also in the sights of NVIDIA. Perplexity is something that I use often. It's one of the AI models, but it could also mean that NVIDIA steps into the frontier models with the likes of Perplexity.
With Perplexity, and I think this is, again, on one of the bets around the models being run on device as well. And this is something, Perplexity has spoken about, I think, running these models on laptops, on PCs, on smartphones as well. NVIDIA wants to make sure that it is not just seen as this kind of, the chip company at the center of it. It wants to make sure that it's part of this broader ecosystem. And so that's why you're seeing these partnerships with Perplexity, why there is talk about robotics and autonomous cars, because, Jensen Huang wants the market to see that NVIDIA is not just playing in the data center, that there is a future beyond the data center. And I think this is, again, going back to that narrative battle that he hasn't quite won yet with investors, that they're looking very much now at the capex and the data center, but not necessarily at these future endeavors around cars, around edge computing and all these other areas that Jensen Huang has said are going to be huge areas as well. And that's really part of the challenge for the company.
It's interesting, isn't it, just how high investor expectations are. And on one measure, you could look at how the stock has performed for NVIDIA so far this year, up about 12%, broadly in line with the S&P 500. But when you consider that what we're expecting is for them to report that their revenues doubled in this latest quarter compared with a year ago, you might look at that and think, gosh, well, if the revenues have doubled, why aren't investors piling in? Why are they not sort of thinking, oh my goodness, this is the place to be? And I suppose that underscores just how high the expectations are and how much they not only need to meet, beat, but absolutely smash expectations.
Yeah, you're absolutely right. I mean, if we look at the stock from about middle of May, it's been in a kind of holding pattern until now. It's sort of been trading within a range because there's sort of no direction of travel. And I think that partly is because the expectations are so high. NVIDIA needs to come out and really blow away expectations. It needs to do something that the market is not expecting as well. And I think given that there are still jitters around so many things from capex through to competition around NVIDIA, investors saying, well, where is that next leg of growth going to come from? And I think that's where, again, go back to Vera Rubin, the next generation platform, a lot is resting on that this next generation platform is going to be far ahead of competitors, that it's going to be attractive enough for the hyperscalers and other companies to buy, and that is going to support growth. And I think that's one of the things you'll hear a lot of talk about today on the earnings call.
Arjun, fantastic setup for our next conversation with Anne Glover, who is the CEO of Amadeus Capital Partners. Anne, thank you very much for joining us. What's your view on what we're expecting to hear from NVIDIA and what's going to count today?
Well, from what I can tell, it's it's not so much today's earnings, it's the forward guidance that will make a difference. And I think there is expectations that CapEx will continue. And it's really, NVIDIA is the place you would get signal about that before the megatechs announce in October their actual spends.
So far, we've seen a concentration of purchases, the amount of orders going through really from the hyperscalers. Is there any sense that this is now catching some traction beyond just the hyperscalers because of the adoption that is taking place across businesses and sectors, the physical AI that NVIDIA has been telling us about?
Well, the physical AI is really about robots, and that's definitely happening, but a little bit longer term. I do think that it's catching wider than the hyperscalers because enterprise and proprietary government spend, for that matter, that will be using exactly the same technology.
And it's Arjun here. I just wanted to get your take on where you think the growth is going to come from for NVIDIA. There are huge market expectations at the moment. How much is focused on the next generation Vera Rubin chip?
I think there is a lot of focus, but their internal planning will accommodate, exactly how much Blackwell will continue versus Vera Rubin. Very high inference application. So I don't expect it to be a wholesale. Will still be uses and replacement orders with Blackwell. So I think what you're seeing is Rubin is the next gen, lower cost, higher performance, which is necessary. And that called Feynman, which is announced for probably 2028. So their planning is incredibly long term. So I would expect to see a bump. I think they will have it well organized as to who's getting access to the high performance chips first.
There's been concerns in the market around the level of capex that we're seeing and whether that can be justified by demand. And of course, if there are any kind of, slowdown in demand around this AI story, that could have ramifications across the entire ecosystem. How are you viewing it at the moment in terms of the level of capex, if that's justified, and whether you feel that there's any kind of overcapacity at the moment?
No, there's no overcapacity. The supply strains throughout the system, and it's not particularly NVIDIA that's constraining it. It's permits for data centers and the rollout process. So there's no question that it's supply constrained. Now there will be a compression on pricing for sure eventually, because I don't think anyone will. Enterprises will not be able to continue to sustain the cost line of all the tokens they're consuming. But so I think there will be sort of ways in which enterprises will try and be in their use of AI. But I don't think fundamentally will fall back anytime soon.
And we do appreciate your time today. Anne Glover with us, the CEO of Amadeus Capital Partners. And a big thank you to Arjun, too, for helping us out with the coverage on NVIDIA.
OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the ChatGPT maker. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Stresser. And hear more on what OpenAI had to say about the departure. It's all there for you, the write-up at cnbc.com. The Canadian administration has unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. The move doubles existing levies on steel and aluminium to 50%, and introduces new 50% duties on dairy, furniture and clothing. The retaliation is due to affect $20 billion worth of annual US exports to Canada. Megan Casella has the details for us.
Canada saying that its retaliation will match the United States tariffs dollar for dollar and rate for rate. So Canadian officials announced tariffs ranging from 15 to 50% on about 700 U.S. goods. Items include everything from seafood and dairy to textiles, wood and paper. Some of the most significant duties targeting American steel. Those tariffs will double to 50% to match the U.S.'s rate. All of it set to take effect 2 weeks from today. Now, a lot of strategy buried in this announcement. For one, the list of goods hit appears designed to bring the most economic impact to states with big midterm races. Tariffs on metals and motorcycles, for example, will hit Michigan and Ohio. The seafood tariffs are going to hit Maine and Alaska. And then secondly, Canada also announced today a $7.5 billion aid package to support Canadian businesses and workers that are hit by the U.S. tariffs. They're really suggesting with this move here that they're bearing down for what could be a drawn-out fight.
Well, how much is all of that affecting markets? We will check in. You might be surprised by what we can tell you. But coming up on the show as well, Fed officials look towards a rate hike as one warns of a future reckoning over the US debt pile. Plus, hopes are raised of a temporary shipping lane in the Strait of Hormuz as Iran and Oman hold talks. We'll get the very latest from Dan. And we'll speak to Vivek Paul as BlackRock says the income landscape has been transformed in a new report. That conversation is at 7:30 London time.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
Crypto FC on The Score.
The AI boom is reshuffling the global equity market rankings, with Taiwan and South Korea leapfrogging past long-established markets. Taiwan has climbed past Canada and India to become the world's 5th largest equity market, while South Korea has moved into 6th place.
All this happened within the span of just a few months, because last December, they were in the 9th and 11th places respectively. Now, such a shift is not unprecedented, but what is unusual is the speed at which these two have been climbing.
But this reordering isn't necessarily being driven by broad economic growth. Instead, it's about 3 companies at the heart of the AI hardware supply chain.
It's the AI theme which is driving things. So we have this kind of perfect positive storm of industry fundamentals which are resulting in very, very rapid profit growth.
So what does this reshuffle tell us about how AI is changing global stock markets? And what are the risks?
So I promised you we'd check in on the markets, and as you can see, that trade war between the US and Canada, well, to look at equity markets, what trade war? Equities largely seem to be shrugging off the impact for now. Let's see, of course, because those tariffs aren't taking effect, the retaliatory tariffs, until September. So for now, markets focusing on other factors, namely today's Nvidia results. And in anticipation of that, investors' positioning seems to be fairly positive. If you want to see what a 3-day winning streak looks like, look to the Dow posting its 3rd day of consecutive gains, closing the session almost 1/3% higher. Gains to be found similarly on the S&P 500 and the Nasdaq leading the way yesterday, closing 0.2% higher. We've got the Nvidia results coming later on Wednesday. We've also got this week, in fact, later today, we've also got the latest inflation data, the PCE. It's the Fed's preferred gauge of price increases. Let's see what investors make of that. That will set the landscape for Fed Chair Kevin Warsh's speech at Jackson Hole on Friday. That's the picture on US markets. Let's see how things are playing out in the Asian session. And again, plenty of green to be found across the board. The Kospi leading away, up more than 1%. Remember, we've got those big tech names represented there on the index, Samsung, SK Hynix. So you get that sense of positivity around the AI trade, helping to lift the broader Korean market. Also gains to be found on Japan's Nikkei and the Hang Seng as well in the Shanghai Composite. How does that all set things up for the European trading day? Well, a slightly more muddied picture. We've got the futures pointing to a positive start on the pan-European blue chip stocks 50, on the FTSE 100 as well. DAX futures, though, being called lower. And we've got the US futures as well, pointing to, well, a slightly more cautious mood. According to the futures, looking at a negative start to the day on the S&P 500 and the Nasdaq, the Dow being called flat. We should just say this in the context of oil prices having come down and dipping down from where they were, second consecutive day of losses. Karen.
Let's push on to the Middle East. Iran and Oman have held discussions around the establishment of a temporary joint shipping route through the Strait of Hormuz and a mine-clearing mission for the critical waterway. And let's get out to Dan for more. Dan, a lot of crucial details there, temporary being one of the words. So does that suggest that this is just a short-term measure? And the other, the status of mine clearing, because the Americans suggest that the mines have already been cleared.
That's right, and the president actually posted on Truth Social overnight saying all mines have been removed or detonated from international waters inside the Strait of Hormuz. The president in this post saying Iran has been notified that any vessel laying new mines will be, quote, immediately and systematically destroyed. Now, Axios reports this morning that this demining could be quite a watershed moment here, largely neutralizing one of Iran's main sources of leverage. Officials also telling Axios it makes that draft Iran-Oman agreement far less relevant. Remember, Iran and Oman said on Tuesday that they had revived these talks for a new temporary corridor through the strait, with Oman's foreign minister saying future management of the strait and a permanent solution will follow in due course. So again, some confusion here about exactly what is happening inside the Strait of Hormuz. As it relates to the economic pivot that the administration took this week, of course, all eyes have been on China. China buys up to 90% of Iran's oil. It signaled very little intention of cooperating here. Beijing also warning on Tuesday that it would retaliate if Chinese companies face secondary sanctions. And the timing is very delicate here. President Trump and President Xi are due to meet in Washington in around a month's time, and all eyes are going to be on exactly how much political capital the president is willing to spend on ensuring that China is on side when it comes to cutting back its exposure to Iran, which is ultimately what the United States would like to see in order to bring about some kind of effective change among this regime. Also wanted to update you on some numbers out of Dubai International Airport this morning. I spoke with the CEO, Paul Griffiths, about the steady recovery in passenger traffic that the airport has seen through the course of the last few months. Of course, the first half of this year heavily disrupted by war. We saw airspace restrictions and a direct Iranian attack on the airport as well. DXB announcing this morning that it welcomed 31.5 million passengers during the first 6 months of the year. That's down just over 31% from the same period last year. But the monthly numbers do show demand improving as airline capacity returns. Here's Paul Griffiths speaking earlier.
It looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back.
Paul Griffiths there. He is the longtime CEO of Dubai Airports. And remember, the airport here, absolutely critical, acting as a real enabler of economic activity across the UAE and around the wider region. As you've just heard there, in the second half, he expects more airlines to come back. He expects a lot of the travel advisories as a result of the war to start easing up and countries opening their doors to the idea of returning to fly once again via Dubai. And also Dubai's business and tourism calendar also rolling out here, perhaps helping to entice the international traveller back once again. But of course, the big test is just how quickly DXB can rebuild that capacity and confidence after one of the most challenging periods in its history. And in fact, if you look at some of the airlines that are now operating around DXB, he said this morning that DXB is being served by more than 50 international airlines, but you still have these mega European carriers like BA, for example, KLM, Lufthansa and others suspending their Dubai routes over regional airspace risks, some of them until 2027, in fact. So again, passenger confidence here and the confidence among those airline operators still has some room for improvement before we see those airlines saying, OK, Dubai is still a place where we can safely fly. It's back over to you.
Dan, to the point around sentiment and security in the Middle East, the fact that we now have the administration, the US administration, trying to turn or twist towards economic sanctions, and very strong language, of course, used to economic D-Day, Operation Economic Outcast. The fact that we have this twist towards economic negotiations, does that mean that the region feels as though this is a positive, that we're moving away from sort of missiles and hard warfare?
Yes, of course, no Gulf or Arab leader would like to see war on their doorstep. And so much of the rebuilding confidence and capacity story ultimately comes back to ensuring that the kinetic strikes that we've seen over the last 6 months stop and the door for diplomacy remains open. A lot of these countries have already started to build back from the worst of the war impact, particularly from an economic perspective. But until there's a genuine resolution or an off-ramp to this situation that the United States and Iran now find themselves in, a meaningful return to pre-war activity, to pre-war economic levels looks unlikely at this stage. Of course, rebuilding confidence is just one part, but ensuring that this place is still somewhere where international travelers want to visit, where people are willing to deploy capital, people are willing to move and live here. Unless that comes back, then of course the economic lid will remain on. But this latest number out of Dubai Airport really shows that that rebuild is now well underway. Confidence is returning, economic activity is improving, but perhaps it could be some time yet before things really still return to normal.
Dan, thank you very much for bringing us the latest there from the Middle East.
How's all of this affecting European equities? We are counting down to the European market open, and a slightly mixed picture according to futures, with the DAX being pulled in negative territory. The other two on the wall there being pulled positive. We're back after a short break.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline, streaming on CNBC+.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of the quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giamatteo, only on CNBC.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Brillos. These are your headlines. The countdown is on to NVIDIA earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking executive as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbor escalates.
Right, shall we have a look at the markets? Yes, let's do that, because this was the picture at the close of the session on Wall Street at the end of Tuesday. The Dow posting a third consecutive day of gains, and the S&P 500 and the Nasdaq also notching a positive win for the session. The Nasdaq leading the way, 0.2% higher. The Dow and the S&P also advancing, but to a lesser extent. Investors really positioning ahead of those results from Nvidia due out today. Also anticipating the latest inflation print, the PCE, which will set the landscape for Fed Chair Kevin Warsh's speech at Jackson Hole at the end of the week. That all teed things up nicely for the Asian trading session. And you can see green across the board there. The momentum really around the AI trade can be seen, especially on the Kospi, up around 1%. We have seen it really act as a bellwether for sentiment around AI and tech, given the outsized impact of heavyweights SK Hynix and Samsung on the broader index. Green to be found on the other regional benchmarks there, the Nikkei, the Hang Seng and the Shanghai Composite, all trading higher. We are less than half an hour to go now until the European market open. A slightly more muddied picture there. This despite the oil price falling again. It had closed the previous session around 4% lower. It's gone down a further, what is it now, almost 2% down. Brent crude below $87 a barrel. That tends to help lift equities, but a slightly more muddied picture with the DAX being called lower. The Pan-European blue chip stocks 50 and the FTSE futures, though, expected to open in the green. We've seen a bit of an easing on Treasury yields as well. They had a bit of a choppy week last week after the intervention by Treasury Secretary Scott Bessent, saying that the Treasury will buy back longer dated treasuries to try and ease pressure on yields. Some of them advancing there, especially towards the longer end, but easing from the level that they had been at. And that, of course, has an impact on global yields as well. This is a picture on European yields, those easing slightly more as well. The Boston Fed president, in the meantime, has warned that the Fed may need to hike rates, quote, should evidence of sustained inflation progress, not materialise. Collins, who is not a voting member this year, called for policy to be nimble and added that she backed July's decision to hold. She went on to argue that without evidence that inflation's abating, it would be more difficult to rule out other inflationary forces being at play. Richmond Fed President Tom Barkin has warned of a future reckoning on America's debt pile. Responding to a question about US public debt topping $40 trillion, Barkin said, quote, "At some point, people stop buying your debt, and that's the risk out there," adding that it was impossible to know when a potential reckoning could come. The BlackRock Investment Institute has released new research into the evolving role of income within portfolios, arguing that the global government bond reset that began after the pandemic has continued into this year. Joining us now is Vivek Paul, Global Head of Portfolio Research and UK Chief Investment Strategist at BlackRock Investment Institute. Vivek, good to have you with us. Just flesh out that point about the reset and how we're still seeing it play out this year.
Absolutely. So I think wherever you look globally, in the United States, Japan, Europe, the UK, you are seeing government bond yields around multi-decade highs, potentially all-time highs. And that represents a structurally different environment for when I started my career, at least. You know, when we have an environment where there is supply pressure that is driving up inflation, there is renewed focus on the serviceability of those debt costs, and I think this is the world that we're in. It means that there's a reset, it means that there are income opportunities that just did not exist 5 years ago, but it also means that we need to be selective when we're looking at those income opportunities, because as you've said, I think there's continuing to be duration pressure. I think there's still the chance that yields at the long end go higher still, and therefore, yes, there's income opportunity, yes, this is a structural reset, but it depends. You need to be selective where you take that opportunity.
Yeah, I suppose the logical consequence of that you'd think if you can get good returns on safe as houses government debt, that would weigh on equities. But it's not. We've still seen equities rise. Yeah. How do you tally the two?
Yeah, so I think it's a really interesting point. And if you apply like that traditional cyclical playbook, it looks a bit confusing at first glance, right? As you say, equities going up. Normally, yields going up means all else equal, there's pressure on equity. But actually, if you look at the underlying drivers of what's causing that, I think you start to see that the structural dynamics all point in the same direction. And what I mean by this is an environment of the largest capex rollout and build out in history, right? That is something which means that we are going to see effectively, I think, the clearing price of yields shift, because we're going to see government bonds, we're going to see corporate bonds come to the market at a time where government debt still remains pretty high. So all else equal, all of this capital that's being competed for means the structural price of yields effectively goes up. That in and of itself doesn't necessarily mean it's a bad thing. So the driver of the yield change matters.
Let me get into the recent events then, because the Treasury Secretary, Scott Bessent's tried to shoo some of the bond vigilantes out of the market recently, shooed them over into FX, it seems, at this stage. But if you're right and you think yields are actually going to settle higher from here, where does it leave an operation like this from the US?
I think ultimately the markets will be convinced around the yield story when the structural underlying drivers are addressed. And I think that is the thing that shifts the yields pattern ultimately. And that's why I think, you know, the thing to watch for is less those nearer term announcements and more the structural pressures, which I think are not going away. So there continues, I think, to be upward pressure on yields from the structural inflation story, from that kind of capex rollout and the availability of capital. I think that ultimately will matter much more than the shorter term measures.
What you're saying to me is that we're now at the end of the runway, because for a long time we've been travelling on the same patch of tarmac, thinking that it doesn't matter that we have issues at home. We're still overspending, we've got budget deficits that go up even if it's not a crisis. So you're saying the runway is now really over for a lot of governments?
I think we just need to think about the inherent risks and opportunities differently, right? And I think the point being that you go back 10 years and there was like a a universal pattern of what happened, right? And the relationship of bonds and equities was different then. There was an environment where whatever happened, if there was a growth scare or whatever, yields would fall because people would expect effectively central banks to step in. That pattern, that environment we're in has shifted. It doesn't mean that I'm not telling like that this is a structurally bearish story. I don't believe that. I think some of the opportunities out there are enormous, but the way in which we think about the relative risks and opportunity, I think does need to shift. And that's why the role of bonds in an overall portfolio is much more about income, I think, than it is about the sort of structural diversification benefits that were true for a generation.
Well, let's talk about some of the volatility, though, because that jumps out to me. If you look at, say, the 10-year gilt in the UK, it has been on a fairly significant swing this year. It's about 120 basis points from high to low. Yeah. I mean, we've seen it even higher in recent years when there was a problem around Liz Truss. I mean, there was about 200 odd basis points to swing. But how do you navigate that? If we're talking about some stability in portfolio income, that's a very large swing to navigate.
Totally. And actually, this is why flexibility matters enormously, right? So the idea of thinking about an environment where it is always the case that a certain type of asset will yield certain characteristics, that's gone. This is an environment where, let's take the events of this year, as you've talked to. We came into this year, markets in general were anticipating rate cuts, right? That is not the environment that we're in now. And the scale of some of those rate rises have been pared back, but the round trip in expectations in a short period of time is just enormous. I think we should anticipate that the expectations around the future macro path continue to be volatile. This is just the world we're in. So when we talk about the opportunities in income, well, firstly, it's about being flexible within the fixed income complex, but actually there's income opportunities outside of those traditional asset class labels too. If we look across the equity markets, there's an opportunity to generate income from some parts of the equity markets through derivative strategies for instance. So the point being here that this is about flexibility. It's not saying that everything's always going to be fine, but if you are flexible, you're able to capture those opportunities when they arise.
I was just looking at the note which says yields have reset structurally higher.
Yeah.
Is that a recognition among investors that actually we may be living with higher inflation for longer and they are demanding that premium so that their return is not eroded, especially in the longer term, if governments are unwilling or unable to meaningfully cut their deficits? Central banks are more hesitant to act. They don't want to dampen growth in the jobs market. Is this investors sort of saying, look, we might be looking at higher than target inflation for longer than we thought before?
I think there's two things. I think one point, as you rightly say, is the idea that the average level of inflation has been repriced and expectations have shifted. And that's something that we've seen, and I think that will continue to play out. I actually think there could be even greater inflationary pressure than is priced in at the long end of markets. But in addition to that, I think another point that you touched on is really true, which is the relative risk around this stuff, right? The idea that, to the point I think made earlier in the question, historically we could have said, it's guaranteed risk-free, it'll behave in a certain way at all times when there's a growth scare. I don't think that's the world we're in. And so there is some risk there. And like any investment, it's about a balance of the risk that's out there relative to the reward. And investors are saying, I want more reward for taking that risk. I think they'll continue to say that into the future.
And then in terms of where people then seek the I suppose, the reliable, solid, dare I say it, boring part of their portfolio that brings stability. If we're seeing much more movement in bonds, where do they find that?
Yeah. Well, at a high level, I think there is no one easy, boring answer, which is the challenge in some ways. Because, again, going back to the past, you say, OK, I'm just going to buy a slug of government debt. It's always going to behave in a certain way. Now we need to be more granular. Now we need to be more opportunistic in terms of where those opportunities are. I think today you would lean towards the short end of the yield curve. So, high quality debt that does not have as much of that duration risk. But actually, even then, you can't expect that to do the same thing as the phenomenal assets of long-dated US Treasuries were in the past. I think we need to take that diversification benefits in different ways. It's being outside of the traditional fixed income complex. Maybe it's looking at some parts of the private markets, for instance. Maybe it's looking at diversified return streams, maybe pure alpha return streams rather than beta return streams. So there's no like one-size-fits-all ready answer. I think we just need to look at the overall portfolio more holistically. And I think if you see, like in our industry, the rise of this idea of a total portfolio approach is consistent with this. This is the idea that there is no easy answers anymore. We can still have phenomenal opportunities, but we need to think about things a little bit differently.
What's really interesting to me is in all this commentary, you've mentioned a lot about different opportunities, private markets, pure alpha you just mentioned, but no mention of emerging markets. Typically in this sort of conversation, we're talking about a slightly higher return profile. It would just typically be emerging markets. Why is that now edging out of the commentary?
Well, I wouldn't say it's a fair point that I haven't mentioned it before, but I wouldn't say that there's no opportunity there. And to the contrary, I think in the near run, I think some parts of the emerging debt complex are opportune for generating some of this income. If I think about the longer term as well, and we think about this AI transformation that's going to occur, that's going to be a global story. And there's going to be opportunities that exist across the spectrum. And indeed, it's beyond AI too. We see at a structural level opportunities, for instance, in India, which are not to do with the AI story necessarily, but a demographic shift. So, look, I think it's a fair point to make that I haven't kind of mentioned that thus far.
I was just wondering if it was off the radar, but so it's still on the radar.
I think it's still on the radar, but I think the point would be that, even that label of emerging markets, the world we're in where these structural mega forces are driving, it means that, the way we think about emerging markets, I think, needs to be different. It's a more granular thing. It's like different parts of emerging markets will have different exposures to different of these mega forces, and therefore it's less about EM, it's just where the opportunity sits globally.
Fascinating. Vivek, thank you so much for joining us. We really appreciate the commentary. Vivek Porthas, Global Head of Portfolio Research and UK Chief Investment Strategist at BlackRock Investment Institute. ECB Executive Board member Isabel Schnabel says interest rates must rise further to offset the impact of the conflict in the Middle East, as well as strong recent economic data. Speaking to Bloomberg, Schnabel said inflation is unlikely to return to a target in the medium term, and further loosening or further tightening could be necessary, rather. Now, the Bank of Japan is expected to accelerate its tightening campaign and hike its key rate to 1.25% in September, according to economists polled by Reuters. This amid pressure on Japan from inflation driven by the Middle East war and selling pressure on the yen. The yen intervention risk has prompted the start of a rotation into the Swiss franc as a carry trade alternative, according to analysts, with a weaker currency providing some relief for Switzerland. Speaking to CNBC earlier today, Stefan Gerlach, the chief economist at EFG Bank, gave his view on the Swiss franc.
One issue is that the SNB would tend to offset if there was an increase in appreciation in the Swiss franc. The SNB would step in, and they wouldn't like that. So I think that's an important factor. Another important factor, of course, is that the Swiss franc exchange rate certainly vis-a-vis the euro has been very stable. There's very little volatility there, and also the exchange rate vis-a-vis the US dollar has also not been very volatile. So a lack of volatility and the sense among market participants that the SNB would try to resist an appreciation of the franc, I think are big factors too.
And for more on the unintended consequences of Japan's historic effort to prop up the yen, you can check out CNBC.com. And remember, you can also subscribe to CNBC's The Daily Open EMEA newsletter, giving you a quick, succinct recap of the key markets, related stories from overnight, as well as a look ahead to what's coming up on the trading day.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC+.
When Amanda Lacaze took over Lynas Rare Earths, the company was on the brink of collapse.
I put my hand up because people in the business deserved someone to give it their very best shot.
12 years later, she's leaving behind the world's largest rare earths producer outside China. Can one company really challenge China's dominance?
I'm confident. We've got good people in Australia, we've got good people in Malaysia. Not only can we compete with anyone, we can win.
Find out more on Managing Asia.
I think if I knew how complex was trucking, I think I would have thought again. So the unknown was very helpful.
Gaurav Biswas thought he had landed on a simple idea.
Uber, but for trucks. There was just one problem. He had never moved a truck in his life. Then one day at dinner with friends, he saw a problem he had never thought much about.
He was constantly having to walk out of the restaurant, and we could see that he's arguing or shouting with somebody. I was like, hey, is everything okay? He's like, oh, I have 7 containers that have to go on the same vessel tomorrow. Then I said, hey, you should have an Uber of trucks.
That idea became Trucker, a digital freight platform that connects companies that need to move cargo with the truck owners and transporters that carry it.
Trucking is extremely important as a sector because whatever you touch and feel, consume, it's all touched a truck. Whether it's a seaport or an airport or a factory, the trucking is that connector.
Siemens Energy has said it plans to sell most of its industrial division to instead focus on gas turbines. The unit supplying industrial customers accounted for 15% of group sales last year, but the company plans to divert efforts to the booming utility sector. The price of liquefied natural gas in northwest Europe has hit its highest level in more than 3 years as conflict in the Middle East continues to strain supply. The cost for 1 million British thermal units at the beginning of the week was more than double the price a year ago. The UK's energy market regulator Ofgem has approved a 4% rise in the energy price cap, meaning bills will rise by £60 on average from October until the end of the year. That means the typical household will see its annual bill rise to more than £1,700. The next cap, which will cover the first quarter of next year, will be announced on November the 25th. Speaking to CNBC, Ned Hammond, Deputy Director of Policy at Energy UK, outlined what's driven the spike in prices.
The thing that's really driving it is the higher gas prices that are being caused by the conflict in the Middle East. Now, as you say, we don't import directly from that region, but gas prices are set on international markets that are affected by global supply and demand. And so the shock to supply there affects prices right across the world, and that means that prices are higher in the UK. And we're particularly exposed because we still have a significant proportion of gas in our electricity generation. It sets the price about 85% of the time, but also households are generally relying on gas for their heating. So about 85% of households in the UK use gas for heating. And so that means a significant portion of our energy costs are directly reliant on gas. And so we're directly affected when global conflicts like this happen.
Shares in Zoom fell in extended trade after Q3 guidance came in short of expectations. The company now expects third quarter earnings per share to reach as high as $1.48, missing forecasts of $1.50 a share. NVIDIA has partnered with AI startup Perplexity on a local-first AI platform as the companies look to move AI into local devices and away from data centers. The local AI agent called Personal Computer will first operate on NVIDIA's own desktop computer, along with other devices that run NVIDIA hardware. Kate Rooney for this report.
NVIDIA and then you've got AI startup Perplexity are making this push to bring AI directly to your desktop versus running it through all of the major cloud providers. So Perplexity this morning out with that announcement saying it's the first what they call full stack AI platform that can run entirely on local hardware, so local computers. It is going to run on NVIDIA's desktop sized AI computer that's designed to really run some of these large AI models locally. It's called DGX Spark. Perplexity said during a demo that the hardware partners, more hardware partners, I should say, are going to be coming. And the pitch here that they're making is about lower costs. So instead of sending every prompt, every piece of data out to a data center, to a cloud provider, the AI can just run directly on this machine. So potentially lowers compute and then token costs, which is a big topic for a lot of CFOs we talk to, but also potentially help keep some sensitive data private so you're not sending it out there to the cloud in this example. So Perplexity, though, still does say if a task is going to require more powerful frontier level reasoning, the system is still going to be asking a user for permission, and then it still needs to send a portion of that out to the cloud. So interesting note as well, it is going to launch on Alibaba's open source Qwen model. That will happen locally, and then it does say NVIDIA's open source model is going to be coming soon. Perplexity not alone here. We've seen Apple do this with the Mac Mini. It's been betting big on local hardware and AI, and then has this partnership with OpenClaw, if you remember the buzzy AI agent. And Microsoft is also pushing into some of these AI devices as well. The big question is going to be performance. So some of the most powerful AI models still do need to run in the cloud. Perplexity's system itself will still need to send those harder tasks out to the cloud with user permission, as I mentioned, so not entirely going to be able to run locally. And then for NVIDIA, it is another signal. This company is positioning itself in every angle of AI, including some of these smaller local hardware plays. It does also come, guys, amid some M&A reports between these two companies. NVIDIA reportedly looking to buy Perplexity for about $30 billion. No comment from either company on that.
CNBC's Kate Rooney with that report, and really pointing to the breadth now of AI and the broader adoption. And now we're going to return to a story we did mention earlier. OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the ChatGPT maker. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Dresser. And to hear more on what OpenAI had to say about the departure, you can check out CNBC.com. I mean, hard to say much about one departure, but it is the string of departures I think that the market is looking at. And what it says, is it simply just a reorganization before the IPO, or is it insiders? And we're talking very significant insiders here saying something they don't like about the business and deciding to leave before it goes public, before there's more scrutiny. If we think about Chris Malone first up, joined the company back in March 2025. Very recent to be talking about a departure from a particular area of the business where there's huge demand. We're talking about the data center build out. And you may recall he joined OpenAI around the Stargate launch, the big announcement to build out that infrastructure. So it was a pivotal moment for the company, only just a year plus to then seemingly departed and left the business. So the question remained, why did he leave? Was he pushed out? Did he decide to go? And what is the background to this departure versus the rest of them?
Yeah, and it was only just recently that a deal on data centers had been announced, that 10 gigawatt data center lease in Ohio in partnership with SB Energy, obviously part of SoftBank. And then you've got the added complexity of the political issue of the pushback we're seeing from the public against data centers and the impact they have on the local energy costs, water usage for cooling, all of those factors. We're seeing perhaps more resistance than there was initially, and for the company to lose someone who was overseeing that, that data center built out, and according to all reports, had a distinguished career previously at other big tech companies, Meta and Google before that. The key question, I think, is where does he go next? Where might he go? Has he secured another role? Is it with one of OpenAI's rivals? These will all be questions that investors will be looking for answers to, especially as OpenAI prepares to go public. And it is having to justify this valuation at more than $850 billion. And as you say, to lose one senior executive may be unfortunate. To lose several starts to look a little careless, maybe.
Yeah. Don't forget, it was only a couple of months ago we were talking about the thirst for talent. Very big priced salaries that were effectively signed to try and secure the key talent. Now we're talking about departures.
And I'll tell you what we'll be talking about shortly. European market open, because it's almost 8 o'clock, just a few minutes away. European futures, well, they're a slightly improving picture. Almost all of them being pulled higher. Let's see if that changes. We're back in a few moments.
Combat sports icon Ronda Rousey. She's conquered the UFC, dominated the WWE, and now she's sounding off on both.
It's extremely oversaturated right now. There's too many fights.
San Francisco 49ers owner Jed York. He sat down with us to explain how he turned the team around and the critical lesson he learned. Plus, influencer Jesse Rydell, also known as Jesser, explains his simple ingredient for online success. This is CNBC Sport on the Record.
It's time for your call sheet, where we look at the topics driving the trading day ahead.
We've done a deep dive into the portfolio.
The chip super cycle is going to continue.
There are going to be haves and have-nots. I think it's a much bigger risk.
They're going to break down the headlines.
One thing no one's talking about is a labor market comeback. It looks better.
There are some opportunities here.
Morning Call with Morgan Brennan. Weekdays, CNBC. Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budgets are. We would like
Welcome to Squawk Box Europe. It's 8 a.m. here in London, 9 a.m. CT, and stock markets across Europe are opening up for trade. We're picking up on the back of a fairly positive day yesterday. Bounce across the board, some big tech names seeing some action. And we had European markets also on the front foot yesterday. So the early signals this morning, slightly positive, although it still looks a little bit tentative, doesn't it, Ben?
Let's dive straight into the outperformers board, and Basic Resources jumping straight out of the gates to the top of the gainers, more than 0.8% higher. Travel and Leisure has had a bit of a rip-roaring week so far, adding another 0.2%, really benefiting, we've seen, from the fall in the oil price. Brent was down around 4% yesterday, down another more than 1.5%, so clearly below the $90 a barrel mark, comfortably below that. The travel and leisure sector has been really sensitive to the oil price moves, but benefiting from some of that easing in the energy costs. Also on the board there, banks advancing 0.5%, similar amount for household goods. That's the upside. There's always a downside, isn't there? I know, I'm sorry, but we have to show you the red board as well. Oil and gas, unsurprisingly there, I was talking about the oil price easing and the oil and gas majors really tracking that oil price lower, dragging that basket of stocks to the sharpest of the laggards. Media stocks giving up ground as well. Tech down about 0.1%, seeming to shrug off some of the optimism, I suppose, we've seen as US and Asian markets have been positioning ahead of Nvidia's results due out later today. Once we get those, we'll see what happens on those moves. And industrial goods, they're on the board of underperformers, but that basket of stocks flat as we approach 2 minutes exactly into the trading session. That's the sector picture. Let's break it down for you regionally. And plenty of green to be found across the board. The CAC Caron leading the way higher, 0.4%. FTSE 100 below the flat line, just about, but unsurprisingly there, given the oil and gas majors listed on the index, they could be feeling some of that downward pull from the price of oil slipping slightly. Of course, we'll keep track on the markets and bring you updates as and when they happen.
Let's get some thoughts on the markets with Natalia Lipikina, who is head of EMEA Equity Strategy, JP Morgan Private Bank. Natalia, thank you so much for joining us. To me, the stock market looks like it just lacks conviction at this point. We've come off some of the highs. There is unconvincing trade at times around technology, and then we sell off aggressively again. Your call, though, on the S&P 500 is that we go higher from here into next year, but roughly another 8%, you see.
Absolutely. Thank you so much for having me. Good morning. Our conviction still lies with the super cycle that we're seeing in earnings. We're just wrapping the second quarter earnings season, and the earnings are pointing to 30% ex some one-off time gains in the US, which is the 7th consecutive quarter of double-digit growth. So we're definitely seeing a very strong corporate environment in the US, and this is the reason why we continue to be positive. I think we're now just in the period where we still need to hear from companies, and I hope today's result, will reignite this optimism in the market. But from us, the reason why we're positive is because of the earnings.
There's no doubt the earnings have been very strong, but those who are concerned about the market from here are worried about an AI bubble. There's overinvestment, there's circular financing taking place, concerned about the escalation in bond yields as well. Lots of pressure coming from different corners of the investing universe. How much of that impacts the base case scenario?
Well, definitely there are risks, and the market is definitely questioning what is happening with the AI trades. But I would say for us, what is really evident is that the AI infrastructure build-out will continue to rise. We heard from the hyperscalers that they're not stopping their capex plans, which is super important for the whole semiconductor industrial trade that we're seeing. For us, the reason why we're positive because we demand supply. Demand is very strong. Supply is very, very tight. So this is the reason why we think there are still lags in this market, even though the market is questioned right now.
But just to pick up on that point, because the view is not really supply-demand necessarily, hearing more about pricing pressures, and that's where the market is worried that there's margin erosion around the corner.
I think the market also questions around whether those hyperscalers will be able to show the return on investments, which has been the case for the last 2 years, basically. For us, what is really important is when you look into the cloud growth and also the backlog of those companies, they're actually incredibly strong. So even though those companies are increasing the capex, the fundamental piece is still there. And hyperscalers need semis and another way around as well. So we think that overall, you're still seeing a very robust environment.
Natalia, I hear what you're saying about the S&P 500. It's been powered by such a strong earnings season. Year to date, what is it? It's up around 12%. But in all the excitement around AI, do you think people are missing the almost double return they could have got by piling into the small caps, the Russell 2K? It was up almost 22% year to date. Is the excitement and the buzz around the tech trade distracting people from where they could get slightly more boring but steadier gains?
Well, it's interesting because what Karen was mentioning is what is the risk in the market? The risk are that the rates just continue to go higher, right? This is one of the risks. And in that scenario, you basically want to be in large cap versus the small caps, because ultimately those are much levered companies, which will be much more sensitive to the rates move. So therefore, our preference for large versus mid or small caps.
And then in terms of what could throw a wobble into the landscape, how concerned are you by the speech that we get from Kevin Walsh at the end of the week and the effect that could have if, I don't know, if he signals a hawkish tone or if he signals that he's not going to give any tone, and that leaves markets to their own devices to figure out what the Fed is going to do and whether inflation is going to be brought under control?
Yeah, I mean, look, inflation data so far has been quite contained, despite the market being worried about inflation. At this point, the market prices 40% chance of a head hike. We don't think that is the risk. We actually think that the Fed probably will hike in September. We also have the ECB hiking as well. For us, it's more the language of, where we're going from here. What matters to the market is, unless we're having a very strong hiking cycle, which we don't think we are, that the market can walk through what is happening in the markets. We actually think that the Fed hikes or the ECB hikes are very positive for the sectors like financials, right, which has been one of the best performing sectors in the last couple of months. So as long as we're not seeing this very restrictive hiking cycle, we think that the equities can do really well.
Yeah, I mean, I just picking up on your point, I know your focus is on EMEA equity strategy, and I was reading earlier this week that actually in recent years, the return investors have got from some of the big European banks has been far better, has outperformed the Mag 7. Is that an underappreciated sector, do you think? And if people are latching onto that, is it too late to jump on that, or is there still some room left to run for the European banks?
We still think there is room to run. I don't think it is as underappreciated as it has been in the last couple of years. To me, it's really the combination of cyclical and structural things that we're seeing in the European banks. Structurally, they're just much better businesses than they have been 10 years ago. Plus, the rate environment is very different from, the last couple of years, because we're still seeing very strong rate environment. Now, cyclically, and we just went through the earnings season, and what you're seeing is very strong loan growth, both in the US and in Europe, and a very strong capital markets activity. So some of that may fade as we go into the third quarter, but the fact that the corporates are doing so well, back to the first question, why we're positive on the market, is the earnings, and part of that is reflected in the financials as well. Plus, when you marry that with valuation that is still not very demanding, European banks trade at 11 times next 12-month PE. It's not very expensive. We think there is still
If you chart a lot of the sectors in Europe, it looks to me as though it lacks momentum. Basic resources excluded, where you're seeing a fairly strong run-up thanks to the precious metals. What's going to bring that momentum back to the banks, the industrials, the semis that you like in Europe?
So on the overall European market, I would say we have a much bigger preference of the US and EM versus Europe, because you have a much bigger exposure to AI, basically, right? And the earnings growth, yes, we had super earnings season in Europe, but it's still not as strong as in the US, right? For the European banks in particular, the ECB hike, I think, will be quite important, right? If it's one and done, the market will see it as a positive rather than going into very restrictive territory. So for us, that can be one of the momentums and one of the catalysts that the market is probably lacking. But overall, I would say the preference still remains with other markets, because as you mentioned, what we need to see for the Europe to perform is a domestic story, which was very strong and apparent last year with the German stimulus. But for the time being, we're just not seeing that.
What's your view on some of the volatility we're seeing in the semis, though? And if we talk about South Korea, I mean, that's really the epicenter of some of this situation. We've seen the SK Hynix, the Samsung story taking off, and now it's come back. And even with the shakeout, it still feels as though that foothold is a little bit uneven. Is that coming? Do you think that we've now managed to flush out some of those over-levered positions?
Well, it's interesting you say that, because I think that was one of the reasons why we had such a big, volatility in the market on the way up and down, because of the positioning that you had in levered ETF in particular. From the data that we're seeing, we think we're probably at the end of that. So what the market is now need to see is the confirmation that the fundamentals are still intact, which I think, again, coming back to the report tonight, will be an important one for the AI trade, because what people will be looking at is the confirmation of the whole AI infrastructure trade, right? These companies, I mean hyperscalers, are spending more than 700 billion this year on infrastructure. We don't think that we're peaking now. We actually think that it will go higher from here in the next couple of years. So we need to see the confirmation that, yes, semis still have a very strong demand, but at the same time, supply, which is super important, because if supply is rising, we may be close to the end of this trade, but we're not, just because supply is not reacting as fast as demand is rising.
Are there potential clouds gathering for Europe on the horizon in terms of, I was just mentioning earlier in the programme, price of liquefied natural gas in northwest Europe, highest level in over 3 years. For example, 1 million British thermal units at the beginning of this week, more than double what it was a year ago. The energy price cap for households in the UK has gone up an extra £60 on the annual bill. All of that could weigh on consumer spending, business spending, if they're feeling the effects of it, and investment and so on. Reuters also reporting this morning that they think sources are telling them that the European Central Bank is poised to hike rates in September, possibly not beyond that, but that's what they're reporting. Are we starting to see things that could spoil the party for the European equities that we've seen?
Well, interesting, I found that, first of all, the European equities have been quite resilient, even though, oil price has been hovering around 90 to 100, so corporates were able to manage it through, which is great. We're seeing a bit of divergence between the European gas and oil. It's quite unusual, so I would probably expect them to go in tandem, either on the way down, on the way up. I think the bigger risk that I'm seeing in the market is actually FX. So what we've seen is a big move in euro on the way up, right? We're trading around 116, 117. If we were to move to, say, 120, 121, at some point it's obviously great because people want to buy probably more Europe. But the reality is that can impact the European exporters, because ultimately they want, weak euro rather than the strong one. A very similar story to 2025. So I think that can also be the risk for the European market. And one of the bigger risks probably for the global market is obviously what is happening with rates. So if we're seeing, higher rates for longer, and probably the move that is a bit fast, that can, cause volatility in the market and potential pullback.
OK. Natalia, thank you. It's been broad-ranging. Thank you for fielding all our questions, giving us some insight on all of those. Natalia Lipkina, Head of EMEA Equity Strategy at JP Morgan Private Bank. Thank you for being with us as well. And stick around because coming up on the show, the countdown's on to NVIDIA earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170+ global markets. The best informed investors choose Interactive Brokers.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates.
A lot of strong numbers this morning.
Listen wherever in the world you are. Download the CNBC app now.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Halftime Report, weekdays streaming on CNBC Plus.
NVIDIA is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date. But questions remain over whether the company can still impress investors. Options traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. Let's get to Arjun for more. Arjun, I thought it was fascinating. I read a report this morning that it could be more predictable and slightly less exciting in terms of the swing. But to me, $280 billion either way could be still fairly significant for markets.
Yeah, it's significant for markets. I think it's also a significant company still for the broader AI story here, right? Because this has been a company that's been at the heart of the infrastructure build out. It's been at the heart of this AI story. It's a company that's financing a lot of the companies in this AI industry as well. And so very, very important. And I think what's going to be key here is we know expectations are high. The market's looking for almost a doubling of revenue in the quarter. But really important, I think, is going to be that guidance of around, I think the market's looking for $104 billion in the current quarter as well. And NVIDIA is not only going to have to meet that, there's going to have to be a significant beat. And the key to that really is going to be around how it talks about Vera Rubin, this next generation platform, and how it talks about production, the demand, and transitioning customers from the current generation of Blackwell through to Vera Rubin. And that's going to be pretty important for visibility for investors into 2027, which is really what the market is looking for at this point. They know the story here, that NVIDIA continues to put out strong numbers, but what is new? And I think that's going to be very key here around this Vera Rubin story and the next product cycle.
So you and I have been talking about this concept called edge computing for many years. At all the tech events, we spoke about it and the type of infrastructure that provided to the market sort of flexibility. But it's something increasingly that NVIDIA has been talking about. And even in the last fiscal quarter, they've repositioned the earnings around data center and edge computing. Talk to us about the significance of edge computing.
So the idea here is that right now a lot of these AI large language models are run in the cloud and these large data centers powered by NVIDIA chips. But the view is that actually moving forward and in the future, there's going to be a lot more uses for AI that runs locally on a tablet, on a phone, on a laptop, but also extending that to a car, a robot, or other kinds of devices like that as well. Physical AI, as the term is dubbed. And so when that happens, what you need is a lot of things. You need the hardware and the chips on that device to be able to process that AI. So that's going to be pretty key, and that's an area NVIDIA is now looking at, as well as if you think about ARM, which has been the blueprint for so many smartphone chips, as well as Qualcomm, as well, a company that wants to play in this edge area. And so I think NVIDIA here is looking towards the future, and this is part, I think, of the narrative. NVIDIA and Jensen Huang have been trying to put out to the market that, yes, while we are the gold standard right now for the GPUs in the data center, the story over the longer term is much more than that. It's around edge cases like robotics, like autonomous driving, like smartphones, laptops, etc. And it's about these new areas. It's something I don't think the market's latched onto at the moment and are believing at this point.
It's small numbers, to be fair. I mean, it was 6.4 billion in terms of revenue the first quarter versus 75 billion that poured through in the data centers. So it's still about the data centers. But if you're looking to the future and why you'd be holding NVIDIA stock, it's one of the crucial things, right?
Yeah, it's one of the key parts of the story the company's been talking about, the edge use case. I think there's still a lot of question marks about how much, I think, of the processing is going to happen at the edge. And I think that's why it's still very hard to make a call on that. But certainly, if you look at the way that companies like NVIDIA, Perplexity and others are talking, they really strongly believe that a lot of this is going to be processed on the edge.
Arjun, we also want to just discuss what's happening in the rest of the landscape, because OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the ChatGPT maker. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have also recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Dresser. So to the point around the departures here, it does create this setting that perhaps there is something ill at work behind the scenes, that something is not quite right. The messaging from management has been that, look, it's just repositioning the executive team before an eventual IPO. But I think it's giving the impression that there's something not quite right.
Yeah, it's not a good look, that's for sure. When we think about IPOs and companies that move towards an IPO, I think OpenAI has indicated that this IPO is likely going to be, by next year, either this year or sometime next year, which is quite close, really, in terms of IPO terms. It's not that far away. And usually, when you look at companies that are going towards an IPO, this is set. Their management team is set. They've hired the CFO, they've hired the Chief Revenue Officer, the Chief Operating Officer, the CEO's set towards an IPO. The changes usually ahead of an IPO do come a bit before this. So I think that's also where the concern is that, hold on, are we not this close to an IPO? There's a lot riding on it given the valuation, and there's a lot of work OpenAI needs to do to justify the valuation as well. So I think it's giving that impression, as you mentioned, that something's ill at work behind it. Hard to know. I mean, there's been different reasons. We look at Fiji Simo, for example. She stepped down because of health reasons. You had other executives saying that they want to do their own thing and own startups, etc. Often you see that out of startups, but certainly. The impression I think OpenAI is giving to the market right now is not one of confidence.
Well, I mean, the executives themselves, typically, if you've been with the company for a bit and you've been part of this process, and it is a hot company. It is one of the big ones when we talk about AI. Surely you want to see how it performs on exit. You want to be sticking around for the IPO, because typically, if you think the stock's going to go up and land well in the marketplace, you're going to get rewarded. So does this suggest the executives don't think it's going to land well in the marketplace as well?
And I suppose we talk about the competition for top talent, and I suppose the concern for OpenAI is if these very talented senior figures are not working for them, they're potentially then working for a rival.
And other disruptive startups. One of the things we've seen, no doubt, is that there have been a rapid pace of technology development around AI. You know, all of a sudden OpenAI is ahead. All of a sudden a new open source model comes out and are beating all the benchmarks. And so it's incredibly competitive at this point in time. So there is also potentially a sense that some of the executives feel, given the experience they've had in OpenAI, they could go out and do something by themselves that could challenge some of the incumbents in the market.
That's fascinating. That would be interesting if they clubbed together and started their own. I mean, it's got the makings of a Netflix drama or something.
That's what happened, Anthropic.
Yeah, exactly.
Yeah. You've seen a lot of these companies, people who are starting companies coming out of Google, DeepMind, Anthropic, OpenAI, elsewhere to then go on and start their own companies.
Yeah, indeed. Arch, thank you very much indeed. And to hear more on what OpenAI had to say about the departure, check out cnbc.com. The Canadian administration has unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. The move doubles existing levies on steel and aluminium to 50% and introduces new 50% duties on dairy, furniture and clothing. The retaliation is due to affect $20 billion worth of annual US exports to Canada. Megan Casella has the details.
Canada saying that its retaliation will match the United States tariffs dollar for dollar and rate for rate. So Canadian officials announced tariffs ranging from 15 to 50% on about 700 U.S. goods. Items include everything from seafood and dairy to textiles, wood and paper. Some of the most significant duties targeting American steel. Those tariffs will double to 50% to match the U.S.'s rate. All of it set to take effect 2 weeks from today. Now, a lot of strategy buried in this announcement. For one, the list of goods hit appears designed to bring the most economic impact to states with big midterm races. Tariffs on metals and motorcycles, for example, will hit Michigan and Ohio. The seafood tariffs are going to hit Maine and Alaska. And then secondly, Canada also announced today a $7.5 billion aid package to support Canadian businesses and workers that are hit by the U.S. tariffs. They're really suggesting with this move here that they're bearing down for what could be a drawn-out fight.
President Trump has threatened to rename Lake Ontario to Lake America as tensions between the US and Canada continue to escalate. The lake borders both the Canadian province of Ontario and the US state of New York, and it echoes a similar move last year to rename the Gulf of Mexico to the Gulf of America through an executive order. The UK Prime Minister Andy Burnham is due to have his first meeting with Donald Trump next month, according to reports. Mr. Burnham announced plans to attend the UN General Assembly in New York after chairing a meeting of the Coalition of the Willing in Kyiv this week. UK officials are reportedly trying to set up a one-to-one between the Prime Minister and the President, but at the moment, no plans have been confirmed. Suppose those first meetings between a new Prime Minister and the US President can be pivotal, can be instrumental. I mean, who can forget that first time that Keir Starmer went and visited President Trump, and he did that thing with a flourish, and he said, "Oh, what is this I have? A letter from the King inviting you to a state banquet and a state visit." I mean, once you've done that, where do you go? I don't think they can offer another state visit, which is, would be the easy win to establish the relationship between Andy Burnham as new Prime Minister and President Trump. But let's see, let's see what happens.
Well, Burnham is expected to tackle the agenda for Ukraine. I mean, that has been one of the pledges, trying to drum up international support. So it feels like it'll be very high on the agenda. But even before a meet and greet where there's any established rapport, that could be quite difficult to achieve, because we know how Trump works. If he likes the person, then it's more likely that you end up with good outcomes for the country or whatever you're pushing in terms of a campaign. So let's see what the relationship looks like. And I think for most of us, we don't have much background on Andy Burnham and how he works in this type of setting. It's new for us, or we haven't seen him in this type of scenario on the world stage.
True, but to the point that you make about getting off on the right foot with President Trump, we do know that Andy Burnham has talked about having a pragmatic approach to exploring more North Sea oil and gas. That went down well with President Trump. He commended that on his Truth Social platform, but he could then find himself on the back foot. Andy Burnham could find himself on the back foot if Trump chooses to go in hard on the UK stance on the Iran war, and maybe picking up on the fact that the UK didn't let US forces use its bases in the initial stages, and he may be seeking further assurances about the UK's willingness to stand behind the US on that matter. So a lot to consider and a lot to analyse and dissect when that meeting happens.
Yeah, if it happens, will it be New York, will it be DC, will it be September? A lot of dangling questions still. Ahead on the show, Fed officials look forward to a rate hike as one warns of a future reckoning over the US debt pile.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long.
End users are using our AI even more frequently.
Are you heading into a record Q4?
We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
This is becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented. This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange and it's been awesome.
To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Never miss a moment.
Cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices.
Non-technical people can create a website, can write code. The same thing will happen in financial services.
If you're diagnosed with melanoma today, and I'm diagnosed by the same doc, you and I will get a different chemical. It's totally individualized because we know today cancer is a disease of DNA.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. The countdown is on to Nvidia earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking executive as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbor escalates. Oil prices decline as Iran says it has restarted talks with Oman, raising hopes that the Strait of Hormuz may reopen soon. We are now 30 minutes into the trading session and a look at how markets are performing. We have pulled lower again on the FTSE 100, about 0.2 in the red, but still above the 10,800 point mark. The DAX is also off to a slightly weaker start, but you can see we've got decent gains on the French market. That's really carrying the torch for Europe this morning, and a slight increase on the Italian market. So very mixed across on the core markets here. In terms of the sectors, let's take stock of what we've got. We are, of course, picking up on that Wall Street lead. Technology is one of the big performers. Nvidia, the stock we're watching after hours. But so far, in terms of the concentration, it really is around some of the geopolitics and what we're hearing out of the Middle East, the pressure campaign on the economic side, and some negotiations, what that means for any stability. And travel and leisure is seeing this as a positive sign. You've got a bounce of near on 1%. Household goods are improving too. Don't forget, it has had a recent sell-off. some of those big luxury stocks have been under pressure in recent weeks, but we've got a pop there this morning, more than 0.8%. Basic Resources continues that very strong run again around the precious metal story, the debasement trade that has happened thanks to the intervention in the bond markets that has supported the trade in some of the gold and precious metals, and Basic Resources really still reflecting that. Construction trades firmer too. Some of the worst performers, a couple of patches of red still here in Europe, and that is oil and gas sliding 1.5%, reflecting the retreat in the crude price. Tech under pressure despite a fairly decent trade, and perhaps it is usually the reaction where we see the beat from Nvidia, but the stock still sells off. So just an air of caution here in Europe today. Media stocks slightly down along with autos and parts. Now to US futures, we are rolling off the back of what was a positive session yesterday, modestly upbeat across the board, but we are seeing a little bit more tentative action before the start. Red signals across the board, Ben.
Quote, should evidence of sustained inflation progress not materialise. Collins, who is not a voting member this year, called for policy to be nimble and added that she backed July's decision to hold. She went on to argue that without evidence that inflation is abating, it would be more difficult to rule out other inflationary forces being at play. Richmond Fed President Tom Barkin has warned of a future reckoning on America's debt pile. Responding to a question about US public debt topping $40 trillion, Barkin said, quote, at some point, people stop buying your debt, and that's the risk out there, adding it was impossible to know when a potential reckoning could come. The structure of the US economy could be curving away from the so-called K-shape as lower-income households catch up. This is according to Treasury Secretary Scott Bessent speaking to CNBC. But some economists still see divides, and Sharon Epperson has this report.
The K-shaped economy has become shorthand for an economy where higher-income Americans pulled further ahead in their wealth, spending, and financial security, while many lower-income households struggled to keep up. Treasury Secretary Bessent says the economy looks more like a C as this gap between income groups begins to close. Bank of America Institute data shows after-tax wage growth for lower-income households, the yellow line, accelerated in July, surpassing higher-income households, the orange line, for the first time since December 2024. Spending growth also converged last month as lower-income households' total and discretionary credit and debit card spending grew, while middle-income households slightly lagged. Some economists say that doesn't mean lower-income consumers are truly gaining ground. Many Americans at all income levels are still under pressure.
It's not just lower-income families. It's median-income families, higher and upper median-income families, but also people that have strong means that are dialing back some of their spending and being more cautious with how they spend, where they spend their money.
A new report from J.D. Power finds concerns about gas prices are easing, while worries over housing costs are close to becoming the second largest source of financial stress for consumers. Housing costs remain a particular pressure point for younger Gen Z consumers, and some economists say age and life stage, more than any letter of the alphabet, may be a more useful way to understand who is feeling the most economic pressure in the months ahead.
Our next guest says that Europe offers a deep and attractive opportunity for private equity, pointing to strong and resilient returns on the continent despite modest economic growth. Carolina Espinal is Managing Director at Harbour Vest Partners and joins us now. Carolina, very good to have you with us. Just explain what leads you to that conclusion about Europe and private equity.
Yeah, absolutely. I think a lot of people focus on Europe at the macro level and talk about the low growth environment that we have in Europe, and as well as the geopolitical challenges. But I think the real opportunity that people miss is the fragmented nature of Europe really yields an opportunity for investment. So when you think about private equity investing, it's not investing in the macro, it's rather investing at the company level and really identifying opportunities to create value within businesses. And that fragmented nature of the market allows for it to build not just scaling operations locally, but to build regional leaders.
In terms of the returns that investors would get in private equity in Europe, how does it compare? Is it favourable with the US?
So if you think about the private equity managers operating across the globe, the average investor is typically yielding something like 15% IRR returns. The top quartile investors are able to outperform that and generate close to 20, 25% IRRs across the cycle. And what you're seeing in Europe is a similar level of performance. Where there's a real distinction is in terms of relative performance to public markets. So if you think of the public market investor, those accessing via Europe, there's been underperformance relative to the US public equities. So when you think of that alpha that private equity can generate on top of that public market performance, you would really, as an investor investing in Europe, want to have access to private markets.
And then in terms of the way that it's evolved in Europe over time, the landscape around private equity, what shifts do you see and which are the most significant?
Absolutely. So I've been investing in Europe for over 23 years and HarbourVest as a manager for close to 40 plus years as well. And we've seen tremendous shift in terms of what managers are doing operationally. And we saw the real marked shift post GFC, where particularly managers that had focused on financial arbitrage or leverage as a source of value creation really did not continue to deliver in a new environment. And we've seen the continuation of that and amplification of that since 2021. So really what shifted in the market is operational capability that managers have built within the team, and goes back to that opportunity that I mentioned around fragmentation. In Europe, passive investing is really a challenge, but if you have an active manager, it really creates an opportunity for investing.
Just a quick one on the lack of exits in the market, because there are a lot of reports about the amount of reliance now on credit. There's refinancing, pushing out some of the maturities. What do you make of that cycle that we're in?
So it's interesting because since 2024, we've seen improvement in the exit environment. Actually, the first half of the year, on a global basis, we've seen close to $1 trillion of exits, which is an amazing feat. If you think of 2021 as being the peak of exits, it was really around $1.5 trillion. So we're seeing a recovery, but it's not even. And so when I think people talk about the liquidity and, people use terms of assets that have been ready for liquidation and have been held up and considered zombies, that is something that is more a reflection of the percentage of NAV that is still being held in these portfolios and that has not converted to distribution at the pace that we had seen historically. And so the liquidity that we're seeing in the market is phenomenal, but it's, it's double to what we saw last year. But what's happening is that it's not even, and so investors are feeling that as well.
That's fascinating, because we did feel like we're talking about a lot of exits, but still to feel the reliance on private credit to try and smooth over some of the rough edges is quite interesting. When you say it's uneven, what areas are investors still cautious around? Is it sort of by sector? Is it AI disruption? What areas are some of the private equity firms really struggling to offload certain investments in?
So the reality is that private equity does encompass so many sectors and stages of investment. So everything from seed to venture, early stage, to large scale buyouts. Leverage really only applies to the buyout side. So you have a core part of the market that's venture and growth that is really attractive and doesn't even tap into leverage. But I think as investors and managers that are operating private equity, they're really trying to understand what is the opportunity for companies over the next horizon, over the next decade, and tap into those opportunities. So I would say it's really more at the micro level of what companies and what the opportunities are for those companies within sectors, as opposed to complete, staying away from software, for example. I think there's some great software businesses that are going to be AI enabled and be able to do well. So it's not just a blanket view.
How easy is it for private companies that are not within that AI tech buzz and that space to attract the interest of private equity? Is there an appetite among private equity investors for the more traditional sectors and industries?
Absolutely. And if we go back to the starting question around the European opportunity, it's that mid-market that is really compelling, particularly in Europe and also in the US. And that's the traditional businesses. If you think the core part of activity in the market, 40% of those are transactions that are 100 to 400 million in size and value. And those are traditional businesses. They might be, whether it's air conditioning pumps businesses or traditional HVAC businesses, where really AI may accelerate and make their businesses more efficient, but it's going to be a business that will continue to grow sustainably. And really, that's predictability is really what private equity managers look for in a business.
Just talk to us about Europe, because there's been so much motivation in Brussels for private equity to be more involved in a lot of investments across Europe, a real financing vehicle, yet it hasn't been as forthcoming as it always is in the United States, much deeper financial markets. What do you see in Europe where there is an opportunity for private equity still to step in and support Europe? Because, let's face it, growth has been sadly lacking here.
Yeah, and there's been a tremendous push, as you say, from Europe to really have institutional investors support a lot of the build in Europe that's required, whether that's on the infrastructure level or to the growth of businesses. And we have seen an increase. If you think about a decade ago, there's been six-fold the level of investment in growth and venture than there had been previously. So there is momentum building. There's 350 companies that are valued at $1 billion plus that are VC-backed or originally VC-backed, and that's up 18-fold from what it used to be. So I think that interest is building and the momentum's building, and the urgency is important, particularly as we think about just European sovereignty. But I also think part of the reason it hasn't happened is just that investor appetite and understanding of what risk reward is in the private markets.
So investors themselves are just not putting the money into private equity in Europe.
And that's true even at the institutional level. And in part, there's regulatory reasons as to why that's happened. But I think the U.S. has a deeper, longer history of investing in these segments that we just haven't seen in Europe.
Carolina, thank you so much for joining us. A fascinating discussion. Carolina Espinal with us, Managing Director, HarbourVest Partners. And on the latest episode of Managing Asia, Christine Tan spoke to Amanda Lacaze, the woman who has transformed Lynas Rare Earths into a major global player, challenging China's dominance and breaking barriers in the mining industry. Take a listen.
Very, very confidently, we would say that maybe Northern Rare Earths in a couple of areas, which is the largest of the Chinese firms, is still just ahead of us, but we are a very fast number two. We would be confident there are some things that we have done in our flow sheet which would put us ahead.
What's the next big move that could really further challenge China's grip and dominance?
We think that the next thing to ensure that the industry grows is to have more outside China metal and magnet making. So we are partnering with metal and magnet makers, and so far this year we've announced a partnership with JS Link, which is a Korean company, and LS Cable, which is another Korean company. With LS Cable, we're going to focus on metal making in the first instance. JS Link, alongside Lynas, is going to invest in developing a magnet plant here in Malaysia.
Not many women get to run a mining company that's caught right smack in the middle of global supply chain and at the center of geopolitics. How do you handle the volatility? How has it changed you as a leader?
I would start that question, Christine, with not many women get to run a company, right? And that is a problem. And people say to me, you know, mining male-dominated. You know what? I started my career in fast-moving consumer goods. Guess what? It was male-dominated. I worked in industrial chemicals. Guess what? It was male-dominated. I worked in agriculture. Guess what? It was male-dominated. I worked in telecommunications. Guess what? It was male-dominated.
Well, you've broken the glass ceiling.
And so why did I keep doing that? Because I wanted to prove there was a better way to run companies than traditionally there have been. I don't think it changed me as much as hopefully I changed it.
And you can catch the full episode of Managing Asia at these times on your screen or on CNBC.com. The country music legend Dolly Parton has died aged 80 from her humble beginnings in Tennessee. Her music career spanned over 6 decades and earned her 11 Grammy Awards. But the singer was also known for her philanthropy, where she provided thousands of children with free books and also donated $1 million to the Moderna COVID-19 vaccine. Parton passed away yesterday after a brief battle with cancer. her publicist said in a statement. Tanya joins us with more. And Tanya, you had the pleasure of speaking to the legend.
I did, Karen. Good morning. Not only the pleasure, it was an absolute privilege and honour to sit down and meet and interview Dolly Parton. She was a true legend and icon, and she didn't disappoint. Just before the interview, I thought, well, you know, what's she going to be like? Because when you meet your heroes, sometimes they disappoint. She didn't. She was just extraordinary. She was so self-deprecating. She was so kind. And she was absolutely what you would expect behind the scenes as well as in front of the camera. And I sat down with her and I talked about her remarkable life. As you were just saying, Karen, she came from such humble beginnings and she turned herself into a global icon. I was lucky enough to talk to her about many aspects of her life, and I also asked her how she would like to be remembered.
I want people to remember everything that I've done that was of any importance. I'm very proud of the Imagination Library. I want them to think that I was a person that really wanted to give. You know, I got what I deserved, hopefully, but the fact that I was a caring person and that I was someone that wanted to make life a better place for everybody.
Dolly Parton there, and of course she leaves behind her the most extraordinary legacy. And the Imagination Library, which really was incredible. It was her philanthropy. And what it was, she gave away free books to children around the world. She started it in 1995. And because her father hadn't been able to read or write, this was a passion of hers. She wanted to educate as many young children around the world as possible.
Yeah, that was a real feature, wasn't it? Giving back. And, you know, I experienced that for myself, going to Dollywood, her theme park, which she chose to have it in this bit of Tennessee, near where she grew up, Pigeon Forge, Sevierville. The economic benefits that brings to the people who live there, the families who generation after generation have stayed there, you almost can't put a figure on it, because if it had been in somewhere else, somewhere easier to get to, yeah, people would have gone. But this pulls people. I wouldn't have gone to Pigeon Forge had it not been for the park there. You know, and there was a real feature, wasn't it, giving back.
Ben, not only you, but millions of visitors from around the world have visited Dollywood over the years. And she was an extraordinary businesswoman as well. There was so much about Dolly that people didn't really know. And there was one story that she told me, which I found extraordinary, was that the song, I Will Always Love You, she wrote, she was unknown. Colonel Parker, who was Elvis Presley's manager, comes to her, the famous Colonel Parker, and says, all right, Dolly, Elvis wants to sing your song, but you're going to have to hand over half of the publishing rights. She was unknown. There's Elvis Presley, and she says, no, I'm sorry, I'm not going to give it to you. I own it. And that was a huge risk. And look how it paid off. She was a trailblazer. She was extraordinary. And at that time, also, women were not taken seriously. And she proved that she could be a success in everything. And she was a trailblazer.
Yeah, and indeed, that steely defiance about those rights and the you know, making sure that she wasn't going to be taken for a ride with it. And ultimately, 17 years later, it was a female pop star who had the massive hit with it. It was Whitney Houston, yes. Wasn't it?
Exactly, exactly. I mean, there are so many stories about Dolly, and she just would not give anything over to anyone. And the other thing which was so interesting is the way she talked about her late husband, Carl Dean, because they'd been married for nearly 60 years and they'd met as childhood sweethearts. And he just didn't want to be in the spotlight. He was a very, very private man. And what was so awful and typical was there was so much gossip around it because he didn't want to be seen. He didn't want to be in public with her because he was so private. So she had to address all sorts of rumours because of that. And actually they had an incredible marriage, and he only passed away in March last year.
Tanya, terrific insight. I think for those who are mourning Dolly Parton today, it's incredible to hear the insight that you are sharing with us today. Thank you so much.
Thank you, Karen.
Now, coming up on the show, hopes are raised of a temporary shipping lane in the Strait of Hormuz as Iran and Oman hold talks. We'll cross out to down for the latest.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand, really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
I'm with Becky. This is the greatest show on earth.
Squawk Box, streaming on CNBC Plus.
You know, for me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. And I think CNBC allows our viewers to fulfill their passions. I could not imagine covering anything else.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, streaming on CNBC Plus.
Iran and Oman have held discussions around the establishment of a temporary joint shipping route through the Strait of Hormuz and a mine-clearing mission for the critical waterway. Let's get out to Dan for more. Dan, this has been such a hotly contested area. Whether there should be any form of a toll booth or control over these shipping lanes, what are you hearing now as we talk about some sort of temporary measure?
Well, Karen, once again, the situation inside the Strait of Hormuz remains pretty unclear at this point. And if you take a look at the price of oil this morning, what we're seeing right now is perhaps the market pricing suggesting that we are less likely to see some kind of fresh disruption in the Strait of Hormuz. As you can see here, Brent crude falling down to $86 a barrel here, off by about 2.7%. after Iran and Oman discussed this temporary shipping corridor and joint mine clearing project. Now, of course, no corridor has been announced yet, and negotiations over some kind of a permanent arrangement between Iran and Oman are continuing. But overnight, we also heard President Trump saying the U.S. Navy has cleared all mines from international waters in the Strait of Hormuz, and he was also warning that any Iranian vessel laying new mines will be, and I quote here, immediately and systemically destroyed. What's also interesting is that Axios also reports, citing a U.S. official, that demining could significantly reduce Iran's leverage over global energy markets. Despite that, of course, as I mentioned, Iran and Oman are still working on this temporary shipping corridor, with Oman's foreign minister saying he hopes for an announcement soon. When it comes to the economic pivot, of course, China is the biggest test of the strategy. Beijing threatening to retaliate if Chinese companies face expanded secondary sanctions now. And this is going to be important to watch. We know China has already targeted some of these secondary entities, but stopped short of sanctioning the major Chinese banks. Analysts telling us today it could be pretty challenging for Trump to achieve any of these key war goals unless China, which buys the majority of Iran's oil, is on side. We also spoke with Paul Griffiths at Dubai International Airport this morning, weighing in on the state of recovery here. They announced 31.5 million passengers moving through the airport in the first half. That was down 31% from last year. Take a listen to part of our conversation.
It looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back.
Coming up on the show, the countdown is on to NVIDIA earnings too, as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report. Weekdays streaming on CNBC Plus.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. The countdown is on to NVIDIA earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking executive as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation.
Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbor escalates. Crude prices extend their declines after Iran and Oman hint at diplomatic progress, raising hopes that the Strait of Hormuz may reopen soon.
NVIDIA is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date. But questions remain whether the company can still impress investors. Option traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. Let's get to Arjun for more. Arjun, it feels as though this stock could have reverberation around markets today in terms of sentiment around CapEx spending.
It's so critical to this AI story that it certainly will be very closely watched for investors today. And the key really is expectations are high. We know that it needs to be a beat on the expectations for the quarter that's gone, but really important is going to be the guidance for the current quarter, which the market, I think, is looking for around $104 billion in revenue. And so NVIDIA is going to need to really beat that. And key to that is going to be how it talks about Vera Rubin, the next generation platform, how it talks about production, which is expected to ship this fall. Transitioning customers from Blackwell through to Vera Rubin is all going to be very, very important for the company as well. At a time when in the market's concerned around spending and circular financing, of course, this massive $500 billion financing package with NVIDIA and the other players, as well as the fact we're seeing more and more focus from the individual companies on their own custom silicon as well. You think that the chips being designed over at Google, over at Amazon as well. Just in the last 24 hours, OpenAI released details of its new chip called Jalapeno as well. So lots of competition, competitive threats to NVIDIA, financing, and the final point I think that's also a concern is that customer concentration, the fact that still a large portion of revenues is coming from the hyperscaler customers. And so a lot of what management needs to talk about on the call is the fact that they are trying to diversify that revenue. And I think that's partly where this financing package comes in as well.
I want to talk about the backing from NVIDIA, because one of the most complex report cards that we look at is SoftBank.
Yeah.
But increasingly, NVIDIA is starting to look like that too. There's a lot of investments it's made in public companies, Intel, Synopsys, CoreWeave, Nokia, some of the others in the AI data center. There's some private ones as well, of course, Anthropic, OpenAI. We're talking about teaming up with Perplexity. I mean, there's so many different pieces that it has now in the portfolio. How do we think about that and the risk that now embedded from being effectively a banker in the sector?
Yeah, it's incredible, isn't it? And I think that's partly where some of the caution around NVIDIA stock has been. It's this view that is NVIDIA effectively bankrolling demand? Is that demand real, or is it artificial because of this kind of financing we're seeing in the industry as well? And I think that really is top of mind. And I think the big concern is if the earnings season just gone was interesting, because from the hyperscalers we heard about demand. Demand remained strong. We saw strong growth at the cloud computing units, and importantly, all of those hyperscalers were reporting backlogs of demand, i.e. people are willing to pay, they just can't handle the capacity right now. They don't have enough capacity to sell, and that's been a tailwind for the hyperscalers and for NVIDIA. But the key is, if that demand doesn't materialize, then yeah, NVIDIA is on the hook to some extent for a lot of these investments made, the financing, etc. And that's where all of these interconnected companies and the concerns around this circular finance really will come to a fore.
Arjun, thank you very much for that. Let's continue the conversation, because joining us now is William Degal, who is the co-founder and lead portfolio manager of Blue Box Asset Management. William, the hard thing for investors at this point is trying to work out where we sit in the cycle for this deep AI investment, whether there's still a huge way ahead in terms of the investment, whether this story that we keep hearing that there's not enough supply to meet demand is a story that's going to power investments, or whether we're getting to a tipping point. What do you think? What are you looking for in terms of the commentary from NVIDIA?
So I'm not actually sure we'll learn anything particularly useful from NVIDIA, to be honest. I mean, I think the report will be absolutely fine, and there'll be plenty of growth and plenty of excitement and upside and record quarters. I'm not sure that really matters, to be honest, because when you've got a new technology that's being rolled out that is important to this, there's essentially two stages in that rollout. The first one is you build it, you create it, you have to catch up with unserved latent demand. That's an enormous effort, vast investment going on. But then when you have caught up, or somewhere near caught up, then you move to stage two, which is sort of operating it. And the capex will fall dramatically at that point. And I think that in the heart of hearts, everybody in the market knows that the current position won't go on. It might go on for a while, but it can't go on forever. And at some point, you will see a serious deceleration and actually a decline in revenue for the chip companies and other suppliers into the AI capex. And that simply isn't in any of the official numbers. So it's not in consensus. If I look at consensus revenue for the next few years, it's a lovely steady decline. It's 80-something% growth this year, 40-something next year, 22% the next year, 7% the year after. That's a lovely glide down to a sort of single-digit growth. That's simply not what's going to happen. At some point, we will move from stage 1 to stage 2, and there will be a 10 to 15% fall in revenue for NVIDIA and the other companies supplying that. And that's not the end of the story. It's not the end of tech, but it will be a little bit of a shock because that will be roughly, let's say if it's next year, 40% below current consensus revenue. And this is already at least partly priced into the stock. So, NVIDIA is the key company in the entire world, right at the center of the biggest investment spree that humanity has ever seen, and yet it's trading at 19 times next year's earnings. It, on the face of it, isn't particularly expensive. In fact, it's almost cheap at that price. But when that deceleration comes, and we simply don't know when that's going to be, it could be tomorrow, it might be in 18 months. But when it comes, that 19 times will turn out to have been 38 times. Because if revenue slows by, or declines by, let's say, 10%, you also get margin compression because a lot of the upside has come from margins. People are trying to buy stuff that just isn't there. There isn't enough of everything. So there's huge price inflation going on. And that price inflation will reverse, double ordering will reverse, inventory builds, the efforts to build inventory will go into reverse as well. And this will hit margins and it will hit multiples. And you will get a significant fall in the stock price for companies such as NVIDIA, but only in the short run. So it won't last very long, but it will be a bit of a shock. And it's already partly priced in because the stock's on a 19 times multiple rather than 30-something multiple. So I'm not really sure the individual quarter matters that much, unless this is the quarter when they say it's over.
So, William, to the point around what we're going to hear, it does feel as though NVIDIA has been trying to spread its bets because we've all known all along that there's going to be a day of reckoning for the company, whether this first mover advantage would morph into something else. And we know that Jensen Huang has been out there partnering with every company on the planet, also investing now deeply into a lot of bets around AI for the future, edge computing being one of them. Are you seeing anything to suggest that there's further moats being dug by Jensen Huang to protect NVIDIA away from this data center story?
Well, if you look at it from his point of view, NVIDIA is producing absolutely enormous amounts of cash at the moment. And one of the biggest problems successful tech companies have is what to do with all the money. Because if they return to all shareholders, everyone gets very depressed and thinks the story's over. If they invest in their own business, they'll end up with too much capacity or whatever. And there's a limit to how much, this is a very low capital intensity business in NVIDIA. So there isn't really anything to put the money into. So investing it in something else is a good idea, and investing in tech in general is a good idea. The tech industry is going to remain on its very strong 15% long-term trend for many, many, many years to come. And Jensen is investing in some very good companies there. None of them are going to go away as a result of a slowdown in AI. And in fact, some of them might do rather well out of it. So the tech sector as a whole might see a short, sharp shock, but it will then recover very fast and go back to trend. So I think it makes perfect sense to invest in a wide range of different tech companies. Almost everything in tech has exposure to AI at the moment, so it's going to have difficulty getting away from that. A company like Cadence is not going to go away. It's a fantastic business. It's going to have huge value coming out the other side. And the other side probably will be quite soon. It will be quite brief. This is not a multi-year setback correction. This will be a fairly sharp 30-35% drop and then back into the trend again. This would be my expectations.
William, it's Arjun here. Is the revenue decline you're foreseeing going to be a result of a lack of demand or a reduction in demand? Or is it the fact that the constraints we're seeing in the market at TSMC, over at the memory makers and elsewhere begin to ease?
I think it's more that at some point we move from the build to catch up with latent demand to just maintaining and serving the growth in the underlying demand. Yeah, it's like, let's say there's a chap a mile away from you who's walking reasonably steady in the opposite direction. In order to catch up with him, you need to run very, very fast for a period of time. But once you catch up with him, then you can just walk alongside. And that's really the position as we move from CapEx at the moment. We're still in the running jolly fast because there's huge unserved demand. At some point, we get to the just strolling along with maintenance CapEx and keeping up with underlying demand growth, which over time would trend towards GDP. And that's fine for everyone, apart from companies which are heavily exposed purely to the CapEx side. And that really is a lot of the semiconductor industry at the moment. And there's nothing wrong with the semiconductor industry. You know, it's a fantastic place to be. It's great long-term investments. It's probably a very good short-term investment. At some point between now and 18 months, there will be a bit of a reckoning, but it won't be a very long-lasting reckoning.
And everyone talks about, when you mention sort of the operating stage 2, as it were, you know, everyone talks about inferencing. And this is a play at the start, many said NVIDIA couldn't play in with GPUs. Then they acquired the sort of technology and licensing around Grok to sort of be a stronger player in this inferencing space. Does that not mean that NVIDIA has a strong position in this kind of future of the operating necessarily of these AI models? Or is that really the value going to accrue more towards the hyperscalers?
But I mean, I think NVIDIA will go on being a fantastic company for a very, very long time to come. And you're right, it's been working to create a position in inferencing that's as strong as it is in training. There are more alternatives when you get to inferencing, and there's more sort of use cases. So data centers, use at the edge, whatever, mobile devices, and so on. So it's probably not going to dominate to the degree that it has done in the training. But it's just that at some point you get to something that's nearer to a steady state. And that's very, very, very different from what we're at now. It's just a bit of a jolt as we decelerate down to a more reasonable long-term growth rate. Now, it might happen very steadily, but that's not normally how it happens in tech. It normally comes with a bit of a shock. And also, you don't wait for evidence of that slowdown before things like semiconductor stocks start underperforming. So there is no lead indicator for semiconductor stocks. They will start underperforming, and a few months later, you will find out why. And while you're waiting to find out why, everyone's arguing this is wrong, everything's fine, look, those numbers are still going up. But the reality is somehow the market senses that the wind has changed. Now, that may have happened at the end of June. So if you look at leadership within the industry, it changed fairly sharply in late June. It may change back, but at that point, semiconductors started underperforming tech and software started very strongly outperforming tech. So you've got to switch from the build to the operation, as it were, because software is much more a beneficiary of the operation of this stuff, in my view. So it may be that the end of June was a turning point. That may not be the case. It may switch back again and fluctuate between the two. At the moment, the market seems to have a bit of battle between semis and software in every individual day, one going up and one going down, and then swapping positions the next day. So there's a big fight going on between those two groups. But at some point, it will switch towards the software side. And that's it for this stage, basically.
William, when you look at the fundamentals and the demand and the growth, it all seems to underpin and support a bullish case. But, of course, it's impossible to look at that in isolation. I just wonder how robust you think it is, the position of NVIDIA, when you factor in the politics and the backlash we start to see against data centers from local communities, and then the macroeconomic picture. Inflation is high. Borrowing costs are high. We could see the Fed have to be more hawkish than people expected, not only affecting the borrowing costs for the hyperscalers, but the businesses that would be wanting to invest in AI capacity and using it and tokenization. That you've got the politics and the macro. Can this withstand potential headwinds from those fronts?
Well, I think those are all factors, well, most of those are factors that bring forward that move from stage 1 to stage 2. So I think at the moment, pricing of AI cannot support the capex that's required to build it. So either the capex got to slow down dramatically or the pricing's going to go up a lot. And I doubt that the latter is really possible. If anything, the pricing or the price of individual tokens is falling, but the usage is soaring. So the overall cost of using AI is increasing. But I don't think by enough. So the return from building a data center over time is looking slightly weaker. As you say, the cost of capital is probably going up. These companies are also financing this build increasingly from debt rather than from cash flows. And over time, that will push up their cost of capital as well. And then things like permitting and all the other supply constraints mean that data centers cannot be built as fast as they're expected. In fact, lots of them are being cancelled rather than started. So you've got a higher cost of building, you've got a higher cost of capital, and you've got to push out it to completion. And all of those are very bad news for the return that you expect to generate from that investment. And that begins to disincentivize people from making that investment. And the funding presumably starts to dry up, or the investment decisions start to slow and go into reverse. And that just pulls forward the move to stage 2, because demand is to an extent satisfied, and then we can just get on with maintenance capex levels, which are a much, much lower level.
Right. William, you've given us a very logical argument about many pieces of the AI build-out. Can I ask you about memory? Because we've seen a huge flush out of positions around SK Hynix, Samsung, the Cosby. What's your view on how this unfolds from here, and whether there's any better protection in some of the memory chips, because we're going to need so much memory in future?
Well, I think memory volumes and demands, it's a fantastic growth story, but memory stocks and investments are over time a pretty awful investment. They have these amazing surges, and the current one is, unprecedented, absolutely enormous, but they don't last. And the benefit doesn't go to the stockholders in the memory companies, because memory stocks, these are probably the most capital-intensive companies in the world. And the reason they're so capital-intensive is they all get the cash at the same time now when things are going well, and they have to invest it immediately, all of it, in new capacity. Because if they don't have most of their production somewhere near the leading edge in 2 to 3 years, then Samsung's chips will be cheaper and faster than theirs, and that's the end of them. Game over. So all of them will invest all the cash they can when it comes in immediately in building new capacity at the leading edge. So the benefit doesn't stay with their shareholders. It gets passed to the capital equipment companies that supply them. And the prime one of that would be Lam Research, the most exposed to the memory companies. But all the semiconductor capital equipment companies are beneficiaries of this. They are the ones that actually make the money out of the upside from the memory companies. So stay away from the memory companies. They're just yo-yos. It's sort of, roulette, effectively. But the investment is with the semi-equipment companies, which is where the value ends up. And that's why they've been such a phenomenal performance over the last 20-odd years, because they're just sucking the value out of the memory industry and quite a lot of the rest of the semiconductor industry as well, but particularly memory. And the idea of triple leveraged single stock ETFs on Hynix, that's a very quick way to go bankrupt, I would have thought.
William, we've learned a lot. Thank you so much for joining us and giving us some strong thoughts on the sector and some trading themes too. William DeGale with us, co-founder and lead portfolio manager, Blue Box Asset Management.
OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the maker of ChatGPT. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Stresser. To hear more about what OpenAI had to say about the departure, check out the article on CNBC.com. The Canadian administration has unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. The move doubles existing levies on steel and aluminium to 50% and introduces new 50% duties on dairy, furniture and clothing. The retaliation is due to affect $20 billion worth of annual US exports to Canada. Megan Casella reports.
Canada saying that its retaliation will match the United States tariffs dollar for dollar and rate for rate. So Canadian officials announced tariffs ranging from 15 to 50% on about 700 U.S. goods. Items include everything from seafood and dairy to textiles, wood and paper. Some of the most significant duties targeting American steel. Those tariffs will double to 50% to match the U.S.'s rate. All of it set to take effect 2 weeks from today. Now, a lot of strategy buried in this announcement. For one, the list of goods hit appears designed to bring the most economic impact to states with big midterm races. Tariffs on metals and motorcycles, for example, will hit Michigan and Ohio. The seafood tariffs are going to hit Maine and Alaska. And then secondly, Canada also announced today a $7.5 billion aid package to support Canadian businesses and workers that are hit by the U.S. tariffs. They're really suggesting with this move here that they're bearing down for what could be a drawn-out fight.
Still to come on the show, Fed officials look towards a rate hike as one warns of a future reckoning over the US debt pile. We're back after this short break.
On a $100,000 margin loan, Interactive Brokers charges just 5.14%. Do you know how much your broker charges? Fidelity and Schwab charge over 2 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,100, or much more if you're trading big bucks.
I built a legacy on the court, and now is the moment to build a legacy outside of the court. My main investments are in hospitality, in education and sports. So I believe that's the future. I see my brand as in a growing perspective and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
Be there for the opening bell.
Right here.
Squawk on the Street, CNBC.
US futures certainly improving as we creep closer to the market open. Now, to the Fed, and Boston Fed President has warned that the Fed may need to hike rates, quote, should evidence of sustained inflation progress not materialize. Collins, who is not a voting member this year, called for policy to be nimble and added that she's backed July's decision to hold. She went on to argue that without evidence that inflation is abating, it would be more difficult to rule out other inflationary forces being at play. Richmond Fed President Tom Barkin has warned of a future reckoning on America's debt pile. Responding to a question about US public debt topping $40 trillion, Barkin said, quote, at some point people stop buying your debt, and that's the risk out there, adding that it was impossible to know when a potential reckoning could come.
The country music legend Dolly Parton has died aged 80. From her humble beginnings in Tennessee, her music career spanned more than 6 decades and earned her 11 Grammy Awards. But the singer was also known for her philanthropy, where she provided thousands of children with free books and also donated $1 million to the Moderna COVID-19 vaccine. Parton passed away yesterday after a brief battle with cancer, according to a statement from her publicist. Well, Tanya joins us now with more. And Tanya had the honour, the privilege of meeting Dolly Parton.
I did, absolutely, Ben. And it wasn't only an honour, it was just an absolute privilege to sit down with somebody like Dolly Parton. I mean, she really was a global icon. And as we've seen, her passing has united everybody in their grief and their tributes to her. And all she said that she wanted was for kindness to prevail. She had the most extraordinary career, as you were just saying. She came from such a humble background. Her father couldn't read or write. She then went on to create this incredible legacy of the Imagination Library, which gave away free books for children around the world who she wanted to give a chance of education. I remember her telling me, though, which was extraordinary, she said that when she was graduating from her high school, they went around the class and they said, well, what are you going to be? What would you like to be when you leave? And she stood up in front of everybody and she said, I'm going to be a star. And everybody laughed at her. And she said she was so hurt by that reaction. But of course, she went on to prove everybody wrong. And another story she told me, which I thought was extraordinary, one of her favourite songs that she wrote, A Coat of Many Colours, actually came about because her mother stitched together patchwork of all these different materials to make a coat for her because they couldn't afford to buy her a coat. And she walked into school proudly wearing this coat of many colours. She was an absolute trailblazer, and she fought against such sexism to achieve the success that she did. And I asked her when I met her how she wanted to be remembered.
I want people to remember everything that I've done that was of any importance. I'm very proud of the Imagination Library. I want them to think that I was a person that really wanted to give. You know, I got what I deserved, hopefully, but the fact that I was a caring person and that I was someone that wanted to make life a better place for everybody.
Dolly Parton there, who certainly has made life a better place for so many. And of course, as we were saying, everyone is united in their tributes to Dolly, which is extraordinary these days if you think about it. It happens so rarely.
And you mentioned that coat of many colours. You can actually see it in the museum at Dollywood, the coat that her mum had stitched together for her that sparked the inspiration for the song. And that's another aspect, the fact that that park, back near her hometown, that theme park, draws millions of people going there, spending money, creating jobs. She was a very savvy businesswoman, wasn't she? And very philanthropic with it as well.
Absolutely. She was incredibly smart, Ben, and she did have to fight when she was growing up against a lot of sexism in that day, and she just refused to give in. She was a songwriter, an actress, producer, as you say, philanthropist, and she was so respected for everything that she achieved, and she will always, always be remembered.
Tanya, thank you so much for sharing the story with us. I think when people are mourning and they're looking for some sort of sense of meaning in this, to hear the background story and how much Dolly Parton contributed, it is quite something.
Thank you.
Well, coming up on the show, hopes are raised over a temporary shipping lane in the Strait of Hormuz as Iran and Oman hold talks. We'll cross out to Dan for the latest.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
A market shaping industries. We are watching the sixth little dragon, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Fast Money is America's post-game show.
Near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations matter in a higher interest rate environment.
Fast Money, CNBC, streaming on CNBC Plus.
Welcome to Squawk Box Europe. I'm Ben Boulos with Karen Cho, and these are your headlines. The countdown is on to Nvidia earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts eyeing a near 100% surge in revenue on the quarter. OpenAI loses yet another high-ranking executive as its chief of data centers parts ways with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbor escalates. Crude prices extend declines after Iran and Oman hint at diplomatic progress, raising hopes the Strait of Hormuz may reopen soon.
We are now 90 minutes into the trading session here in Europe. A quick check of how we're travelling. We've been watching red unfold on some of these markets in Europe. The FTSE here in the UK has been downbeat, but trimming some of that red ink as we take another look at it. Only about a tenth down and only a very small amount too off the Xetra DAX. So some improvement here. In terms of the upside, it has been French stocks leading the charge, and some of that Italian market performance has also improved. At the top, basic resources. Again, we talk about this debasement trade triggered by the intervention by Scott Bessent, Treasury Secretary, into the US bond market. That has meant we are seeing a little bit of, again, buying, further fueled the gold trade. So basic resources really picking up on that trade. Travel and leisure, the cues we're getting from the Strait of Hormuz around the conversations between Iran and Oman, that is bolstering the view that, look, maybe we're seeing a bit more stability when it comes to travel in the Middle East, and it's improved that part of the market. Household goods, construction also gaining an edge today. Some of the worst performers in Europe where we're seeing that caution settle. It is oil and gas. Again, the flip side of that retreating crude price, it is impacting the sector down heavily, actually 1.4%. Tech very cautious ahead of a big blockbuster day for Nvidia. That sector down 1%. Autos and parts and media rounding out the other areas of red. Well, US futures, as we talk quick check of them before, we saw a slight improvement in those futures. We are picking up on the back of a modestly upbeat session. Tech names actually on the front foot yesterday. This morning, early hours, you can see leaning positive for the Dow, still very cautious around the S&P and the Nasdaq. But again, this so-called macro event for Nvidia when it reports, a huge swing could be seen in the stock price, even to the up or downside in a range of about 5% would still have a significant market cap implication. So we're watching that very closely. To the latest around the geopolitics, Iran and Oman have held discussions around the establishment of a temporary joint shipping route through the Strait of Hormuz and a mine-clearing mission for the critical waterway. Let's get out to Dan for more. Dan, if we could just hone focus on the mine clearing, because the message from the Americans is, look, the mines have already been cleared, but this gives us a different impression that there's still work to be done to make this strait safe.
That's exactly right. And Iran and Oman have been working on a sidetrack of negotiations here, developing a way to clear mines out of the Strait of Hormuz. And then overnight, the president came out and said, well, actually, the strait has already been cleared of those mines. So again, a real lack of clarity inside the Strait of Hormuz right now, which means the market is basically in the crosshairs here. What we've seen is oil prices continuing to fall as we track into the US session now. The market perhaps pricing a lower risk of a fresh disruption in the strait, though. As you can see here, Brent crude falling towards $85 a barrel after Iran and Oman discussed that temporary shipping corridor and a joint mine clearing project. Now, no corridor has been announced yet, and negotiations over a permanent arrangement continue. But the president did say overnight that the US Navy had cleared all mines from international waters and was also warning that any vessel laying new ones will be destroyed. Now, you also put this up against a fresh Axios report this morning that says the Secretary of State Marco Rubio has told allies that, at least for now, Washington does not expect to initiate new strikes, basically reaffirming that signal from earlier in the week that the US is shifting its focus to its naval blockade and economic pressure rather than new kinetic strikes. And of course, as this economic pressure also mounts, China remains the biggest test of the strategy. Beijing in the last 24 hours also threatening retaliation if Chinese companies face expanded secondary sanctions. Washington, we know, has targeted some China-based entities in the past, but as of the Treasury Secretary's announcement, has so far stopped short of sanctioning any major Chinese banks yet. Analysts telling us this morning it could be challenging for the president to achieve his war goals unless China, which of course buys the bulk of Iran's oil, is on side. Any broader action could also complicate US-China trade talks ahead of that expected Trump and Xi meeting towards next month. Meanwhile, also wanted to update you on some numbers here in the UAE. Dubai International out with fresh data this morning, reporting a steady recovery. DXB welcoming 31.5 million passengers in the first half. That was down from 31% from last year. So that's the war impact for you. But traffic improved through the second quarter. I spoke with Dubai Airport CEO Paul Griffiths this morning to outline exactly what that recovery track looks like. Take a listen.
It looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back.
Paul Griffiths speaking there. The airport in Dubai being served by more than 50 international airlines, but the next test here is going to be restoring full capacity and passenger confidence across the wider region. I also asked Paul whether or not we will see some of those European carriers, Lufthansa, KLM, British Airways, for example, restoring their own frequencies to Dubai anytime soon. He said that will be up to the operators, but the airline is ready and waiting to welcome those passengers and those planes back into the region. It's over to you.
Dan, thank you very much indeed. So let's carry on and focus on commodities, because according to Citi, a strengthening Super El Nino remains the highest conviction agricultural risk heading into late 2026 and early next year, with current market pricing appearing to reflect only a portion of the potential downside risks to global production. Max Layton is head of commodities research at Citi and joins us now. Max, I know you cover commodities generally, and I know you're on to talk about the commodities in terms of corn and agriculture as well. But I just want to pick up by talking about oil, because down 3%. Just give us your take on that firstly.
Sure. Yeah, thanks for having me. So, yeah, fourth quarter of this year, so within a month or two, our central scenario, it's obviously pretty difficult to predict, but the central scenario we have is a reopening of the strait. So we may need to escalate militarily over the next couple of weeks. Iran's spoken openly about how the current situation is not sustainable, and they want the US to return to the MOU, and or else. So I think there's multiple different paths that you could see the strait reopen by the fourth quarter, and in that world, we think that the total oil prices, so whether you look at product prices, diesel, gasoline, or Brent, will come down pretty substantially. There's much more room for the product market to come down, actually, if there is a reopening of the strait. And so in the central scenario, we think that's going to happen. That's the base case. But there is scope, and we have to say some of our more interesting research lately has been looking at how long the current situation could last before you get to the kind of extreme oil price environment of the late 1970s. And the answer was kind of surprising. It's going to take a long time. So we've drawn about 600 million, 700 million barrels of oil inventories globally over the last 5 or 6 months. At that pace, it would take until 2028, and on our numbers on a global basis, until the end of 2028, for the current disruption to take you down to below 70 days of inventory, which is where we got in the late 1970s. So there is some scope for this to drag on and on and on.
Okay. Reassuring. Max, in terms of the agricultural picture, it feels like that has perhaps become more perilous in recent weeks with the disruption to exports of grain from Ukraine as well. What's the picture there as you read it?
Sure, it's not necessarily an imminent risk to inflation, to physical shortages of ags. Generally the broader ag complex balances have been, not particularly tight this year. However, the market is, increasingly concerned. Certainly over the last month, we've seen a rally across the agricultural commodity complex of about 15%, which is pretty substantial in the broader complex. It's been pretty broad-based. It's not just been in the softs, which is what happened earlier in the year, but it's also the grains now. The market is concerned about the impact of El Nino, but not just El Nino. There's also been some disruption to supply from Russia and Ukraine just in the last month or so, and that's as a result of well, I guess you'd call it an escalation of the conflict between those two countries. So forward balances are tightening. It's not necessarily, bleak picture today, but let's say the expected value of the forward balances is a lot tighter. And, people, I would say, are concerned about it, not just, commodity specialists who look at the balances for next year and think about the range of outcomes that could happen. We're getting interest from, broad, very large markets like, bond investors. People are really starting to think about food price inflation risks into next year.
Max, to the point around the Black Sea trade and the disruption we're seeing around corn and wheat, what are you watching closely for? Because there are a lot of attacks from the Ukrainians and the Russians, but if you piece it together, what are the sort of crucial parts you're looking at here?
I would say we're tracking the impact on the flows, really. This war's been going on, obviously, for years and years and years. I think over 4 years now. Correct me if I'm wrong, but and the impact on commodities hasn't been that big. I wouldn't want to downplay it, but Russia's been pretty quick to, for example, there's been a lot of impact on Russian refineries that hit the headlines, and yet the impact on Russian refined product output was often, wouldn't impact the data much or the exports much up until the last couple of months. In the last couple of months, there seems to be like a big shift in the impact of the war, or Ukraine's impact on Russia in terms of the exports and output of commodities, particularly ags and oil products, and oil in general, actually more broadly. So we're watching the data, and the data is getting significantly worse. That's pretty much all we can do, I think.
Just talk to us about some of the prices that you're targeting on the wheat price. They're expecting to go up from here. Have already been at elevated levels since the start of the year. So talk about the escalation that you could see in some of the price action on wheat specifically.
Sure. So look, on wheat, our 6 to 12 month target is 775, and we're broadly bullish across the entire ags complex. We had been super focused on cocoa, on sugar. We closed a couple of trade ideas recently on those because they've gone up so much. But the interest is certainly moving more towards the grains on the client base, which are obviously the bigger, more dominant markets on inflation.
Max, obviously the situation in the Middle East has had an effect on fertilizer, and that has a knock-on effect on food production. But what I also found interesting was your note about how the disruption to energy supplies, oil and gas coming out of the Middle East, could also lead to greater demand for biofuels. Tell us more about that.
Of course, so biofuels are being produced from agricultural commodities, and those biofuels are more attractive. They're more attractive because if their competing energy markets are expensive, and they are very expensive, they're competing energy markets at the moment, given the war and the potential drawdown in inventories to critically low levels over the next year or two. And so that's attracting more demand. For me, one of the not more interesting, but one of the additional interesting things in the ag space is not just the impact on fertilizer, but also that we actually produce a lot of the pesticides and fungicides, the things we use to protect the crops in their early cycle and in their late cycle, is actually they're all oil products. Well, not all of them, but there's a lot of synthetic pesticides and fungicides. So when you put together the list of risks that are coming, you use a bit less fertilizer, or in aggregate you use less fertilizer because it's more expensive. The weather isn't optimal, and you're more vulnerable to disease. And I think the interesting thing with ags for me is the convexity. So, all these things might be fine. You might get away with it, but if you don't, you have a collapse in the yields. So there's quite, it can go one way or another pretty quickly.
Max, that is quite a warning, isn't it? We'll leave it on that lingering note as we talk about what happens in the ag space from here. Max Layton with us, Head of Commodities Research at CCE. On the latest episode of Managing Asia, Christine Tan spoke to Amanda Lacaze, the woman who transformed Lynas Rare Earths into a major global player, challenging China's dominance and breaking barriers in the mining industry.
Very, very confidently, we would say that maybe Northern Rare Earths in a couple of areas, which is the largest of the Chinese firms, is still just ahead of us, but we are a very fast number two. We would be confident there are some things that we have done in our flow sheet which would put us ahead.
What's the next big move that could really further challenge China's grip and dominance?
We think that the next thing to ensure that the industry grows is to have more outside China metal and magnet making. So we are partnering with metal and magnet makers, and so far this year we've announced a partnership with JS Link, which is a Korean company, and LS Cable, which is another Korean company. With LS Cable we're going to focus on metal making in the first instance. JS Link alongside Lynas is going to invest in developing a magnet plant here in Malaysia.
Not many women get to run a mining company that's caught right smack in the middle of global supply chain and at the center of geopolitics. How do you handle the volatility? How has it changed you as a leader?
I would start that question, Christine, with not many women get to run a company, right? And that is a problem. And people say to me, mining male-dominated. You know what? I started my career in fast-moving consumer goods. Guess what? It was male-dominated. I worked in industrial chemicals. Guess what? It was male-dominated. I worked in agriculture. Guess what? It was male-dominated. I worked in telecommunications. Guess what? It was male-dominated.
Well, you've broken the glass ceiling.
And so why did I keep doing that? Because I wanted to prove there was a better way to run companies than traditionally there have been. I don't think it changed me as much as hopefully I changed it.
And you can catch the full episode of Managing Asia at these times on your screen or on CNBC.com. Ahead on the show, the countdown is on to NVIDIA earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet.
Combat sports icon Ronda Rousey. She's conquered the UFC, dominated the WWE, and now she's sounding off on both.
It's extremely oversaturated right now. There's too many fights.
San Francisco 49ers owner Jed York. He sat down with us to explain how he turned the team around and the critical lesson he learned. Plus, influencer Jesse Rydell, also known as Jesser, explains his simple ingredient for online success. This is CNBC Sport on the Record.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Never miss a moment.
Cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices.
Non-technical people can create a website, can write code. The same thing will happen in financial services.
If you're diagnosed with melanoma today, and I'm diagnosed by the same doc, you and I will get a different chemical. It's totally individualized because we know today cancer is a disease of DNA.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC Plus.
Shares in Zoom are under pressure trade after Q3 guidance came in short of expectations. The company now expects third quarter earnings per share to reach as high as $1.48, missing forecasts of $1.50 a share. Nvidia has partnered with AI startup Perplexity on a local-first AI platform as companies look to move AI onto local devices and away from data centers. The local AI agent, called Personal Computer, will first operate on Nvidia's own desktop computer, along with other devices that run Nvidia hardware. Kate Rooney filed this report.
Nvidia and then you've got AI startup Perplexity are making this push to bring AI directly to your desktop versus running it through all of the major cloud providers. So Perplexity this morning out with that announcement saying it's the first what they call full stack AI platform that can run entirely on local hardware, so local computers. It is going to run on Nvidia's desktop sized AI computer that's designed to really run some of these large AI models locally. It's called DGX Spark. Perplexity said during a demo that the hardware partners, more hardware partners, I should say, are going to be coming. And the pitch here that they're making is about lower cost. So instead of sending every prompt, every piece of data out to a data center, to a cloud provider, the AI can just run directly on this machine. So potentially lowers compute and then token costs, which is a big topic for a lot of CFOs we talk to, but also potentially help keep some sensitive data private so you're not sending it out there to the cloud in this example. So Perplexity, though, still does say if a task is going to require more powerful frontier-level reasoning, the system is still going to be asking a user for permission, and then it still needs to send a portion of that out to the cloud. So interesting note as well, it is going to launch on Alibaba's open-source Qwen model. That will happen locally, and then it does say NVIDIA's open-source model is going to be coming soon. Perplexity not alone here. We've seen Apple do this with the Mac Mini. It's been betting big on local hardware and AI, and then has this partnership with OpenClaw, if you remember the buzzy AI agent. And Microsoft is also pushing into some of these AI devices as well. The big question is going to be performance. So some of the most powerful AI models still do need to run in the cloud. Perplexity's system itself will still need to send those harder tasks out to the cloud with user permission, as I mentioned, so not entirely going to be able to run locally. And then for NVIDIA, it is another signal. This company is positioning itself in every angle of AI, including some of these smaller local hardware plays. It does also come, guys, amid some M&A reports between these two companies. NVIDIA reportedly looking to buy Perplexity for about $30 billion. No comment from either company on that.
CNBC's Kate Rooney with that report. NVIDIA is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date. But questions remain whether the company can still impress investors. Options traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. Speaking to CNBC earlier, Managing Director of Panmure Liberum, Joachim Clement, gave a more bullish view on the AI capex boom.
From a technology perspective, investors, in my view, are investing in the wrong future. At the moment, the entire AI boom is about large language models like ChatGPT, like Claude, running in massive data centers. But if you actually look at it, there was a Stanford University study that came out in late May of this year that showed that more than 80% of tasks that people want to do with AI or can do with AI can already be done to the same degree or better on small language models running on local high-end desktop PCs and Macs. So 80% of the task we can already move to cheaper models on local PCs.
You can see the caution in tech stocks today. It's playing out here in Europe this morning, pre-market stateside. The market wants more evidence, and NVIDIA has huge ramification for the entire supply chain. We're watching all the other chips. We're watching the chip equipment makers too.
Yeah, and that caution, 7 days of consecutive losses for NVIDIA shares before picking up 2% or so yesterday. We're all waiting for those results. That is it from us for today. I'm Ben Boulos with Karen Cho. Don't go away though, Morning Call is coming up next. We'll see you tomorrow.
It's time for your call sheet, where we look at the topics driving the trading day ahead.
We've done a deep dive into the portfolio.
The chip super cycle is going to continue.
There are going to be haves and have-nots. I think it's a much bigger risk.
They're going to break down the headlines.
One thing no one's talking about is a labor market comeback that looks better.
There are some opportunities here.
Morning Call with Morgan Brennan. Weekdays, CNBC.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
When Amanda Lacaze took over Lynas Rare Earths, the company was on the brink of collapse.
I put my hand up because the people in the business deserved someone to give it their very best shot.
12 years later, she's leaving behind the world's largest rare earths producer outside China. Can one company really challenge China's dominance?
I'm confident. We've got good people in Australia, we've got good people in Malaysia. Not only can we compete with anyone, we can win.
Find out more on Managing Asia.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates.
What strong numbers this morning.
Listen wherever in the world you are. Download the CNBC app now.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion, from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off would immediately crash home prices. It's that the same wealth channel pushing stock gains into housing depends on confidence.
Street braces for NVIDIA earnings. I'm Dominic Chu, and this is your Morning Call. Good morning. I'm Dominic Chu for Morgan Brennan. This week, U.S. equity futures right now are somewhat stable, with the Dow riding a three-session winning streak. The Dow is actually implied higher by roughly 50 points right now at the opening bell. The S&P down by about 14 and the NASDAQ down by about 51. Treasuries ahead of today's big July inflation report on PCE. Right now, benchmark 10-year note yields holding just around 4.65%, 4.645 to be exact. The 2-year note yield 4.199%, and the 30-year long bond 5.179%. Economists expecting year-over-year core prices to hold steady at 3.3%. Headline inflation expected to tick down by 0.1% as well. So those are the expectations going into that particular print. On the dollar index side of things, we have been tracking, of course, weakness over the course of the past maybe couple weeks or so. But over the last 1 week period, up marginally, about 0.1%. The ICE U.S. dollar index currently at 98.97. Bitcoin prices also in focus as well. We keep watching that $80,000 level. We are now somewhat below there. The current price right now down about 0.25% to 78,731 and change. Gold continues to move, coming off another 3-month high, but those prices are lower today by about 0.25%. You can see here 46.85.20, the last trade there, off about 0.2%. And then energy, with oil coming off its worst day in a month as traders watch for signs of a Hormuz deal. Benchmark prices for U.S. West Texas Intermediate right now just below $80 per barrel, 79.89, off 3%. Same thing for ICE Brent crude futures, down 3%, $85.93. We're watching that trade pretty closely as well. Well, to our stock of the day and, of course, the week, maybe the month of the season, if you want to call it that, NVIDIA's latest quarterly results are out after the market closed today. Those shares are up fractionally pre-market. We're capping off what's been a very mixed earnings season for the big tech trade, and a stock that's sitting more than 9% away from its all-time high. Let's send it now over to CNBC's senior technology correspondent Arjun Karpal with more on what to expect when those results cross later on this afternoon. Arjun.
Yeah, good morning, Dom. And look, there's no doubt NVIDIA faces a tough test today. Sky-high expectations and, of course, growing nerves around this AI spending, financing and demand from investors as well. Analysts are expecting the company to nearly double revenue in the quarter just gone to more than $92 billion. But the real focus here is going to be on the guidance for the October quarter, where Wall Street is looking for revenue of just over $104 billion. NVIDIA won't just need to meet that number. It will likely need to beat it convincingly. And key to that really is going to be Vera Rubin, NVIDIA's next generation AI chip platform, which is expected to begin shipping this fall. Investors will be closely listening to comments around production capacity, demand, and of course how customers are transitioning from Blackwell to Rubin, all of which could offer clues on growth and visibility into 2027, which is key right now for investors. But there are certainly some tailwinds as well, which will help NVIDIA. Hyperscaler CapEx is set to top $730 billion this year, while cloud giants continue to report backlogs in AI demand. Supply constraints in memory and chip production over at TSMC are also helping to support NVIDIA's pricing power as well. But there are challenges as well. The hyperscalers are developing more of their own chips in-house. NVIDIA still relies on a relatively small number of customers in the form of those hyperscalers, and investors remain very nervous about whether the huge levels of AI spending will ultimately pay off. At the same time, there are concerns around circular financing, which have resurfaced following NVIDIA's announcement of a $500 billion financing package. And just one final point, Dom, option markets are pricing in about a 5% move after earnings, roughly in line with the last 4 quarters. And as always, a lot will be riding on these NVIDIA numbers.
And less volatile than it has been for the last 8 quarters. And maybe that signals my next question, Arjun. The expectations landscape for investors has evolved and shifted over the course of the past few years, given the AI narrative. It was at one point the poster child of AI. It maybe still is. But those expectations and the deliverables that NVIDIA gives investors have changed relative to where investors think the stock should be. How exactly do those expectations play out? What can they say, and will it be enough?
Yeah, look, I think that NVIDIA is kind of caught in this narrative battle right now. The market still sees this very much as the data center play. It is at the heart of this data center build out still. And so NVIDIA, the key for NVIDIA is going to be telling that data center story and around the Vera Rubin chip, trying to tell investors, hey, this is going to be our next big explosive leg of growth. And that really is going to be the critical messaging. But also you have heard Jensen Huang over the last couple of quarters, and certainly you hear it again, talk about what NVIDIA is in the future. It's not just about the data center, it's about NVIDIA's role in things like robotics, in things like autonomous driving, in these new use cases that are going to emerge around artificial intelligence as well. There was a deal just in the last 24 hours with Perplexity and NVIDIA teaming up to do AI processing on device as well. This is a new area, edge computing as well. So there's going to be a lot of talk about where the future is headed from Jensen Huang on the earnings call today. But the key is whether he can convince the market, convince investors that actually the NVIDIA story is about that future rather than just this data center play right now.
All right, Arjun Karpal with the tech trade for NVIDIA there. Thank you very much for that. Well, it's not just NVIDIA, though. Investors are also tracking the retail trade in the wake of dismal results from Dick's Sporting Goods and what it calls a quote-unquote challenging footwear business. Shares coming off a more than 30% drop yesterday. That's the worst one-day sell-off in corporate history for them. Today, we hear from Bath & Body Works, Kohl's, Urban Outfitters, and Williams-Sonoma, amongst others. But for Dick's, the sell-off may be presenting an opportunity for investors hungry for a juicy dividend, which now sits at 4%, or a turnaround story for a stock that's sitting more than 49% away from its all-time high. Here's our own Jim Cramer on Mad Money just last night.
Given the scale of the miss and the guidance cut, I don't blame anyone for getting out of Dodge. Still, I don't want to give up on Dick's Sporting Goods at these levels. In the long run, call me a believer, because this is the only remaining sporting goods retailer with genuine scale in this country, even if it's also joined at the hip with struggling Foot Locker. I mean, they could always close it. It just might take a few months before the sporting goods, footwear, and apparel space clears that excess inventory and starts bouncing back.
All right, well, speaking of turnaround efforts, we're going to chat with Yale School of Management's Jeffrey Sonnenfeld on the very issue and other names in the midst of their own turnaround stories, for better or worse. That story's coming up later on this show. Well, to the action overseas, and our Karen Cho and Elaine Yu both standing by with the action from London and Hong Kong. Karen, we're going to begin with you.
Good morning, Dom. Well, the European stock 600 index is gaining just modestly this morning as investors bide their time waiting for those all-important earnings out of NVIDIA. Oil prices have slumped today, also having a bearing on the markets here amid renewed optimism that the Strait of Hormuz could soon be reopened. You are seeing the FTSE 100 slide a fraction less than 1/10%. We've trimmed some of the downside too on the DAX, and in fact you can see trying to push positive. One of the markets that's been under some pressure in recent weeks has been the French market, down about 10 out of 11 straight sessions. So also one of the better performers today. By sectors, it's travel and leisure stocks that are gaining, thanks to that story around the Strait of Hormuz, really putting a bit under some of those stocks, the likes of Ryanair, TUI performing in the budget space. And basic resources are ticking higher this morning. You've heard a lot about the debasement trade. Gold has firmed up, and that has been putting a bit back into the sector this week. Meantime, oil and gas stocks are weak, as you'd expect in early European trade, as Iran has said it has reopened talks with Oman. That drop that we're seeing this morning really impacting that sector. And as you can see, the reversal there, along with tech, as investors just hit the sidelines waiting for confirmation around some of the earnings on NVIDIA and what that says about this CapEx cycle. Back to you, Dom.
All right, Karen Cho with the European trade. Thank you very much for that. Now to the action in Asia, and our Elaine Yu, who is in Hong Kong tracking that market action. It's been generally positive, Elaine.
That's right, Dom. So Asians' tech shares are rising ahead of NVIDIA's earnings as investors here turn cautiously optimistic. In Korea, the Kospi closed nearly 1% higher. Samsung Electronics closed higher than that, and SK Hynix is up 0.6%. Now, Japanese shares also closed higher. The Nikkei 225 is up 0.6% as well. And China and Hong Kong shares also climbed, tracking a broader recovery in the global markets. The tech-heavy Star 50 closed 1.7% higher. Now, a story we're watching today is Japan's SoftBank Group reportedly talking to investment banks about a potential $10 to $20 billion bond offering to help refinance a loan on its investment in OpenAI. This is according to Bloomberg. Back on Monday, the conglomerate said that it plans to issue a record 1 trillion yen or 6.3 billion retail bond as it raises funds for its investment in the ChatGPT developer, and proceeds from the sale would be partially used to repay a $40 billion bridge loan, according to Bloomberg. And this is happening as companies deepen their AI spend despite concerns about their returns. Back to you, Dom.
All right, Elaine, you live in Hong Kong with the market action there. Thank you very much. We've got a lot more to come here on Morning Call, including 10 weeks out, why markets are starting to really care now about the 2026 midterm elections, plus 2 out of 3 ain't bad. We're digging into the turnaround stories of consumer giants that you know, brand names that we are all aware of, and the CEOs behind those efforts. And then later on, much more ahead of NVIDIA's big earnings report and what options traders are saying right beforehand. Very busy hours still ahead when Morning Call returns after this commercial break.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime report, weekdays streaming on CNBC Plus.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
Crypto FC on The Score.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Become a CNBC Pro. Go to cnbc.com/GoPro now.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app. A lot of strong numbers this morning. Breaking news.
We've got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
I check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection. Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
All right, welcome back to Morning Call. A check on shares of Target, Starbucks, and Nike. And 3 stocks with 3 very different performances so far this year. Target and Starbucks up 25% and 67% respectively in 2026. Nike, though, down nearly 38%. The common trend and theme between these 3 consumer icons is ? Well, according to Yale's Jeffrey Sonnenfeld, the CEOs of these companies, who all face skepticism from analysts when initially taking those top jobs, are now writing their turnaround playbooks for this year. Jeff joins us now with more on that story and just the status update on those three particular turnaround stories. So, Professor, thank you very much for being here and for the early wake-up call. Let's go through those three names and maybe the synopsis in your mind of how those turnaround stories are playing out and who's doing better than others.
Oh, I'd love it. That's great. If you can't stand good news, by the way, to start the day, I'd love to get into it.
Let's do good news. Come on, let's do good news first. Good news first. Let's do it today.
Well, it's, you know, if you take a look at these stocks, all three are iconic brands. We in fact, in all three of these, when the CEO stepped in, we said these were going to be successful turnarounds. And I admit, as you during the break were serenading me with 2 out of 3 ain't bad, is I actually think Nike is going to pull it out too. And if we get to it before lunchtime, I'd love to tell you about that saga. But basically, all three of these have taken people who know their space, they know their sector, they hit the ground running that way. All three of them are very employee-centric. They're humble, and they focus on operations, customer experience, and that's what they have in common. So it's, you know, that old expression, new broom sweep clean. A lot of times boards want this messianic savior to parachute in from the outside. They don't know that Rastafarian old adage actually says new broom sweep clean, but old brooms know the corner. So wisdom counts, and that's where these guys differ.
So that's a good point, because in some way, these three CEOs have knowledge about the operations that they've been stepping into to lead. They have intimate knowledge of the operations themselves. They've been there for some time in some certain cases. What exactly does that do for the turnaround efforts that are in play? Because expectations are key. These CEOs have to navigate these turnaround stories with a certain relative level of expectation. Which of those expectations between Starbucks, Target, and Nike seem to be positioned best for future success for these three CEOs?
Well, if I could steal your line during our break, is that the lowest expectations are set for Nike now. So I actually think that the CEO there, that Elliott Hill, has come in with 30 years of experience, but people have such low regard. He had so many problems that he's inherited, but he's focused on changing out the brands, huge problems in China. So the expectations are so low that I think that will be pretty dramatic. But Target, the fact that he's up 75% since he's been on the job, and he's only been there not even 2 quarters, it's really remarkable. Store operations with a great focus, a tremendous sense of knowing, where the bodies are buried, where the issues are, what he's done. Some very effective partnerships with some designer brands, and a real uplift. And just cleaning up the stores has been a remarkable transformation for Target. But to be up 75%, and at Starbucks, some skeptics would say, well, look at all the turnover. But Howard Schultz, I've known everyone. I actually knew Starbucks before Howard Schultz did. I discovered it in 1978. He discovered it in 1981 out in Seattle. But of course, I didn't know what to do with it, which is why I only teach business. He went out and built a business around it. But one of his weaknesses was on the succession side. And people were wondering, would this guy get a chance? And he did, because he came in. This is Brian Nichols, of course. Michael Fidelki, as we were referring to before, back at Target, has done a tremendous job. But Brian Nichols comes in. Again, each one of these guys, 30 years of experience in knowing what they're doing. He comes in there and he understands that the employees have had some issues. They're dramatic change in incentive pay, so that I think there's a sense of spirit, energy. They've cut the time like 4 minutes or so for each one of the servicing of the drinks. And the quality is there. There were some weird things done by his predecessor with these flavored double shot sweet drinks in the summers. And his predecessor had to be a personal friend of mine, but he knew how to sell Lysol detergents, Lysol sanitizing stuff, and women hygiene projects and products and things with the consumer goods company that was not really in this space. Whereas coming in from somebody who really knew how to turn about Chipotle, how to turn around Yum Brands before, that really paid off. So you see that the customer experience at Starbucks has gone through a tremendous transformation. Jury's out in some people's minds for Nike, but I really think he's addressing the right things.
We just have a few moments left here. Is it fair to say, is it an okay analogy to make that Elliott Hill's situation at Nike right now is going to be akin to what Michael Fidelki had at Target when he stepped in. Both companies with very low expectations and room to grow. Can we expect that kind of turnaround to take shape at Nike as it has at Target under Fidelki?
Yeah, I think it's a great parallel you draw between the two, because even their dispositions are humble, and to some critics, humble to a fault. Is people thought, well, Michael Fidelki is not a backslapping, charismatic carnival barker, but that really worked well for him at Target. And similarly, Elliott Hill, people are saying, oh, this is a nostalgia pick when you have these insiders. And by the way, insiders historically dramatically outperform the outside messianic hires. You just take a look at what Dave Ricks has done as an insider, of course, at Eli Lilly, or what we think of when we see at Bob Iger did, of course, at Disney, or Satya Nadella. These were off the charts performances as insiders. So these guys have that in common, is that they know their business, they know the people, they understand how to integrate operations, marketing, and strategic perspectives, and they don't mind rolling up their sleeves and really understanding the customer experience.
All right, Professor Jeffrey Sonnenfeld, Senior Associate Dean for Leadership Studies at Yale. Thank you very much. We appreciate it. Come back and see us again soon.
Thank you.
All right, straight ahead on the show here, the brain drain and OpenAI continues amid another top executive exit. But first, a check on shares of Intuit. The company's fourth quarter results topping estimates, but it expects sales growth to slow in the year ahead, weighed down by a decline in its desktop business. Intuit's CFO also saying they may accept short-term trade-offs in its business as it looks to boost TurboTax customers. Intuit shares down 12% pre-market right now. Morning Call is back after this.
Before the lights go out, success on track starts long before the race. It's in every detail, every discipline, every process. While a team prepares to race, another team is already at work. Ecolab supports critical environments, from the factory to headquarters, protecting people, operations, and performance. We push together as one team. When world-class racing meets the best in science, nothing is left to chance. This is what the best looks like. Driving innovation and building a high-performance future that's better for people, planet, and business. The best of us, winning the right way.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
I'm with Becky. This is the greatest show on earth.
Squawk Box, streaming on CNBC Plus. Be there for the opening bell.
Right here.
Squawk on the Street, CNBC.
Combat sports icon Ronda Rousey. She's conquered the UFC, dominated the WWE, and now she's sounding off on both.
It's extremely oversaturated right now. There's too many fights.
San Francisco 49ers owner Jed York. He sat down with us to explain how he turned the team around and the critical lesson he learned. Plus, influencer Jesse Rydell, also known as Jesser, explains his simple ingredient for online success. This is CNBC Sport on the Record.
Don't miss the highlights of the PGA Tour. Catch the action from the PGA. The biggest hits and misses. Join us on the green, Saturday and Sunday afternoons, only on CNBC.
Welcome back to Morning Call. Checking some of this morning's latest headlines. The U.S. is reportedly considering more trade penalties against Canada following the latest tariff tit for tat. According to a report, new measures could include more tariffs on, quote, other trade actions at the president's disposal. The Wall Street Journal is reporting that President Trump has submitted his 30-year nuclear deal with Saudi Arabia for congressional review, insisting the accord remains contingent on the kingdom normalizing relations with Israel. If approved, the deal would potentially allow uranium enrichment to take place on Saudi territory. Well, Meta Platforms and a group of state attorneys general are reportedly weighing a potential mid-trial settlement over a lawsuit accusing the company of intentionally designing Facebook and Instagram to be addictive to young users. That report coming the same day Meta's head of Instagram testified in a California court that very few teenage users were aware of or even used a key safety feature that Meta eventually turned on by default 3 years after its rollout. Well, the brain drain continues at OpenAI ahead of its possible IPO, the company confirming to CNBC its head of data centers, Chris Malone, has recently left the company after joining back in March of 2025. Malone's exit comes just weeks after the company's revenue chief said she would be leaving less than a year in that role. OpenAI's operating chief, business and product chief, and 4 others also saw their way out in recent months. And Richmond Fed Chief Tom Barkin says there will eventually be a, quote, reckoning if the U.S. debt continues to rise and people stop buying it. Barkin, an alternate this year on the FOMC rate voting committee, becomes a voting member of the FOMC in the next year. Well, still on deck for the show here, Wall Street braces for a balance of power shift in Washington and potentially big policy fallouts as well. Morning Call continues next.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
America's superpower is creativity. The ability to come up with new ideas, the ability to express those ideas, and the ability to bring together people as one community through creativity. I think that's America's superpower. I'm Anil Chakravarti. I run the enterprise business here at Adobe. When I think of America as the land of opportunity for me personally, I am very grateful to America for all the experiences and success I've had and my family has had. I came from India when I was 21 years old. I had the privilege of going to MIT as a master's and then a PhD student. America has been very kind to me. I went from being an aspiring scientist to an aspiring businessman. And, you know, only in America you can go from doing one thing to saying, no, I want to do something else. And you know what? The country always gives you a chance. America's success over the last 250 years, one has been around the values of the founding of the Republic. Liberty for all, the continuation of democracy and making sure that the expansion of rights to everybody. You know, it has taken through its own twists and turns, through the Civil War and through many other historical events to get there. But those values have really sustained the growth of America. Then you go back to creativity and innovation. Those have been critical to powering America's economy and society. To me, the American dream is the ability for anybody to build their own career, to build their own family, and build their own community. As long as you are putting your best foot forward and you are not taking anything for granted, you will have a tremendous amount of opportunities.
All right, let me tell you about ambition. Too much is not enough. Don't just waste this life. Set the goal really high and go all out. And then you create another vision, and another vision, another vision. So that's being ambitious. This is what it's all about.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of the quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giammatteo, only on CNBC.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long.
End users are using our AI even more frequently.
Are you heading into a record Q4? We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
It's becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented.
This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
The AI boom is reshuffling the global equity market rankings. With Taiwan and South Korea leapfrogging past long-established markets, Taiwan has climbed past Canada and India to become the world's fifth largest equity market, while South Korea has moved into sixth place.
All this happened within the span of just a few months, because last December, they were in the 9th and 11th places respectively. Now, such a shift is not unprecedented, but what is unusual is the speed at which these two have been climbing.
But this reordering isn't necessarily being driven by broad economic growth. Instead, it's about three companies at the heart of the AI hardware supply chain.
It's the AI theme which is driving things. So we have this kind of perfect positive storm of industry fundamentals which are resulting in very, very rapid profit growth.
So what does this reshuffle tell us about how AI is changing global stock markets? And what are the risks?
The day's top stories driving Wall Street. Up to the minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC Plus.
I'm Dominic Chu in for Morgan Brennan. Welcome back to Morning Call. U.S. equity futures right now are stable, with the Dow riding a three-session winning streak, and the Dow is actually implied higher by a very modest 30 to 40 points at this point in the pre-market trade. The S&P is implied lower by roughly 16 points, and that tech-heavier NASDAQ 100 trade implied lower by roughly 70 points. Treasuries ahead of today's big July PCE inflation report are showing at least a little slight uptick in the yields for the 10-year side of things, sitting a hair below 4.65% right now. The 2-year note yield 4.20%, and the 30-year long bond 5.179%. The dollar index is seeing a little bit of a gain so far this morning, trying to reverse some of the losses that we've seen over the past week or two or so. The dollar index right now currently at 98.99, just up very marginally. Bitcoin prices now below the 80,000 mark. We did briefly top that mark this week, currently sitting at just around 78,544 and change. That's off 0.5%. Gold prices also coming off another 3-month high, and they're lower this morning by about 0.4%. COMEX gold currently sitting at $4,676.80. Energy, with oil coming off its worst day in a month as traders watch for signs of a Strait of Hormuz deal. U.S. benchmark West Texas Intermediate down just about 2.75% to $80, almost on the big figure right now. ICE Brent crude futures $85.97, off by about 3% there as well. Global markets, a mixed session though in Asia. The Nikkei and Kospi, the best performers there. Checking the early trade in Europe as well, you can see the CAC in France, the outperformer, up 0.5%, and the German DAX up about 0.1%. Now to one of the potentially big market-moving events of the week, NVIDIA's earnings after the closing bell today. Shares closing up more than 2% yesterday to snap a 7-day losing streak, the worst such run for the stock in more than 4 years, during which it dropped 7%. NVIDIA shares have fallen in each of the past 4 sessions following its earnings report, and they're roughly flat since the last report that we saw back in May. The company's position as an AI leader in that boom remains solid, but it's also looking for ways to be less reliant on the major hyperscalers and those clients, tapping its strength to keep people buying its chips. Earlier this month, NVIDIA announced a partnership with 6 Wall Street heavyweights on a $500 billion financing push. CEO Jensen Huang discussing on CNBC how the plan aims to treat AI infrastructure much like assets customers can actually borrow against.
We used to build chips that we sell, and these are technology components that people buy and use. But now, NVIDIA's AI factory platform is really an investable asset, an infrastructure asset.
All right, let's talk more about NVIDIA's earnings now with Brent Kachuba, the founder of Spot Gamma, watches the options market for a living. So, Brent, thank you very much for being here with us this morning. The NVIDIA report, and I've said it before, is arguably the most important earnings event of the season. It has the most weight in the S&P, the most weight in the NASDAQ. Just how are those options markets shaping up ahead of that key report this afternoon?
Thanks for having me. And the interesting thing is you can see the fingerprint of NVIDIA earnings in the S&P 500 options market. And so to give you an idea of that, the S&P 500 is pricing in an extra quarter point of movement for tomorrow. That's Thursday, because obviously NVIDIA reports after the close. To put that in comparison, for Friday in the huge Jackson Hole event, S&P is pricing in a half a point of volatility for Friday. So comparatively, you can see it matters. This is a single stock's earnings.
Now, the expectations right now, we've talked about the evolution of people's expectations of NVIDIA's earnings reports. The market's pricing in plus or minus 5% in terms of that move right now. That is less volatile than it's been over the course of the past 8 and 12 quarters.
Yeah.
What exactly does that signal to you about how investors are positioning with NVIDIA, given the broader macro narrative that's happening right now?
There's two interesting dynamics here. As you mentioned, if you look back over a long enough period, it's a fair amount of volatility, about 7%. If you look at the last few reports and average those out, it's about 2.75% of movement. So at a 5% move for NVIDIA, it's a little bit rich in terms of what we've seen over the last several quarters. The other thing that's fascinating about NVIDIA is there's such a massive ETF and derivatives complex tied to this stock. And you mentioned top holdings in the NASDAQ and the S&P, but do you know how many ETFs in the U.S., listed U.S. ETFs hold NVIDIA stock?
It's got to be a ton. And if you factor in all the single stock leveraged ETFs and everything else, it's even more so, right?
803 is the number, which to me is staggering. And so when you look at the impact of the stock to just the entire kind of U.S. stock market ecosystem, it's just that's why it's so important to the market and why we watch it so closely.
Another point to watch here as well is a Dow component, and that's Salesforce, right? Another one here. So how exactly is Salesforce shaping up right now?
Salesforce has a 6% implied move. If you look at the last several quarters, it holds at 4% or less, the earnings move. And so the market is pricing a little bit more volatility. You obviously had SaaSpocalypse and a lot of the other kind of software AI narratives that have been popping up over the last couple of months. But traders are pricing in less volatility here, I think, if you look at the way that options market is positioned. And so I'm not expecting much out of Salesforce earnings here. Stock is also around 210 is the high over the last couple of months, and so it's right against that resistance level. So I'm not expecting a lot of volatility here out of Salesforce earnings.
And if I could kind of veer off the beaten path for a little bit here, we talk often about the options moves around these key earnings events. I'd also like to get your take on what's happening because the bond market is a huge focus for investors right now, given Treasury Secretary Bessent's comments, possible use maybe of the Treasury General Account to kind of move interest rates around. How exactly are traders using options right now to position for future interest rate moves? And what are you seeing on your end?
Yeah, we track the TLT, HYG, LQD, those big ETFs. And if you go back about 2 weeks, you saw a heavy put skew, which tells us that traders were owning puts. They were betting on more downside in those ETFs, which meant higher rates. And this was back when rates were, long-term rates are approaching many-year highs, decade highs, right? And so what we're seeing now, since Bessent started kind of jawboning, I guess I'd call it, over the last couple of weeks, suddenly we've shifted much more neutral to even leaning a little bit bullish in some of these assets. And TLT's been moving up, for example, quite strongly as rates have come down. Also tied to that is gold and Bitcoin. Those are call skew heavy, meaning people have been piling into call prices here. Those are getting a little bit rich if you look at the options prices, but you can totally see people are kind of front running the idea that rates are going to kind of come down a little bit. You're certainly seeing that fingerprint in the bond ETFs.
All right, so some possibly bigger tea leaves at play when it comes to gold, Bitcoin, and bonds on the options market side of things.
And that's exactly right. And for NVIDIA earnings, you may see an initial reaction, but then you really need that Jackson Hole event to clear before I think you see the trend really set up.
All right. Brent Kachuba at Spot Gamma, thank you very much. Please see us again soon.
Thank you.
All right. Well, don't miss Mad Money tonight as Jim sits down for an exclusive interview with Salesforce CEO Mark Benioff and NVIDIA's Jensen Huang. Following both companies' earnings reports, big night, Mad Money tonight, 6 p.m. Eastern Time. Morning calls back after this.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, streaming on CNBC Plus.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that will shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
Closing Bell Overtime, CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
I think if I knew how complex was trucking, I think I would have thought again. So the unknown was very helpful.
Gaurav Biswas thought he had landed on a simple idea. Uber, but for trucks. There was just one problem. He had never moved a truck in his life. Then one day at dinner with friends, he saw a problem he had never thought much about.
He was constantly having to walk out of the restaurant, and we could see that he's arguing or shouting with somebody. I was like, hey, is everything okay? He's like, oh, I have 7 containers that have to go on the same vessel tomorrow. Then I said, hey, why you should have an Uber of trucks.
That idea became Trucker, a digital freight platform that connects companies that need to move cargo with the truck owners and transporters that carry it.
Trucking is extremely important as a sector because whatever you touch and feel, consume, it's all touched a truck. Whether it's a seaport or an airport or a factory, the trucking is that connected.
All right, turning now to the latest round of primary contests. Senator Darlene Graham winning South Carolina's Republican Senate primary runoff, defeating Congressman Ralph Norman. The race was seen as a test of President Trump's endorsement power after a string of his backed candidates stumbled in recent weeks. Yesterday's primaries coming with just 2 months to go until the midterm elections. And as CNBC's Garrett Downs highlights in a new article, Wall Street is increasingly turning its attention towards those big elections. Garrett actually joins us now with more on that story. Garrett, there are increasing expectations that Democrats could take partial, if not complete, control of Congress from Republicans in a certain scenario. Why does a Democratic flip raise debt ceiling risks?
Yeah, hey, good morning, Dom. So a Democratic flip raises debt ceiling risks because the debt ceiling becomes leverage when you have divided government. That means that Democrats might ask for something in return for their votes to raise the debt ceiling. Now, we've seen this scenario play out. In 2023, when Republicans flipped the House, they did the same thing. They demanded spending cuts in exchange for the debt ceiling and brought us right to the brink of default before an agreement was finally reached. Now, investors don't think we're going to actually get to a default, but they are expecting brinksmanship. And I had one analyst tell me to keep an eye on the bond market here to see how the market is weighing this. If you start to see a sell-off, that could be that they're taking it more seriously.
Okay, so what, if anything, I mean, we see some whipsawing. The executive actions, they're worrying some analysts right now with regard to everything. How exactly is that playing out, and which sectors actually in the market could be more at risk with some of the kind of policy whipsawing that we could see happen?
Yeah, Dom, so I had one analyst tell me that a divided government could end up with a more volatile Donald Trump. That means a Donald Trump that's no longer willing to work with Congress if Democrats take it over and does everything by executive action. So this analyst pointed me to the tariff decision that President Trump made last year. The president's tariffs were in effect for about a year, and they were one of the most market-moving things he did in his second term now. And the reality is he did that without Congress. And analysts tell me that it's likely that he'll do more things like that if he loses Congress. And that could lose what you normally get with divided government, which is the filtering out of the extremes, which the market typically likes. But with Donald Trump in office, it may be a bit of a wild card.
Okay, and of course that leads us to the bottom line question. With all of these kind of, I guess, scenarios in play, should investors and traders be moving around or readjusting positions, or should they wait until after the election cycle actually happens?
You know, Dom, I think it's really a wait and see because, you know, investors just like us, we're going to be waiting for election results to come in before we really know who's going to be in charge of Washington. I would say one thing analysts are pointing to is they're warning that a delay in election results could end up causing some volatility. You know, different states all have different rules for how they count elections. And in this world that we live in now with slim margins, it could take a while before we know who the final victor is. So that's something to keep an eye on.
All right, Garrett Downs, thank you very much for the update there. And of course, you can go to CNBC.com to read Garrett's full story on the midterm election cycle. We appreciate it. All right, as we head to break, the world is mourning the loss of Dolly Parton, who died after a brief battle with cancer, according to her representatives. Flowers and other tributes going up at her home outside of Nashville, Tennessee, her Hollywood Walk of Fame star, and at the Empire State Building in New York City as well. President Trump ordering flags to be flown at half-staff in memory of Parton, who had recently canceled several engagements, saying she was dealing with some health issues. She was, of course, a music icon with 25 #1 songs on the Billboard country charts and wrote more than 3,000 songs. Her net worth was estimated to be between $450 and $650 million. In addition to her music career, she was also a movie star, entrepreneur, theme park owner, and philanthropist as well, including a $1 million donation to help fund Moderna's research into a COVID vaccine. But perhaps her most notable project is the Imagination Library, which invested more than $500 million to gift more than 300 million free books to young children worldwide. Dolly Parton, icon, at 80, dead.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus. Never miss a moment.
Cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices.
Non-technical people can create a website, can write code. The same thing will happen in financial services.
If you're diagnosed with melanoma today, and I'm diagnosed by the same doc, you and I will get a different chemical. It's totally individualized because we know today cancer is a disease of DNA.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome.
To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
All right, welcome back. It's time now for your call sheet, where we look at the topics driving the trading day ahead. The crew members assembled today are Warren Pies of 314 Research, Keith Buchanan of Globalt Investments, and Jose Torres of Interactive Brokers. Gentlemen, thank you very much for being with us this morning on the call sheet. Let's start with our first topic, which for me has to be NVIDIA earnings. I'm a stock market guy. I like to talk about stocks and the market overall. So let's begin, Warren, with you on just what you think the expectations are for NVIDIA and just how much influence will they have in the coming days and weeks for the market narrative.
Yeah, I mean, I think that the expectations are that margins are going to stay strong and that they're going to guide for shipping more product, and so higher revenues out aggressively into the future. So I expect it to be like a typical NVIDIA quarter where it's going to be all good news fundamentally. And so I just think that that's kind of consensus at this point and understood. And we haven't seen for now, maybe a few quarters, the NVIDIA earnings report hasn't been as big of a market mover as it had in the past, say 2024 into 2025. So my big takeaway is going to be, okay, I expect strong results. We monitor compute demand ourselves, and it all looks extremely healthy. My big question is, how's the market react to these numbers? And we'll get more feedback from that.
Of course, that's going to be a big one here. Keith, you're a portfolio manager per se, so let's talk about whether or not NVIDIA is a current holding for you, and whether or not from a portfolio manager's perspective, the NVIDIA story has changed enough where you would make any kind of adjustment to those portfolio positions.
Sure, we have exposure to NVIDIA through broader indices and also directly in our shop. So we're also looking at it very closely from a broader perspective. We want to make sure that the valuation that NVIDIA reflects right now is also correlates with the growth expected going forward. We're really impressed with how the company has grown into a valuation that seemed rich a year and a half ago. But that growth continues to try to justify, its 21, 22 times earnings going forward. We feel it is not a huge hurdle to get across for NVIDIA. So we're looking at it from a valuation and growth standpoint. We're really interested in that facet of earnings report.
All right, so that's the story from that perspective. There's also a macro effect because a lot of the conversations around data centers, hyperscalers, the spending on chips, the build out and everything has added a level of macroeconomic influence. Whether or not it could be inflationary, Jose, is it inflationary to see companies like NVIDIA doing the kind of business that they're doing and companies like OpenAI and others buying as much as they are buying?
At the margins, Dom, not much. Really, from an inflation perspective, we're seeing that oil is down in the 70s today. That's going to be great news. I think treasuries are going to be set up for a rally, third day in a row. I think the PCE data this morning does have room to miss to the downside. As far as NVIDIA, huge macro story because, of course, all the construction and the AI infrastructure development is lifting GDP numbers, but it's also leading to a rising stock market, which is boosting the wealth effect and bolstering consumption across the economy. We've had terrific growth. The growth is expected to continue. However, we could use lower interest rates. I think as we move into the future months, as things with US and Iran reach a new level of normal now with more financial sanctions, more of a Cold War rather than a hostile hot one with less violence or no violence, that is, that can keep oil around the 70s, maybe even the 60s, and bring the core CPI. August, I'm expecting it to come in at 2.4%. That could be 2.2% by year end. And that's really conducive for a bullish environment in stocks.
All right, Warren, with that in mind, I mean, he brought up the PCE data. That's our second topic, of course, that we're talking about right now. Is the market set up, especially for the tech sector and some of the broader stories that we're seeing around AI, is that kind of inflation story one that we have to watch because it could be a real potential headwind if we start seeing interest rates move steadily higher above where we see them right now?
Yeah, no, my view is that like we took down our equity risk from overweight back in mid-April all the way into mid-August. And the reason we did that is because I look out and think this market's been so disjointed and so uncorrelated. If there's an event that spikes correlations, it could be problematic. Not that we would say we're bearish, but we see the macro events building out there. I mean, we have Jackson Hole this week. We have the PCE this week. I know what Jose is saying, but our nowcast points to core PCE coming in around 0.28 month over month. And I think if we were to get a number like that, which is really difficult to predict out to the 100th decimal place, but if we were to get a number like that, I think you'd see a violent repricing in the odds of a Fed hike in September. And so, yeah, I think we're on a knife's edge. In my opinion, the September meeting should be priced as if it's a coin flip or 50-50 proposition. So, yeah, these are tech and everything is going to be paying close attention to these macro events.
All right, so that brings us to our third topic, that macro event at the end of the week, and that's Kevin Warsh's first speech as a Fed chair at the Jackson Hole Symposium. Jose, what are your expectations for just what we could hear or not hear from Chairman Warsh?
Well, you know, Dom, he started off June really hawkish. July was more of a dovish meeting. I think he's leaning in the dovish direction. If he's too hawkish on the balance sheet, if he talks too much about rate hikes, that could derail the economic expansion and will almost certainly drive even more volatility in the fixed income markets, which, of course, equities don't like. I think with excluding energy, inflation is a really positive story. I heard what Warren said about the PCE. You know, that those numbers have been quite elevated, but I think the key differential and a significant factor for the U.S. economy is the fact that home prices are essentially flat. Rents are down in many areas of the nation, and that's really driving this big spread between the PCE and the CPI. And I think that's going to be something that in the months ahead, the data task force at the Fed that Fed Chair Warsh has set up is going to be looking into in terms of which of the price pressure gauges are more appropriate.
All right, and Keith, the last word to you. From your perspective, do the markets need to see clearance from NVIDIA and Warsh before seeing a catalyst to move higher or lower markedly?
Sure. We look at the catalyst at the end of the week being the chairman's speech as much more important than NVIDIA's earnings, frankly. We look at the 30-year as the most valuable price in all of risk assets.
Sure.
As that continues to move higher, it's risk on the rest of the market. And we feel like that speech has to really toe a line in order to keep that 30-year rate contained.
All right. Thank you very much, gentlemen. Warren Pies, Jose Torres, and, of course, Keith Buchanan. We appreciate it. Keep it right here. Squawk Box starts right now.
Good morning, Wall Street. Gearing up for a lot of things today, but maybe top of the list, NVIDIA results, the bellwether, AI bellwether set to report this afternoon. Ahead of that, we'll get a fresh look at the Fed's preferred measure of inflation. And the U.S. reportedly looking at ramping up tariffs on Canada even further right after that country hit back at the U.S. Yesterday, it's Wednesday, August 26th, 2026. Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Joe Kernan. Becky's off today. I got a lot going on. U.S. equity futures at this hour, 30 points higher on the Dow. NASDAQ looking to open about 47 points lower, 48 points lower, than the S&P 500 off about 15 points right about now, maybe 14. Let's show you where energy stands because that's been the big story across the board. You're looking at WTI crude now down at 80.11, so we're moving potentially in the right direction. Brent crude at 85.95. I don't know how much impact you think that's had on the other end in terms of where equities land, but let's also show you Treasury yields ahead of Jackson Hole. It's all happening. It's all starting. Jackson Hole, U.S. equity, U.S. Treasuries on the 10-year 4.6, the 2-year at 4.2, and we're going to talk all about it because on today's Squawk Planner, we're going to get earnings from NVIDIA. Those numbers due after the closing bell. The company is the largest, of course, S&P 500 member and an AI bellwether with a market cap of more than $5 trillion. So much riding on its fortunes. Salesforce and HP will also report after the bell. Before that, we're scheduled to get some results from some consumer names as well. That's going to happen this morning. We've got Bath and Body Works. We've got Kohl's, Williams-Sonoma, and J.M. Smuckers. And we're going to speak with that company's CEO just after they report at 7 a.m. It's also a big economic day today. We're going to get PCE, July PCE inflation numbers. That's at 8:30. We'll get personal income and spending. We get durable goods and a revised look at second quarter GDP. So there's going to be a lot of data and earnings to consider that will also may get considered in the broader context of whatever you think is going to be said at Jackson Hole, in the back of everything that the Treasury's done, and whatever you think Kevin Warsh is going to say, and what Stan Druckenmiller said in between.
We were hoping for a 7 handle yesterday on WTI, and we didn't get it. But what would say it was 80.17?
Yeah, just
17
80
cents.
So we'll see. We'll see.
Seven is a psychological. It's different when it's down in the 70s. People think it's, almost back to where another 10 points, 10, 15 points ago. White House is looking at imposing more trade penalties on Canada, including higher tariffs. This is a Bloomberg report that we're citing. Yesterday, Canada announced it's going to hit the U.S. With tariffs on $20 billion worth of U.S. goods. That's kind of a quid pro quo, if you remember that $20 billion number, because that matches President Trump's latest move. It's 5% of the 900, whatever our trade is with Canada. It's not nearly as much. It could ramp up, and that could be a problem. But at this point, it's a fairly small part of the U.S. economy, at least more so for the Canadian economy. The tariffs range from 15% to 50%, and they target things like dairy products, seafood, and wood and paper products, scheduled to take effect, if you're waiting, on September 18th. In a call with CNN yesterday, President Trump responded to a Canadian claim that the U.S. had made 11th hour demands in trade talks that caused the breakdown over the weekend, and the president said, that sounds like me. So, I don't know. Maybe that's a concession.
Meantime, we got a warning coming this morning from Bill Gates regarding AI. The billionaire laying out his thoughts on AI in a new 12-page essay that he published on his website. Gates writes that the transition to AI will be marked by what he's describing as extreme turbulence, and asks how the most vulnerable to AI's disruption can be protected. He says, in terms of equity, AI will either be the greatest equalizer ever invented or the worst source of injustice. The challenge is monumental. Gates calls rising to that challenge the world's top priority, but faults leaders and experts for not planning ahead for a world that could contain far fewer jobs, he says, than exist today. He warns that AI could replace human relationships and empower people to do more harm, though he also speaks of the upside of AI, including speeding up innovation in areas like healthcare and agriculture. Ultimately, Gates calls for designing a domestic and international framework for dealing with AI. And I think the quote of the day that's going to be taken away from the essay is, quote, "There is no plan." And I think that is the question. Now, for the past couple of years, you've heard from people like Sam and Dario talking about potential job losses And there's a whole view among others in the Valley that it's not helpful to AI, that it's not right to be scaring people about AI. This is going to get sort of thrown into that
somewhere
debate.
in the middle, but I don't see how you can't be afraid. But Bill Gates, I take with a grain of salt. I'm still really worried about, being, a big, huge tidal wave hitting me where I'm sitting right here in Times Square from climate change, and he kind of changed on that. So, not really impressed with. I know he's done a lot with, trying to further human health, but there's certain things where he's lost his way in certain parts of vaccine. I don't know. Bill Gates,
So
I take it with a grain of salt. I'm more interested in trying to talk to you about Dolly Parton because I'm so old. She was only 80, and tributes are pouring in because she looked the same. She never really changed, if you notice. And to lose someone shockingly like that, and you don't appreciate. I didn't appreciate her until she's gone so many times. But my own personal remembrance is of a show that you probably have no idea about because I think it was in the 60s, Andrew. It was called The Porter Wagoner Show, and it was like a syndicated.
I have no idea.
Syndicated. I thought of it as like a hick show from Nashville. It really was. And she started really as his almost a sidekick, doing a duet. And she wrote that amazing song that she's so well known for, the Whitney Houston cover.
Mm-hmm.
And she wrote that when she was trying to tell him, I'm leaving the Porter Wagoner Show after about 6 or 7 years, and I'm no longer going to be just doing duets with you. I'm going out on my own. And she kind of wrote that for him. Apparently, I didn't know any of this, so I looked into it yesterday. And then you've got, her 60-year marriage to this big, tall, handsome guy named Carl, who died last year. And it's always so sad when something like that happens. But I think now we're hearing something about that she had cancer or something. Right. Yeah, but tributes are pouring in from across the entertainment and business world for country music legend Dolly Parton died yesterday in Nashville. Her publicist said that the singer, as we just said, had faced a brief battle with cancer. On social media, musicians including Mick Jagger, Reba McEntire, Casey Musgraves, and Pink honored Parton, and many, many more did across all the cable networks. In New York City, the Empire State Building lit up in signature Parton pink at 9:25 p.m. to honor the entertainer and her role in the film 9 to 5. Amazon founder Jeff Bezos weighed in on X, saying that Parton lifted everyone with her music, her generosity, and her joy. Apple CEO Tim Cook said Parton's music helped light up the world. On Truth Social, President Trump said U.S. flags would be lowered to half staff for a week. Parton, as you know, is known for her self-deprecating wit as well as her immense song production. Thousands of songs, apparently, but also for her philanthropy, promoting child literacy. She was 80 years old, and a couple other things, Andrew. I guess this song, Elvis was going to record. I will always, and she wanted Elvis, wanted him, was so honored that he was going to record it, but his hard-ass manager, Colonel Tom, whatever his name was, wanted 50% of the publishing rights for this song for him to record it. She said no. Later, she said that when Whitney did that cover, she made $10 million in royalties after Whitney Houston and that movie, The Bodyguard, and was able to buy Graceland or could have bought Graceland with the money. So she was a smart businesswoman as well, obviously, and an
extraordinary performer, an extraordinary person. People loved her. I was going to mention, you mentioned Jeff Bezos making a comment about her.
Yeah.
He had donated $100 million to her for her to then donate to the rest of the world. He has something called the Courage and Civility Award, where he gives out $100 million to somebody every year.
Yeah.
And they have to then give the money to somebody else.
Market in the EV space.
Parliament continues to stay very fragmented. This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
The Score, streaming now on CNBC.com and YouTube.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
There were definitely a few times when there was no money in the bank.
Before Kareem became one of the defining startup stories of the Middle East, Mudassir Sheikha was trying to keep it alive from one funding round to the next. He'd left a safe consulting job, and he and his co-founder had each invested $50,000 of their own money into the company. In the early days, Kareem wasn't an app that magically matched riders and drivers. It was the founders calling drivers themselves in the early hours of the morning.
It was radically basic. All we had was a website.
And 7 years later, Uber, the rival Kareem spent years fighting, agreed to buy the company in a landmark deal for the region.
To do a deal with our biggest rival, the company that we thought was trying to kill us, was just very, very difficult for the organization.
Futures, as we approach the inflation data, we're going to get at 8:30 Eastern time. Take a look at where we are right now, about 5 points up on the Dow. NASDAQ off about 75 points. S&P 500 off about 17, call it 18 points. Joining us right now is Stephen Parker, co-head of Global Investment Strategy at J.P. Morgan Private Bank. Good morning to you. Help us understand what you think some of the data is going to be reflective of today, and maybe more importantly, what we may hear from Kevin Warsh on Friday, NVIDIA. How much do you think the market, what's the markets actually care about right now?
Well, I think there's two things. I think there's the inflation component, and then there's the AI story. And so you're hitting on both of those today. I think when it comes to today's PCE report, we expect that we're going to continue to see some easing, particularly outside of the energy space, which is what we've been seeing from some of the recent data prints. That's going to be important. But then as you think about what it means for Jackson Hole and what we're going to hear from Chair Warsh, we think the focus of his comments are going to be more around policy, particularly some of kind of the structural elements of what he's trying to bring, the reforms that he's trying to bring to the Fed. We wouldn't expect that he's going to give an indication around the direction of travel for September. This is usually not kind of a short-term conversation. But I think it's going to be important for markets to hear that there is a commitment to ensuring that they're going to fight inflation. And a little bit of an easier print on that side today will certainly help ease some of those concerns.
Do you think he comments at all about the role of the Fed and the role of the Treasury Department in regard to what we have seen a lot of hand-wringing about the Treasury Department's buyback plans?
Yeah, I don't think we're going to hear him comment on that explicitly. I think he's going to focus more on the responsibilities of the Fed, their commitment to fight inflation. I do think that the questions around the intervention from the Treasury, that can help in easing some of the situations when we have liquidity pressures, but ultimately markets are going to be the arbitrators of where rates are going.
And the truth is, by the way, the Treasury hasn't done anything yet.
Yeah, exactly. This is a plan to do something potentially, but it hasn't actually taken place.
Do you think, by the way, that the plan will have its intended effect?
I think it will have its intended effect if you're talking about ensuring liquidity in the market. If you're looking at it from the perspective of trying to keep longer end rates lower, I think that the direction of travel around inflation and Fed policy is going to have a much bigger impact.
You don't agree with Stan Druckenmiller that there isn't a liquidity problem in the market, that invariably maybe in August we sometimes can run into some issues. But
well, I agree that there's not an obvious liquidity problem today, but I think that's why we're also talking about this being a potential plan in the next month. It gives the Treasury time to wait and see, to see if there are any liquidity issues, and gives them the flexibility to act or not.
NVIDIA, the entire market is basically tied. We're tied. We're tied to the mast.
Yeah.
How dangerous is that?
You know, I think that NVIDIA is the bellwether, and I think that's, but I think it's a much broader story. You know, you've seen a transition in market leadership around this AI story. For a number of years, it was all about the hyperscalers. This year, it's transitioned to more about the infrastructure providers. I think what's important is not so much what happened in the second quarter. I think that, you know, that's well priced in. I think what markets are going to be focused on is what does this report mean in terms of the indication for the AI story more broadly? What do the spending patterns look like? Are we seeing commitments from customers to continue spending and building out, not just in the second half of this year, but into 2027? Are we seeing their customers upgrading to new technology, which is, again, an indication that we may be earlier in this cycle rather than later?
In terms, though, of investing, I mean, one of the things that I wonder is whether it's like AI or nothing right now. It's like nobody cares about almost anything else except AI, and I feel like it's become a false choice.
Well, I would actually push back a little bit, because I think we are seeing a broadening in market leadership. You know, for a long time, it was all about the Mag 7. This year, the Mag 7 is barely up, and yet markets are continuing to push to new highs. And while tech continues to be a leader, you know, we're seeing other sectors like industrials, utilities, taking the lead as well. Importantly, when you look at Q2 earnings, and this is one of the things that we've been focused on, it's not just about AI as the driver from a capital spending perspective, but it's AI as a driver for growth and efficiency in companies in other industries.
Broadening out, it's companies that are going to be helped by what AI can do for them, not just all AI.
And ultimately, that's what we have to see for this AI trade to work.
That makes it all AI. I mean, even the broadening you see is still...
It's all AI generated. But what I keep thinking to myself,
not sneakers,
that someone's going to have to wear sneakers. But we're all going to have to wear. I'm looking at the guy. We're all going to have to wear sneakers. We're hopefully going to have to still go to restaurants. We're still going to hopefully have to go to go travel to hotels and to go on airplanes. I mean, I just sometimes think we forget that there's like a whole world we actually live in.
But everything you just said could be helped by AI, especially the travels. Although you already...
Sort of, but it's like on the margins.
Right.
How much can it really change that dynamic?
But I think
AGI is not going to change travel.
Drugs.
You can hope. You can pray that it does those things.
You know that.
It will. I think it's going to speed it up.
Every major disease, who was
in 5 years, it's going to be
2040 or something.
I am so. I pray and am skeptical that we are going to, that the timeline is going to move that fast. I hope it does. Yeah. Boy, do I hope it does.
But I think the other thing, for all of the hand-wringing around the consumer and consumer confidence near historic low levels, when you actually look at what the consumers are doing rather than what they're saying, spending continues to be robust. The banks are talking about continued loan demand. You're seeing it from a lot of the retailers that demand remains strong. And so AI is the big headline, and that's been a big driver of why we saw 30% earnings growth last quarter. But that's not the only story in town. It's where the focus is.
Okay. We're going to leave it there. We appreciate it. It's great to see you, sir. Thanks.
All right, coming up, Stan Druckenmiller says, as a businessman and not a writer, and of course he used to.
Of course he did it.
Yeah. To help
he's just leaning in. He's not embarrassed. He's like, I'm doing it. I did it. What are you talking about?
He says he does it all the time. And in fact, he said, I was an English major. Went to Bowdoin. I was an English major, and I wasn't very good at it. So that's why I went to economics. So don't be surprised. Composing his op-ed that criticized the Treasury Department, it was apparently some AI. And I'm going to read a couple of quotes, which I thought were so elegant yesterday. Now I know AI is amazing. We'll be right back.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
It's time for your call sheet, where we look at the topics driving the trading day ahead.
We've done a deep dive into the portfolio.
The chip supercycle is going to continue.
There are going to be haves and have-nots. I think it's a much bigger risk.
They're going to break down the headlines.
One thing no one's talking about is a labor market comeback. It looks better.
There are some opportunities here.
Morning Call with Morgan Brennan. Weekdays, CNBC. Power Lunch, streaming on CNBC Plus.
I built a legacy on the court, and now is the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things that I'm learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
From the markets to the courts, kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Investing legend Stan Druckenmiller made waves with his Wall Street Journal op-ed criticizing the Treasury Department for announcing it will upsize the size of bond buybacks. They're just criticizing the whole idea even before they upsize it. Some pointed out that Druckenmiller's op-ed appeared to be written with the help of AI, and Druckenmiller confirmed to the Journal that that was the case. He noted he and his colleagues in his family office all use the major AI tools, including for writing. Druckenmiller said, in his words, at 73, I'm kind of proud of using it. In an article, the Journal's editorial page editor said, the question for us is whether what we publish from contributors reflects an author's original argument, and if the author has the standing and credibility to make it. What's amazing is there's a way you can look at something, and I read yesterday 4 or 5 programs that will tell you whether there are all the earmarks of AI, which can only be based on it's so good and it's so much better than what a human could churn out. It's got to be AI, which brings us back to the scary Bill Gates thing, because AI can do things better than us. Now, here's the one thing. Now, the way I think, Strunk and White, elements of style, the fewest number of words. Yeah, I know, practice what you preach. If you can be the brevity and say everything you want to say in the most elegant way, that's the way you do it. And AI is able to do that. Here's the quote yesterday that I think I read to you yesterday. Let's say you want to say that the bond market is the governor for everything that Congress is bad at. And every basis point of artificial yield suppression is a subsidy to procrastination. That's 11 words, and it would take you paragraphs to say that. Would you not want our writers at this place to use AI? Are you telling me you wouldn't like that?
So, first of all, I find this whole conversation fascinating. I'll say two things that I think are important. I fear that this debate over his use of AI, which I don't have a problem with, is overshadowing or taking away from the actual merits of what I thought was a very smart essay about what's happening in the bond market.
I think it made it better. It made it easier to understand what he was saying.
No. I'm not saying the AI. No.
You think because people were talking about this?
The idea that there's a distraction taking place. No. There are people who are, frankly, in the maybe in the Treasury camp or others who are now using this to point away from the actual merits of the debate that he's using. Okay. So then the question becomes, no, but I think there's a real question about, so like I'm a writer. Technically, or supposedly a professional writer.
You're a very good writer.
I am not using AI. I use AI all the time.
You're really good at that.
But thank you. But and then there's a question of whether the public expects certain people to use their hands on the keyboard or not. And I think about this all the time. And what
it's a changing world. I don't know. It's a changing world.
And so you said, it's interesting. I think about an artist like Koons or Andy Warhol, who have effectively built factories where other people are
doing their art,
creating some of the beautiful art that they come up in their.
What if you love
a
new band, or what about this silly actress that's AI? People are going to. I mean, it's very hard to get.
To me, these are the questions. However, in this case, I would say, the other piece of this is oftentimes people like a Stan Druckenmiller, who might write an op-ed in the Journal, might hire a PR firm or a writer or a speech writer to write the speech for them. So what's the difference between a speechwriter or a second person doing it
or AI?
I'm assuming that James Patterson, by the way, in the future, who famously writes these exhaustive outlines and then hands it to a writing partner, who then the writing partner goes off and writes it. In the future, it might the writing partner could be Claude. And how are we supposed to think about that? And also, does it matter who the person is? So Stan Druckenmiller is in the business world and is writing an op-ed. And maybe you think about it differently. If you hired an artist and told them to paint a drawing of Times Square for you, and then you found out that they painted it in 2 minutes using AI, you might think differently. So these are the things that I think we haven't come to sort of grips with. When I read the piece yesterday, I thought it was both brilliant conceptually. I thought that it would. I will tell you,
good?
There were well, but no, I also thought there were a couple of sentences that I thought, okay, that seems a little AI-ish, but it didn't throw me. The idea, but I would say within the media and journalism circles and sort of writing circles, the idea that the Journal, in this case, defended the publication. Some people looked as a real watershed, because even the policy at the Journal has been not to use AI in the context of writing, using it for research.
But we're talking op-ed here.
No, I know.
And I thought the same thing. Yeah, maybe they don't want their front page reporters, turning in AI stuff. But Druckenmiller,
it's a different thing.
But as you said, he's at a point where the credibility is so huge that he wants to get something out. The gist of what he wants to say is more important.
And he put his name on it, and it's his work. I don't look at that in an untoward way. Well, I just wonder what it means long term. And by the way, think about this one. Here we are talking about AI writing the piece. What happens when our AI agent is reading all the pieces? So we're going to have AI write things for us,
and then summarize
and then some agent is going to read it for us, and we're going to be taken out of all of it. Last point. How much do you think not writing for the next generation is going to mean that their brains, our brains, are going to be less sharp?
Well, you heard
that's the thing that
another analogy Stan used yesterday was, you think I'm going long division by hand?
Right. No, he uses a calculator.
He uses a calculator.
So the question is, did the calculator or is Google Maps make us?
Did you take calculator? I knew how to do an integral calculus. And have I ever used it? No. Did it help me? Because I had to work so hard to get to the point where I understood it. Yeah, I think it did. And I think there is a lot of things that aren't as rigorous as they were because of the calculator.
Well, so that's a question.
I know.
And does that make us a lesser? Does it make us? And I don't know. That sort of that gets at some of the Bill Gates stuff this morning, actually.
Well, me like watching, TV and Squawk Box, so I don't think it's affected anyone at this point. Do you? Yeah.
It's like,
yeah.
What's the?
Yeah, we're all going to be total Phoebes at some point.
Have our robots doing everything for us.
But we're going to be sit there and I don't know. We're going to be able to know how to eat. Except for GLP-1, we're not even going to do that. I don't know.
Coming up, folks, OpenAI. See, the AI story just never stops. Reportedly losing another key executive. We're going to explain what's going on right after this. And as we head to a break, I look at yesterday's S&P 500 winners and losers.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
I check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC Plus.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC. Streaming on CNBC Plus.
Another high-profile departure at OpenAI. The Wall Street Journal reporting the company's head of data centers, Chris Malone, left last week. Malone joined OpenAI in March of last year. And in recent weeks, the company has now seen its chief revenue and chief operating officer leave. Top executive Fiji Simo also, of course, departed the company for health reasons earlier in the year, maybe I should say late last year. So questions about some of the executive ranks. We talked to Greg Brockman, the CEO, co-founder, I should say, of OpenAI, and asked him about all this, and he really argued that what's happening at OpenAI right now in terms of some of these management changes we're seeing is for a different era of the company, especially as they start to think about moving into becoming a publicly traded company. That's something that could happen as early as this year, but more likely in 2027. after we see Anthropic's IPO, which we're expecting to see in the next couple of months. Joe?
Coming up, former U.S. ambassador to China, Nick Burns, is going to join us on America's campaign to get countries to isolate Iran economically. A reminder, get the best of Squawk Box on our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome.
To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Ambition is in my DNA. My grandparents came over from China, opened up a laundry in Buffalo, New York. They achieved their American dream, so I can have mine. It's a privilege to help viewers out there make better investment choices so they can achieve their American dream.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budgets are. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
The U.S. threatening sanctions on countries that do business with Iran, but the administration didn't announce China-specific penalties, leading to questions about the White House's willingness to confront Beijing. Join us now, Harvard University professor Nicholas Burns. He's a former ambassador. It says here, U.S. ambassador to China. You're just a former ambassador. You're all over the place. How'd you like Greece? Was Greece your favorite, Nick? Do you like China, NATO? What? You ever live at home? You ever? What's your wife think?
She was with me in all those positions in Greece and NATO and China. China was difficult, as you can imagine. It's a great country, a lot of energy in the economy, but the government's tough. And I think that's what Secretary Bessent and President Trump are experiencing right now, Joe. I understand what the administration's trying to do, and I support it. we've got to prevent a situation where Iran becomes the Tony Soprano of the Strait of Hormuz and exacts tolls on commercial shipping. That would be a huge blow against the global economy. So they're attacking Iran's point of pain, which is the economy. You remember, Joe, at the beginning of this year, January and February, there were hundreds of thousands of Iranians in the streets protesting. This is before the war started on February 28th. Well, the economy is in much worse shape now. The currency is not worth anywhere near what it was in January, February. There's hyperinflation. There's scarcity, and people are really hurting. So this is the point of pain for the Trump administration to try to win, in essence, by getting the Iranians to back down. But it all depends on one big play, and that's China. And the Chinese are remarkably disciplined in their public communications. They sent their foreign ministry spokesperson out the other day, and they said, no, they're not going to go along with this U.S. plan. In fact, if we try to exact sanctions against big Chinese banks, big state enterprises, there will be a tit-for-tat response. So I think this is a very tough position. And the key question is, can the Besant plan succeed without China's support? And I would say the Chinese aren't going to support it.
We want good relations with China, and I think, you know, I'm not saying we're bending over backwards, but we want this meeting to go well, and, you know, tensions have cooled. What's in it for China with backing Iran? And what I mean by that, they're getting 500,000 barrels a day in August, apparently. They're getting what they need. That's why they support Iran, obviously. Isn't it possible that with a wink and a nod, they could say this stuff publicly, but behind the scenes, tell the United States we understand what you're trying to do here, and we're going in our own way, we're going to cooperate? Is that impossible?
No, I don't think it's impossible. In fact, I think Secretary Besant signaled the other day in his press conference that he's going to have quiet talks. He didn't mention the person, but the person is Vice Premier He Feng, who oversees the Chinese economy for President Xi Jinping. And that makes sense. And I would expect a lot of talks behind the scenes in the next couple of months. I think there's two things that are going to make this very difficult. One is there is still a relationship among these four authoritarian countries: China, Russia, Iran, and North Korea. You saw another development in the news in the last 24 hours, that this is in the Wall Street Journal, that the Chinese have been helping to modernize and empower, make more powerful the Shahed drone, Iran's key drone, by making it faster with faster motors. So that relationship continues. And I don't think the Chinese want to see Iran lose completely this war. The other factor is, if we're in effect challenging the Chinese to go along with us by giving up, in essence, their relationship with Iran, and I think that's going to be difficult for President Xi Jinping. And I think the turning point, Joe, was 2025, Liberation Day, the big U.S. move on tariffs, and the Chinese met us blow for blow. They rolled out their restrictions on rare earths, and there was a truce. An effective truce. And so I don't think the Chinese are going to back down here, but I think it's worth a try. And perhaps the administration can get enough countries, including the UAE and some of the other Gulf states, to go along with this blanket economic boycott of Iran to make this succeed and make Iran blink first. Well, I don't think China wants to help.
Well, let's say China doesn't help and sort of maintains the status quo. Is that support for Iran enough to prevent the collapse that could come from everything else that's happening? If China just didn't do anything else, didn't increase the help to Iran, couldn't it still be, you know, inevitable with the currency? I don't know how many. I lost track. We were talking about using a calculator earlier. To figure out what Iran's currency is worth in dollars now, you need a calculator.
You do. Yeah. You know, I think this all comes down to what this war has always been about since February 28th. Which country, the United States or Iran, has the most patience and is most tough-minded to keep this to win the staring contest. And I think this is more difficult for the Iranians right now. And the administration is right to exercise the pressure point. But, it seems that the Iranians have, in effect, there's a new group leading it. It's more radical. It's more anti-U.S. You saw President Pezeshkian and some of their negotiators come out publicly last week to say this can't go on forever. We need to deal with the United States. Those people don't appear to have the power, unfortunately, right now.
We got to go, but just do you know what what do you think CIA Director Ratcliffe was doing in Moscow? What was it? Ukraine, drones, things like that? Did it have anything to do with Iran?
Yeah. I don't know what he was doing there, but the speculation is that Putin has been signaling that he may want to make life difficult for some of our NATO allies, particularly the Baltic states, Estonia, Latvia, Lithuania, maybe Poland, maybe even limited Russian incursions into those countries to kind of broaden the war. And it may be that Director Ratcliffe had to go to talk to the Russians about that, and that would be the right move if that's what he was doing.
Okay. All right, Ambassador Burns, you're here now, right?
I'm here.
You're you twitching and I gotta get out of here. You're good
Happy
for a
to be
while.
home, watching the Red Sox here in Boston, Joe.
Okay, so that's not bad. It could be worse. Could be watching the Reds, the Mets. Okay. Anyway, thanks. See you.
Thanks, Joe.
Coming up, Meta and state attorney generals reportedly talking about settling a high-profile social media addiction trial underway in California. It's next. But first, the AccuWeather forecast with meteorologist Bernie Rayner.
Some drenching thunderstorms this afternoon across the southeast. Your AccuWeather forecast has those thunderstorms. Raleigh, Charlotte, Atlanta, all of the Florida peninsula. Stays hot and dry in Texas. Gusty thunderstorms across the Midwest. Northeast and mid-Atlantic look great. Boy, it's hot in the west. 98 degrees in Los Angeles today. Your AccuWeather travel forecast. The East Coast is fine, but watch Florida for some delays. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170+ global markets. The best informed investors choose Interactive Brokers.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long.
End users are using our AI even more frequently.
Are you heading into a record Q4? We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
This is becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented. This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
The Exchange, streaming on CNBC Plus.
Combat sports icon Ronda Rousey. She's conquered the UFC, dominated the WWE, and now she's sounding off on both.
It's extremely oversaturated right now. There's too many fights.
San Francisco 49ers owner Jed York. He sat down with us to explain how he turned the team around and the critical lesson he learned. Plus, influencer Jesse Rydell, also known as Jesser, explains his simple ingredient for online success. This is CNBC Sport on the Record.
As the Asia trading day begins, join me for Squawk Box Asia. When you're watching, nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Welcome to Closing Bell Overtime.
Get the essential post post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, closing bell overtime. CNBC.
Facebook parent Meta and state attorney generals suing the company have spoken about potentially settling a social media addiction trial underway in California. It's according to a Bloomberg report. The trial currently in its second week. The state's alleging that Meta designed Facebook and Instagram with an aim of addicting young people. They're seeking fines and changes to how Meta's platforms operate.
Coming up, what to watch when NVIDIA reports later today. Squawk Box will be right back.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box streaming on CNBC Plus.
A market shaping industries, supply chains, and global momentum. The China Connection, weekdays. This really is a business-first pivot. CNBC.com and the app anytime. Only on CNBC, connecting you with China.
For this edition of the CNBC Conversation, I'm joined here in Milan, Italy, by the Prada Group CEO, Andrea Guerra.
There is fashion waves, there is political waves, but then there is reality. The reality says that younger generation are looking at you, not just to what you say, but how do you behave. The way you are behaving in the society, you are behaving with your own people and suppliers and stakeholders, and how you are behaving towards the planet are the three things that are part of our inner mission. So we are here to allow everything inside our group to be connected smoothly and positively towards planet, society, and our own people.
Prada Group CEO Andrea Guerra sits down for the CNBC Conversation.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
Crypto FC on The Score.
I don't know if there's anyone who doesn't know NVIDIA is reporting after the close. Maybe. So for those people, I'm going to read this. NVIDIA is set to report quarterly results after the closing bell. Joining us now, Vivek Arya, Bank of America Seniors Semiconductor Analyst. Vivek, your job's not easy. It's nice to do fundamentals, know a company inside out, but I don't know, whether that has anything to do with how the stock reacts. So the last 4 times NVIDIA reported, the stock has been down the next day, and the 5 days following the next day, anywhere from 1 to 5% on the next day. And I don't know if there was ever a fly in any of the ointments that caused that for why it goes down. Should I even ask you what the most important metric is that we'll be watching tonight?
Sure. Good morning, Joe. I think you're right that positioning has worked against NVIDIA. It's such a large company that it is hard for it to hide anything from the supply chain. So the scope of surprises gets lower. But, if you look over the stock over a long period of time, whether it's, 1, 3, 5, 10, 15 years, it's consistently done extremely well. I think the focus tonight will probably be more on the balance sheet and its disclosures around how it's funding the ecosystem as opposed to the EPS beat. Because the fundamentals are very strong, right? We have heard from every one of its large customers. Demand environment is very strong. Yes, there are supply constraints, but NVIDIA has very good access to supply. It's in front of a brand new product cycle with Vera Rubin, and it has a diversity of customers, right? It's not just the hyperscalers. It's all the neo clouds and sovereign and enterprise on-premise. So from a fundamental perspective, it's checking every box. What I think investors want to see is how is NVIDIA deploying its balance sheet, and more importantly, how will it start to use the cash that it is generating towards more buybacks and supporting a stock that we think is 30 to 50% cheap relative to its fundamental earnings growth.
So $5 trillion is still cheap. The other thing, our options people that watch things like that, the possibility of an even bigger move is possible after the results today. If it's been down 4 straight times, I don't know whether that means the down move would be bigger. Something that you point out, and this is a nuanced question as well, people are interested in how NVIDIA can almost fund its customers who are having cash flow issues. Not issues, but there are some of its customers when they report, if the free cash flow is bad, they get penalized. So one of your points is that NVIDIA has to show that it can help these customers in some way finance the purchase of its products. Is that good that it does that, or do we start worrying about circular financing again?
Sure. Look, I lived through the telecom bust and bubble, a lot of scars to kind of show for it. Vendor financing did not make or break that cycle. Yes, it is important. Yes, it creates a lot of headlines, but ultimately it's the durability of demand. It's the utilization of the infrastructure. During the telecom bust, the utilization of the underlying infrastructure was less than 10%. Right now, the utilization is over 100%. Right? Every top customer has said that they don't have enough supply. So I think the cycles are fundamentally different. Now, if you segment NVIDIA's customers in terms of the large public hyperscalers, and then a lot of the neo clouds and a lot of the other customers who are not investment grade yet, that second category is the one that they are the disruptors. They are the ones that are going to drive AI the fastest. So what I think is the right mix where the large hyperscalers, public hyperscalers, a lot of their own cash flow, their own balance sheet is funding AI, and NVIDIA is very well exposed to them. And the other half, which are the neo clouds, the non-IG, that's the ecosystem that NVIDIA is funding. So in some ways, I think the moves are kind of both offensive and defensive, right? Offensive because you're funding disruptors, you're creating a faster acceleration of adoption in the AI cycle, you're extending the durability, right? And it's also defensive because you're promoting an ecosystem who will be more reliant on your infrastructure as opposed to going and doing a lot of custom chips. So I think both these things are important, but ultimately it gets down to what investors want to see is how much cash is being returned to me via buybacks and dividends. That if NVIDIA is held a lot already by public investors, NVIDIA has to be its own incremental buyer of the stock. And that, I think, return of cash is an important consideration for the move in the stock going forward.
The 30 to, what did you say, 30 to 50% on below where it could be in valuation. So is $6-7 trillion, are those numbers we're going to use for market caps for individual companies? Is that, it just seems like the law of large numbers makes that more difficult. But Sorka, what did they say that the market cap for, or the market opportunity for Anthropic was?
$30 trillion. Remember just what the entire GDP is.
That's what I mean. It's like, what is it?
It's like 32.
Right.
So we got to start thinking. We got to think big. I think
we have to think big. Look, when the first large tech company hit $1 trillion in market cap, people thought it could never get bigger. Then it went to 2, then it went to 3. Now we are at 5 trillion. So I don't know if there is, specific, law of gravity that says that one cannot be at a certain market cap. I think ultimately it depends on how fast it can grow. And when I look at how these stocks trade, they generally tend to trade 1 times earnings growth. Right now, NVIDIA is trading 0.3 times earnings growth, right? So we think that the right valuation is somewhere between 0.3 and 1 times. And that suggests that, yeah, there is a significant growth. I mean, by this time next year, NVIDIA will be generating $1 billion of free cash flow every weekday, right? There is no other company on the planet that has managed to do that. So it stands to reason if NVIDIA is able to do that, they should also be deserving of a market cap that no other company has had before.
I ask you, Andrew, because you're better than Claude, because I remember he said something crazy. And so I actually asked Claude, what did Amadeus say was, and it had trouble. So it's hard to look at yourself, I think. It didn't come up with the... Wasn't it just yesterday? It was about the IPO, right?
It was literally in the past 48 hours, 24 hours.
Claude had trouble with, but you didn't. But
I read the story.
I know. I knew. I thought it was 30 trillion, but then
it was 30 trillion. It came out in the journal. It was actually yesterday, midday yesterday, that article appeared, and that's a remarkable number. I'd actually be surprised if they run that number in the prospectus itself.
You can't. Can you?
I don't know.
Well, what was in the SpaceX? Right? In the market potential there is I mean, trillions don't even cover it. It's quadrillions.
The TAM.
Well, what the universe is.
When did the phrase TAM start? Total addressable market.
I don't know.
I feel like that's last 5 years. 10 years? I don't know. We didn't really discuss it that way.
Anyway, Vivek, thank you. And don't miss NVIDIA CEO Jensen Huang. He's going to be on Mad Money along with Mark Benioff tonight at 6 Eastern time.
Okay, it is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan. It's a big morning for economic data, so put your seatbelt on. We'll see what happens. We're going to get July PCE, inflation, personal income and spending, durable goods, and a revised look at second quarter GDP. It's all happening at 8:30 this morning. We're going to bring you those numbers live, some analysis, probably some debate about it all. Right now, you're looking, by the way, at the Dow up about 10 points at the moment. NASDAQ off about 21 points. S&P 500 off about 12. But I imagine that is likely to change over the next 2 hours, depending on what the read ultimately looks like. Meantime, the trade war between the U.S. and Canada continuing to escalate. Bloomberg reporting that the White House looking to impose more trade penalties on Canada, including higher tariffs. Yesterday, Canada announced retaliatory tariffs on $20 billion worth of U.S. goods. Now, that matches President Trump's latest move. And a warning from Bill Gates this morning, Microsoft's founder, saying the transition to AI will be marked by extreme turbulence, and asks how the most vulnerable to AI's disruption can be protected. He calls rising to that challenge what he describes as the world's top priority, but faults leaders and experts for not planning ahead for that world and what it could contain in terms of far fewer jobs than exist today. He warns that AI could replace human relationships and empower people to do more harm. Though he speaks of the upside of AI as well, including speeding up innovation in areas like healthcare and agriculture. So bit of a mixed picture, but a warning. And as I said to you in the last hour, I thought the sentence where he says, there is no plan is
there ever?
But is there ever? And how can you plan when you don't know? That's the great challenge.
Why it's called the singularity. We don't know what happens after. Maybe Dom Chu No, I go to him for, and you know what?
No, I don't know what it is.
But Dom, you always give
scare maxing.
But you always give people the benefit of the doubt.
I do.
You know, I saw that the other day. I don't. I'm going to try to emulate you to some extent from now on, because you don't care if someone calls it NVIDIA. You just Nevada. You don't care. You love everyone.
I don't have as many of those left brain word fetishes.
You see the good in everyone. That's nice.
I don't have as many of the. I mean, so we work in communications, journalism, right? And so I understand that a lot of folks will have, some of the word OCD type things. I know that Nevada is a thing for you. I know.
Oh, God,
and by the way, I do. You'll notice whenever I have to say a year in terms of date, I will alternate between saying 2026, which I know irks the heck out of you, and 2026, which I know is the right way to say it.
That's not me. I'm a going forward. I hate saying going forward, and I hate saying at the end of the day.
I gotcha. So
but at the end of the day, going forward, I'm going to be more like you.
All right, fair enough, Joe. And all right, so let's do this. We'll go through these morning movers. We're going to start with shares of Intuit right now, which are sinking just about maybe 11.5% at this point. The TurboTax and Credit Karma owner said it expects sales growth to slow in the year ahead, weighed down by a decline in its desktop business. That CEO telling our own Jim Cramer on Mad Money just last night that the company needs to grow faster and take more market share in the DIY taxes space. Shares which have been hit hard on AI disruption fears are now down more than 52% on a year-to-date basis. Now we're going to check on shares of Zoom, which are lower just to the tune of just about 7%, giving weaker than expected guidance for the current quarter. It comes after the video conferencing tool maker works to ramp up AI features on its services. Those shares are down now more than, call it 83% from its record high during the height of the pandemic in 2020 or 2020. And then we'll look at shares of Dick's Sporting Goods down about 0.5% after a more than 30% drop yesterday in the wake of dismal quarterly results. This morning, analysts at Truist are downgrading Dick's to a hold from a buy and lowering the price target on the name to $135. It was $270. That's an implied upside of 8.5% from yesterday's closing price. Truist now says they see headwinds as too severe as Dick's investments in Foot Locker and House of Sport will likely drive incremental earnings pressure. Dick's Sporting Goods so down 1% after a big drop yesterday. Now, for more on those and other top calls of the day, head over to cnbc.com/pro, where subscribers, as always, get access to the detail and analysis behind the big upgrades and downgrades each day. Joe, so I will send things back over to you on this, the 26th day of August, 2026.
Andrew's biggest pet peeve is wasting time. So I love tweaking him. The one more. In the history of the world, the phrase, the fact that, has never added a single thing to any sentence in terms of meaning or there's no reason to ever use it.
You're the most efficacious with your words.
I try. No, I'm suggesting I read Mervyn Block's broadcast news writing, and one of the first things he said was never ban
wasted words.
Ban the fact that from your lexicon.
I don't know. Some of this is also being conversation.
I'm not the most efficacious. I'm not the most.
I'm suggesting
pithy.
Sometimes things can go on.
Well, that's just in the interest of in the interest of entertainment and on a morning TV show, which can't be all facts. And look, there's another place that does that has like 4 viewers. So, and they don't even have the sound on. So there's a reason people like.
But they can read the closed captioning on all these fancy words that we're using right now. So
they can. See, he's going nuts. I'm telling you, he's going nuts.
I don't know what's going on here. Okay, we're going to talk more about the markets right now. This is the Chief Investment Strategist at Empower. Good morning. We're going to get some real economic data, hopefully, in about an hour and a half from now, a little less than that, 8:30. What are you expecting, and how are you setting yourself up in this market right now?
I mean, I think we have a sense of how the economic data is trending already. We already had CPI, we had PPI. I think the expectation for PCE is maybe a little bit softer, but core still quite sticky. I don't know if we're necessarily going to see a massive change from our GDP expectations, which was a bit soft. So I think in many respects, the current environment is kind of understood at this moment. I think the question is what the Fed is going to do with it. What is the Treasury going to do with it? So I think the real question is, I guess, the reaction function to all of this.
In terms of the AI of it all, we were debating earlier just how much we should be taking away from NVIDIA. I mean, in my mind, it has become not just a bellwether, but almost the entirety of the story. So goes NVIDIA, so goes everything else. Yeah, it does seem like all roads lead through NVIDIA. And I think we do get not just kind of the stock-specific story, and I think, the understanding that the valuations are a bit more attractive heading into this earnings report. I think that gives some people some sense of bullishness, at least near term, for NVIDIA. But I think also those broad macro indicators that we get for, how is demand trending? How are we seeing NVIDIA position itself to be broader, a bigger part of the AI infrastructure? And then I think on everyone's mind is this circular financing, and what kind of clarity can we see is how NVIDIA is propping up its customers to buy its goods. So I think those are the key things that we're going to be watching for, but I'm not sure we're necessarily going to get perfect answers to any of them. A lot of these questions are very long-term in nature, and I think they're going to continue to hang over the space. Okay, well, the other thing I want to throw into the mix is energy right now. We've been watching the price of oil come down. We're still at about $80. There's a question about whether this is on crude, whether you think if we get under 80, we actually get into the 70s. That changes the dynamic in the equity markets, that changes the dynamic for Kevin Warsh, and whether you think that is in the cards or not.
Yeah, it's been so hard to put a whole lot of predictability around what we're seeing in Iran and how oil prices are reacting. I think the one thing that we have learned from this whole adventure overseas is just that as much as energy matters, and it does matter quite a bit, it matters more on the margin than the main. This isn't the kind of thing that has knocked the U.S. economy off its footing. And so I think obviously we do want to see those oil prices come down. I think that does give the Fed a little bit more breathing room. I think that would remove some of the inflationary pressure, but it's not necessarily something that I think could jumpstart the economy. I think the economy continues to run really on AI more so than what's happening on the energy front.
Okay. Mark, I want to thank you this morning. Appreciate it.
My pleasure.
All right, we told you we were going to talk about Smucker, and the results just out from JM Smucker. We're going to speak with CEO Mark Smucker about the peanut butter and jelly business and other things. Uncrustables, I do like those. Food prices, everything else, tariffs, much more. Squawk Box returns in just a moment.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of a quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giamatteo, only on CNBC.
I'm Morgan Brennan, and this is your Morning Call.
All that. But what was the surprise here? Do you think people were relieved that you were able to pass along increased coffee input costs and do well with coffee? What was really better than expected?
Thanks, Joe. Actually, with the support of our great team, our entire business performed really well. The underlying health of the business and the momentum has been great, largely driven by our growth brands of Meow Mix, Milk-Bone, Cafe Bustelo, and Uncrustables. All did really well in the quarter, and coming out of our last fiscal year, it's a great start to our new year.
I always like talking about Uncrustables because who like peanut butter and jelly? How long? It seems recent to me, but it must be. Was it a decade? How long have you had Uncrustables out there?
Over 20 years.
Oh,
we love Uncrustables. We basically invented the crustless sandwich, and recently we've expanded distribution. We've launched a variety of new flavors. That product that you see on the screen is a high protein product, so it's doing great.
Up an apple and bright-eyed berry, Andrew, both with 12 grams of protein. What did the old Uncrustables have?
About 8.
About 8.
So these are really targeted towards the morning occasion, and they're doing exceptionally well. So just a higher protein offering.
Higher protein offering. I'm always surprised at how much of your fortunes depend on our furry friends instead of ourselves. How much of the business is pet food now?
Yeah, Meow Mix is one of our great growth brands. It has continued to perform 4% in the quarter. Milk-Bone, dog snacks in general have been doing great. Milk-Bone returned to growth this quarter. Pepperoni also has had a really nice quarter as well. We've sort of repositioned that brand. So overall, the pet business is really doing nicely for us.
We all talk about every day about consumers and affordability and a K-shaped economy. And what are you seeing? Are costs up? Do you need to raise prices? And can you raise prices right now, given the economic backdrop?
Some consumers are continuing to seek value, and this is why our portfolio is exceptionally well positioned, because if you look at our brands like Folgers, which is a very affordable brand, up through Dunkin', as you mentioned earlier, a little bit more premium. So we do have offerings that meet the needs of all the consumers. On pricing specifically, it's a mixed bag. We have seen costs moderate on coffee, and we have been able to pass along some price relief on our coffee business, and that has also been supportive of our volume in the quarter.
Do tariffs and tariffs with Canada, do you worry about the trade war spreading? Would any of that affect your business?
Well, tariffs, last fiscal year, we did incur a lot of tariffs. Most of those went unmitigated. We essentially absorbed them, did not pass them along to consumers. And we were able to get some refunds this last quarter, which we do intend to invest back in the business as well as pay down debt.
Okay, so the new trade war with Canada, how many operations are based in Canada with Smucker?
We do have a decent business in Canada. I would say the current environment is not super impactful to our business there. We do make a lot of products here and send them to Canada. The majority would be manufactured in the U.S.
Do you pay attention to inflation figures when they come out? Mark, we got a PCE, the Fed's preferred gauge is coming today. You must.
Sure, of course. We absolutely pay attention to inflation. We want to make sure that we're doing everything that we can to keep our costs down so that if we do pass along costs to consumers, whether that's up or down, we do it in a very prudent and a way that we can justify. And really,
ultimately make sure that we're providing the consumer with value and affordability.
Have you ever, in a conference call or meetings with your people, talked about Ozempic or Mounjaro or GLP-1s and how to plan for the changing world?
Yeah, of course. We look at the trends all the time. We have not seen any meaningful impact to our business. And again, sort of our portfolio is very diverse, and we offer a little bit of something for everyone. And we continue to, over time, have always adapted our portfolio to the changing needs of the consumer. And so whether that's portion size or different ingredients, it's critical for us to listen to the consumer and make sure that we're providing them with the products and brands that they know and love and need.
Okay. Got your eye on anything? I mean, who has what you'd like that would just, for a snap-on, that would be perfect for Smucker? I guess you can't tell me.
At the moment, we're really focused on this portfolio and continuing a very disciplined capital deployment. I mentioned paying down debt, but because this portfolio, we've worked so hard over the last 5 years to reshape it, we really like where it is now. The businesses complement each other, whether that's across the breakfast occasion or what have you, and therefore we really want to remain focused on growing what we have at the moment.
Okay. All right, well, good start this morning. As I said, stock's up about $6, so we appreciate it. Mark Smucker.
Joe, thank you very much.
You're welcome.
Okay, coming up, some of the nation's wealthiest families bullish on stocks. Robert Frank is going to give us an update on the Family Office Portfolio Tracker and which names they are buying in today's Inside Wealth Report. Squawk coming right back.
Don't miss the highlights of the PGA Tour. Catch the action from the PGA. The biggest hits and misses. Join us on the green. Saturday and Sunday afternoons only on CNBC.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates. A lot of strong numbers this morning. Listen wherever in the world you are. Download the CNBC app now.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
I think if I knew how complex was trucking, I think I would have thought again. So the unknown was very helpful.
Gaurav Biswas thought he had landed on a simple idea. Uber, but for trucks. There was just one problem. He had never moved a truck in his life. Then one day at dinner with friends, he saw a problem he had never thought much about.
He was constantly having to walk out of the restaurant, and we could see that he's arguing or shouting with somebody. I was like, hey, is everything okay? He's like, oh, I have 7 containers that have to go on the same vessel tomorrow. Then I said, hey, you should have an Uber of trucks.
That idea became Trucker, a digital freight platform that connects companies that need to move cargo with the truck owners and transporters that carry it.
Trucking is extremely important as a sector because whatever you touch and feel, consume, it's all touched a truck. Whether it's a seaport or an airport or a factory, the trucking is that connector.
Welcome back to Squawk Box. Family offices showing a big shift to stocks right now. Robert Frank is at the table. He joins us today with today's Inside Wealth Report. We're tracking what some of the big names and family offices are doing.
Yes, with the second quarterly family office portfolio tracker, family offices making the biggest move in years to add to their stock holdings. Stocks grew from 34% to 37% of family office portfolios in the second quarter. That is a big shift for investors who rarely deviate from their long-term allocations. All of this, according to the CNBC Family Office Portfolio Tracker that is powered by Adipar, the foundational data and AI platform. Now, their top stocks are all in big tech, and they largely mirror the market cap weighted index. So that's Microsoft, Amazon, Alphabet, Apple, and NVIDIA. Those are the top stocks for family offices. On the flip side, family offices dialed back their exposure to alts, especially private credit and real estate. While their stock holdings went up 3%, their alts went down 3%. That's to 46% of their total portfolios. The AI boom here playing a role.
The overall allocation that family offices have to alts writ large is still nearly 50%. And so I think that still holds true. It's more just on, for example, the AI thematic bet that's getting so much action and so much activity, that bet is being expressed in large part in public markets versus private markets.
This data includes the real-time investments of hundreds of family offices with over $1.4 trillion in total assets. So we're giving you the most accurate and timely snapshot of where the wealthiest families are putting their money right now. For the full breakdown of family office portfolios in the second quarter and what it signals for other investors, sign up for the Inside Wealth newsletter at cbc.com/InsideWealth.
Now you've had two times to look at these numbers. Yeah. Have you found anything that's fascinating to you about just the trend line?
The most surprising trend is this move into publicly traded stocks. What we hear about family offices is that they're very sophisticated investors, and stocks and bonds are for the little guy, right? If you're a wealthy, sophisticated investor, you want the exotic alts that are only accessible to the really rich. What they really want more and more of are publicly traded stocks, which are available to everybody. So I think this move, if it continues, is a big signal. Now, as Eric said, alts are still about half the portfolio. But private equity, which we hear a lot about, is about 6% of their portfolio. Private companies are 15%. So I think this move into publicly traded stocks, given where the AI trade is going, which is largely expressed through the public markets, and the fact that we've had years of double-digit returns in publicly traded stocks, it makes sense for even the wealthiest investors to be in the same investments, publicly traded stocks, that everyday retail investors are. And to me, that's kind of encouraging.
Right. For years, wasn't it true that Michael Bloomberg used to basically just invest in ETFs? There was a period of time where people used to talk about that he was a huge ETF owner as opposed to private equity. And
I wouldn't be surprised. There is a faction of billionaires who just says, like, it doesn't need to be complicated, especially if you have a large philanthropic arm like he has. Now, his philanthropy and trust probably invest. He's got Ratner, he's got those guys, Steve Ratner is not investing in ETFs. But perhaps for the sort of, most of his wealth is tied up in private company. For the liquid assets that aren't part of the trust or Bloomberg, he probably ETFs it. And a lot of wealthy people just said, especially on stocks, you look at their top holdings, those are all market-weighted big tech stocks.
Robert Frank, check out the newsletter, folks.
Thank you.
All right, coming up, Elon Musk picking another southern state for a $100 billion SpaceX campus. That story. Squawk Box return.
Ambition doesn't always look like you think it might look. I can remember reading The economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Powerline, streaming on CNBC+.
When Amanda Lacasse took over Lynas Rare Earths, the company was on the brink of collapse.
I put my hand up because the people in the business deserved someone to give it their very best shot.
12 years later, she's leaving behind the world's largest rare earths producer outside China. Can one company really challenge China's dominance?
I'm confident. We've got good people in Australia, we've got good people in Malaysia. Not only can we compete with anyone, we can win.
Find out more on Managing Asia.
Football needed cash, crypto needed credibility.
Blinded by the check.
Together they created a sponsorship gold rush. Then the market turned, sponsors disappeared, fan tokens plunged.
So I kind of made us the rebel anarchist Bitcoin team.
Regulators started asking questions, but crypto never left football.
I'm interested in both. I'm a Bitcoiner and I'm a football supporter.
The Score, streaming now on CNBC.com and YouTube.
Never miss a moment.
Cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices.
Non-technical people can create a website, can write code. The same thing will happen in financial services.
If you're diagnosed with melanoma today, and I'm diagnosed by the same doc, you and I will get a different chemical. It's totally individualized because we know today cancer is a disease of DNA.
Welcome back to Squawk Box. Take a quick rundown of where the futures are. Mixed this morning. The Dow's up. You can see the NASDAQ and the S&P basically flat. The Treasuries this morning, not anything to make note of. 463 now. One thing is kind of interesting that someone pointed out. I saw it yesterday. Maybe it was Sully. I don't know if someone pointed it out. You look at the 30-year. 30 years over the last 2 years. Or whatever, it's really has been kind of there for all the hand-wringing and twisting and twists and all the worry about the vigilantes and whether they're coming back anytime soon. Really, it's kind of a trading range anyway. Not historically not that different. And at 80.17, really, that's what it was last time on WTI. No, 80.16. We're looking for a 7 handle. That might be something the market would welcome. Gold's been on a roll, Bitcoin's been on a roll, and then we're done. We can move on to SpaceX. You can see 4,600 now. And then Bitcoin 78 or so, 78.5.
Meantime, SpaceX about to land in Louisiana. Elon Musk's rocket company launching plans for a $100 billion campus in the state. The Louisiana Economic Development Office saying that the proposed site would support thousands of launches annually, and Musk saying the spaceport will generate about 10,000 jobs. SpaceX shares up nearly 30% since the start of August. So you're looking at that stock at about $138 right now. Coming up, a cross-border trade war escalating with Canada now announcing retaliatory tariffs, and the White House considering taking more action. We're going to speak with the former U.S. Trade Representative Ron Kirk about the battle and what comes next. Don't go anywhere. We're going to bring you that answer right after this.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand, really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app.
What a strong number this morning.
Breaking news.
We've got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
On Market Shaping Industries, we are watching the six little dragons, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot, despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app, anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
Fast Money is America's post-game show.
Near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations matter in a higher interest rate environment.
Fast Money, CNBC, streaming on CNBC Plus.
Welcome back to Squawk Box. The White House reportedly considering higher tariffs now and other trade action after Canada announced retaliatory tariffs as high as 50% on about $20 billion worth of U.S. goods. Joining us right now is former U.S. Trade Representative under President Obama, Ronald Kirk. He's now Senior Counsel at Gibson, Dunn and Crutcher. Good morning to you. We'll just start with the obvious. Where does this go from here? Is there a way to de-escalate, or do you think that this continues?
Well, the answer to all of those could be yes and no. You know, I hope we can, first of all, calm down some of the sophomore rhetoric that's coming from the leaders on this. And the fact that at least short term, Ross, we've got, another 10 days before the Canadian tariffs kick in January 1. I'm hopeful that the pain of these tariffs will cause our congressional leaders, frankly, to begin to speak up and demand that both parties come back to a more reasonable stance. I mean, let's just frame this, and you all know that Canada is our second largest trade partner, some $300+ billion a year, and it's a reasonably balanced relationship. And contrary to all the noise, I mean, we have to think back, Ross, that given our history and the success of NAFTA and the USMCA, which was negotiated in the first Trump administration, all these tariffs of zero. So any level of tariffs is going to hurt our farmers, our manufacturers, our businesses, and a lot of American families as they're looking to, whether it's buy hockey equipment or clothing or jewelry. It's the tariff equivalent of a circular firing squad among two of the longest and most successful allies in the world. So I'm
Ambassador,
hoping that we can calm the rhetoric.
Is there any argument to be? Is there any argument to be made that we should implement tariffs on portions of Canada, given some of the protectionist efforts that they do have? There are certain markets where they make it very difficult for the U.S. to trade, as do we.
Yeah, I mean, we do. But again, the point of trade agreements is to remove barriers to goods and services that businesses and families want, and let the consumer, let the business make that decision. And no matter how we frame it, tariffs are self-imposed tax on America's families and businesses. And look, neither government has clean hands on this. All trade agreements exempt a handful of goods that remain outside of that tariff-free protection. But this is a, now 30-year trade relationship. I think that most people objectively would say has worked reasonably well. And to me, the bigger question is, why are we doing this? I mean, what is the rationale for starting a trade war with one of America's closest and longest allies, both geographically, economically, and strategically? I just can't see the rationale behind it.
In terms of de-escalating and the political cost on both sides, I mean, right now you have a situation where our president, President Trump, of course, now talking about, renaming Lake Ontario, Lake America, things like that, I imagine are going to politically make it more difficult. But at the same time, I would argue we do have more leverage over them, at least in the moment.
We do, but there's going to be pain on both sides. Look, I mean, these are the countries that trade with us, know where the pain points are. And there's a reason that the tariffs that Canada has announced are disproportionately impacting those border states, Maine, Wisconsin, Michigan, Ohio, and others, and products in which you've got Republican senators who are going to have to go before the voters. And, how you see the pain from this, to me, Ross, is kind of like that old adage that, if it's on you, it's minor surgery. If it's on me, it's major surgery. And the reality is small businesses really bear the brunt of the pain from this. And while we can argue, maybe the big manufacturers can ride this out till we come to a more reasonable position, this can be the death knell for many of the small businesses on both sides of the border. And I still go back to my underlying point. It makes no sense. Why are we reimposing tariffs on products and goods that have been duty-free in many cases for the last 25 years to no end? We ought to be able to sit down on those more difficult areas in the context specifically of the extension potentially of the U.S.-Mexico trade agreement and work through those. But part of our challenge, we have a leader who loves to engage in all sort of foolish rhetoric and call people clowns. And I just think I'm hopeful that with the pending elections in September, the pain point will force Congress to step up and do its constitutional duty to have a say on how our trade and our tariffs are negotiated.
Ambassador, I want to thank you. Appreciate it this morning.
As always, thanks for having me.
We're going to talk a lot more about trade and the economy with former Labor Secretary Robert's going to be with us. We've got a lot to talk to him about. He's going to join us at 8:10 Eastern Time. It's going to be a fun conversation. Do not miss it. Come right back.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
I'm with Becky. This is the greatest show on earth.
Squawk Box, streaming on CNBC Plus.
I personally risked everything to make Hyrox happen for me. For whatever reason, I went all in, literally, and I didn't have a plan B.
Moritz Forster had already reached the top of his sport. Olympic gold in Beijing, Olympic gold again in London, then bronze in Rio. But after he left field hockey, he was searching for something most athletes never get back, a second arena. The idea became Hyrox, a standardized indoor fitness race built for the millions of people who train in gyms but did not have a sport of their own.
In 2026, we currently sold 1 million tickets, with roughly another 500, 600,000 to be sold till the end of the year. And we're operating 34 countries.
The format is simple and unforgiving. The same race, the same order, anywhere in the world.
If we would change the format, it would just not be Hyrox anymore.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange.
And commodities markets with Real Macro CEO Jeff Curry. That's coming up next. Squawk Box returns in just a moment.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long.
End users are using our AI even more frequently.
Are you heading into a record Q4? We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
It's becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented. This Bank of England decision certainly got more interesting over the last couple of months. Here's what investors are watching this morning.
Coming up on the Tech Download, what keeps you awake at night?
Complacency. The threats are tremendous.
What does AI do to the threat landscape?
The adversaries are more sophisticated. We're kind of the quiet, operating system behind the scenes. We couldn't be, I think, better positioned.
Watch the Tech Download this weekend with BlackBerry CEO John Giamatteo, only on CNBC.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
I built a legacy on the court, and now is the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
Oil prices moving lower on optimism around Iran and Oman reaching a deal. to secure safe passage through the Strait of Hormuz. For more, let's bring in Jeff Curry, Real Macro CEO. Jeff, it's good to see you. We'll just do some remedial work here. There's been an idea in the marketplace that the reason we're not well over 100 is because we're still pretty well supplied in a lot of places, I guess here at least, and that China cut down on the amount of oil it was stockpiling, and that eased, I guess, the demand side of things. Is that still true? And is it true? Was it ever true?
By the way, why do you care about oil? Nobody consumes oil. Oil is noise, product are the signals. You know, you look at diesel, it's what, on your screen, somewhere what $4.14 a gallon wholesale and $5.47 a gallon at the retail. You put the gasoline and the diesel together, you're sitting around $160 a barrel, $174 a barrel on diesel. That's what matters. That's what matters is affordability. That's what matters to CPI. So, you know, I'm a little shocked of this obsession with crude oil, yet nobody has any crude oil exposure, but somebody either owns an oil company, owns a refinery, which is a small number. The vast majority of everybody else that's listening to you has gasoline and diesel exposure. And there, diesel was 174. I think I know the crack spread is around 94. The all-time high was 102 last week. That's where the signal is. Crude is just, you know, another week, another deal, more headline noise. It's not telling you anything. So, you know, when I look at the situation globally, the number of, and the Straits of Hormuz is just one in a long list of choke points that are being squeezed right now. So, you know, I'm a little confused of why the market is so obsessed with where crude oil prices are when nobody actually consumes it.
Why did these derivative products go up so much more than crude, I guess is the question, because no one built no refineries, and where are the other choke points?
It's a combination, you know, if we just, let's go through the list of choke points. And by the way, I'm bullish the entire commodity complex right now. I came out last week, doubled down on agriculture, gold, silver. Let's go over the choke points other than the Straits of Hormuz, which shut down refineries behind there, and that's the problem. One thing that happened is you had crude oil that was stuck behind the straits in June and July. That came all flushing out. So there is some real truth to that point you're talking about flushing out the crude, but you can't get out the products. Why? Because you aren't going to take a chance of taking a product like laden tanker through there and getting hit with a missile, because, you know, gasoline is far more flammable than crude oil. So that's one point we have. The other one is China cut its exports of products. Everybody goes, oh, China is the reason why energy prices are lower. No, they're the reason why energy prices are higher. They are a net exporter of product, usually, and they are not exporting product right now. So they contribute to having higher energy prices. Let's go through the refineries in Russia. You know, at one point you had more than 50% of the refineries taking out. You know, we'll find out what the numbers are, but there's a limit on how much crude they can export, which you're bumping up against that, and now you've actually lost the products. It's 10% of global diesel supplies, and at the same time, they're importing jet fuel from Japan, diesel and gasoline from India, and this is supposedly the world's largest exporter. Also, the grain corridor through the Black Sea, it's been taken out by the Ukrainians. So they take out the refineries, they've taken out the grains, which is why you have corn sitting at $5.47, and why I double down on being long the grains right now. Other choke points: Red Sea, Rhine River, Panama Canal. These are weather-driven events. Whether if it's war or weather, you're now really creating significant bottlenecks. And so that's why, you can say, oh yeah, crude is off. It's immaterial in terms of thinking about what's happening at affordability level as well as at the CPI level.
So if Kevin Warsh is watching right now, I think he watches occasionally. If he's watching right now, wouldn't a couple of rate hikes sort of be built into at least the way you view the world right now, Jeff?
Well, I mean, part of the problem about it, as we saw with Bessent last week, they can't afford the higher rates. because of the, take out the interest payments of somewhere around 1.1 trillion. And if they had to roll all that debt forward, you could be sitting there as high as 1.5 trillion. To reprice, you take all the debt right now, it's priced around 3.2%. You roll it all forward, you're at like 4.5.
Your inflation outlook sounds not great. I mean,
no, that's why, by the way, gold is in agreement with me. We've come off the lows of 4,000 back to 4,700. We're going to retest the highs of 5,500. It could happen, before the end of September. And I think that, the precious metals markets, Bitcoin, they're all telling you this is pretty serious right now.
So it may not be the 40 trillion, although that's why rates can't go up because of the debt on the 40 trillion. I guess that's what you're saying. But the PCE today and future numbers, it doesn't have anything to do with shelter or wages being somewhat under control. This is only part of the big picture on inflation, right? How much of what you're talking about dictates where the number goes that the Fed wants?
Well, I mean, if you think about there was 4 drivers of what happened to the inflation episode back in 21 and 2022. Energy was one. We now have energy. The second one was food. You now have food. The other one were supply chain bottlenecks. You have supply chain bottlenecks. And, by the way, you look at things, you've added in copper and, the critical minerals, copper, touching all-time highs again. So it's not just, what's going on in diesel cracks. It's happening broad spread across the entire commodity complex right now. And, I like to point out, we've been pounding the table. We're, entering a structural bull market, super cycle in commodities going back to October 2020. When you look at, commodities, they are still the best returning asset class over that whole time period since we've gotten long. So this is not something that's crept up on anybody right now. It's a continuation of a market that is extraordinarily underinvested in hard assets. The inability to accommodate with any cushion. We've exhausted all the insurance policies right now, whether it's strategic reserves, commercial stockpiles of many of these commodities at critical levels. Part of the reason why grains rallied is the weather hit the yields in the U.S. They're revising stockpiles back down again. So, this is like, I don't want to draw parallels to the 70s with the grain markets. But, this is a pretty serious situation, and it's an ongoing process that's been, particularly like in the softs, it's been going on for years now. So, I don't think this is something that's creeping up out of nowhere, but between weather and war, we've really taken a hit out of global insurance policies within these markets.
Well, it just doesn't seem like 2% that the Fed's target is even possible anytime soon. And what tools, other than raising rates, does the Fed even have? Would rate increases, let's say 3 or 4 rate increases, cure the patient that you're describing here?
No, I mean, as I always said, I think, Joe, that's a great way to put it, is the rate hikes can slow down demand, and it's like taking aspirin to deal with the fever. To solve the problem of the illness, it requires investment in new refineries. We haven't built refineries anywhere around the world in a very long time, like in the 70s in places like Europe and the U.S. And then you threw in sustainability issues over the previous 5 years. That's part of the reason why the system cannot accommodate any type of hit in some place like Russia or China kind of taking refined product supplies offline, is because we haven't made these investments. So to answer your question, what is the solution here? Put money in hard assets. I like to call it HALO, hard asset local operations, meaning we're going to rebuild our local supply chains, and it's going to require a lot of hard assets. You put that, the demand pull for these commodities off the back of the AI CapEx spend. Remember, 60% of that $800 billion goes into commodities. At the same time, you've got supply constraints across the board, particularly in the critical minerals, where we're going to need a lot to be able to accommodate that $800 billion in spending. So, again, the problem here, I like to think about rate hikes can solve this temporarily, like taking aspirin for the illness. The illness needs to be solved with investment.
Well, that's going to take time, and politically, there's a lot of implications for what you just said.
20 some odd years to build a copper mine.
Great. Wow. I mean, everybody's talking about affordability already, Jeff, so I guess we're not going to stop talking about that anytime soon. Anyway, we appreciate it. All right. Thank you. Okay,
Thanks
just after 8. Yeah, you are welcome. It's just after 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. And among today's top stories, the White House is reportedly considering even more trade penalties on Canada, including higher tariffs. Canada, for its part, announced tariffs on $20 billion of U.S. goods that matched President Trump's latest move. Bill Gates warning AI could bring extreme turbulence, calling it either the greatest equalizer or a source of injustice. In a 12-page essay on his website, Gates says that preparing for its impact should be the world's top priority. And another high-profile departure at OpenAI. Wall Street Journal reports that the head of data centers, Chris Malone, left last week. His exit follows several other senior leaders who already left the company.
Meantime, we've got the results of the latest CNBC Fed survey. I want to get straight over to our senior economics reporter, the professor, Steve Leisman, is in Jackson Hole this morning. Good morning.
Hey, good morning, Andrew. Yeah, the mountain's just peaking out. Markets want more info from the Fed chairman and less intervention from the Treasury Secretary. That's the message from the special Jackson Hole edition of the CNBC Fed survey that we put together here. Among the 31 respondents, they include fund managers, strategists, and economists. 80% say the Fed chairman should provide more insight into his thinking about the economy, but they're split 48 to 48 on whether he should reveal his views on the outlook for rates. But what markets want and what they expect to get, well, those are two different things. In Warsh's keynote speech on Friday, 32% of respondents say he'll be hawkish, 19% neutral. No one believes he'll be dovish, but 45% say he'll offer no guidance on the outlook. Economist Constance Hunter, she writes in, Warsh has abdicated his role in communicating about the reaction function, and now that communication comes from minutes and the speeches of other members of the FOMC. The survey shows market participants divided like the Fed when it comes to the rate outlook. Take a look at these findings here. 52% expect a hike in the next year. 29% see cuts. 19% see the Fed not changing rates at all. When it comes to bonds, though, 77% don't think the Treasury will be successful in bringing down long rates with the program it announced last week to buy more long-term bonds. Just 10% think the plan will help. Many wrote in that said you need to couple that with deficit reduction. Peter Bookfar writes, by further front-loading T-bill issuance, I believe the U.S. Treasury is complicating the Fed's job. Okay, so what is driving recent the rise in bond yields? The average respondent put 37% of the blame on increased global debt supply, 28% on higher expected inflation, 21% on expectations for rate hikes, 19% on higher expected growth. We'll see maybe what the Fed chairman thinks about all that. Well, tomorrow we have KC Fed President Jeff Schmidt. He's our host here. That's tomorrow at 7:30 a.m. Then we have Cleveland Fed President Beth Hammack, first on CNBC at 10 a.m. for Friday. Full coverage of the war speech at 10 a.m. And then a first on CNBC interview with Chicago Fed President Austin Goolsbee at 12:45. That's all live here from the mountains, Andrew.
Hey, Steve, interestingly, at least what I saw, you also asked in the survey about the views of those reports about frequent conversations between the Fed chairman and the president. What do the respondents think of that?
Well, again, a pretty good split here. Well, first of all, they think that it's okay for the Fed chairman to talk occasionally, not frequently, with the President of the United States. But when we asked, how does that make you feel if it was frequent? Well, many of them said, that it would really undermine their views on Fed independence, 48%, but 45% said not. So a lot of splits here. Andrew, I don't know if you know, but we've been doing this for a long time, and it's been interesting that generally these guys agree on stuff. They agree on the rate outlook. They agree on things like this, but there's been more division, and it's interesting that the division that we're seeing here, for example, on the rate outlook, it reflects divisions on the Fed. It reflects divisions in the markets. For example, I'm looking now at the probabilities for September. 35% probability of a hike. That goes up to 70% by December. We had 52% saying they'd see some hike in the next year. And because I think, Andrew, there's a big debate, for example, about the causes of inflation, and very much like Joe was just talking with Jeff, would Fed rate hikes really solve the problems that we're talking about that are driving inflation? With, of course, a heads up that we'll talk about this more coming up at 8:30 with the PCE numbers.
Okay, Steve, I want to thank you. We're going to be watching all of this as it comes, and thank you for your reporting. Talk to you soon.
Steve,
sure.
My idea, 3% target. That's my idea.
You want to change the inflation rate, Joe?
I want to change. Well, we can get there almost immediately. I don't know what else to do because with what Jeff Curry just said. We're stuck. We're stuck with 3%.
Well, what if the Fed started a special program to build refineries? How about that? That seems like the right way to go. And the other thing we can do, Joe, is get you an invite out here to get on the dais and explain why the Fed should raise the inflation rate to 3%, and I'll watch them throw popcorn at you.
I would just use AI for my speech. So why don't you just go ahead and print it out and say, yeah, I sent it to you. Is that cool? I'm not kidding.
Excellent idea. You and Stan.
Me and Stan. All right, coming up, thank you. Former Labor Secretary Robert Reich joins us to talk about a number of topics, including the midterms, and then a read on July inflation. PCE index will be released. Economists are expecting year-over-year core prices to hold steady at 3.3%. We'll be right back.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China, US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Dusty suitcase lying by the door. that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water. Where broken dreamers go. Oh Lord, hear me tonight. Underneath this pale moonlight, every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Wind blows softly through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to faded light. turns into these blues. Neon signs glowing through the midnight rain. If small town highway starts to look the same, cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, let me roam till this tired soul feels home. Every road I choose turns into a resting by the same. These blue while lonely hearts sit quiet. Sit quietly. Cold wind whispers through the motel screen. Back on Tuesday, box humming in the corner bar. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon whiskey road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. Guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. Somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and fear? Every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in the smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul, like a dark old river, too deep control. Oh Lord, hear my prayer, floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads midnight blues hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Oh, wooden poles creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer, floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road. Another lost town carrying heavy souls. Old radio singing soft and low, songs about places I never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly in pain. Box humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls feels home. Every road I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon Whiskey Road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Streetlights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall. rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight this empty place. Rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and fear? Every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone. Cold wind blowing through flesh and bone. Street lights trembling underneath the rain. Like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul. Like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer, floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Stars blow softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight. Underneath this lonely yellow light, dust and bones blue, running through my soul like an old black river. Nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blue, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road. Another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Wind blows softly through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, let me roam till this tired soul feels home. Every road that I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon whiskey road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Poor men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. skin like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened rail, another lonely heart is losing time. Rain on the delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every long inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. Somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally standing in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer, floating through the night. Oh Lord, hear my soul, trying hard to stay whole. Every road I choose leads back to these blues. Rain clouds gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survived. Somewhere far beyond the riverbed, another lonely night gust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slow tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river. Nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, still crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road. Another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway, with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water, where broken dreamers go. Oh Lord, hear me tonight, underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Wind blows softly through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. early on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere